push back on that order. Now, remember, the directive bars only foreign nationals from using Mythos 5 and Fable 5, two of the strongest models from Anthropic. And Anthropic had to pull both of them globally to comply with that directive. Now, the company says the government's evidence so far is verbal only and points to a narrow jailbreak. Then there's Salesforce that's buying the AI customer service agent Fin for $3.6 billion. Fin was formerly known as Intercom, and its agent will feed into Salesforce's Agent Force platform. The deal is set to close in the fiscal 2027 fourth quarter. Then there's Nvidia that has raised about $25 billion in its first bond sale since 2021. The order book peaked near $85 billion, more than 3 times the deal size, and the raise was lifted from an initial target of around $20 billion. Then there's US factory output data that was flat in the month of May, below forecasts of about a 0.2% a rise only. Economists now say that an AI spending boom is cushioning the drag from tariffs and higher oil prices, so AI is the way forward. Then there's the UK that will ban social media for users under 16. Prime Minister Keir Starmer is targeting Snapchat, TikTok, YouTube, Instagram and X. However, WhatsApp and Signal have been excluded from this list, and the ban could take effect by next year. SpaceX IPO. If you thought it can't peak any further, well, it now has. It has grown to $85.7 billion that have been raised after underwriters took the maximum allotment on top of a $75 billion start. Now, the stock debuted on NASDAQ on Friday above $2 trillion, making Elon Musk the world's first trillionaire. And closing in India, Sarvam has become the country's newest AI unicorn with a $234 million round, lifting its valuation to $1.5 billion. HCLTech, which is a rare move for a strategic partner to come and lead this round, led this one with $150 million as India now debates how far we can rely on overseas AI and start investing in our own companies. Back to you.
Thank you so much for that, Rachna. But with that, we're absolutely out of time with this edition of Power Breakfast. Nifty implied open indicating a muted or slight bit of a positive bias start right now for the Indian markets. But up next, your Bazaar Morning Call to take you through all the action.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Tuesday morning. I'm Prashant. With me, my colleagues Nigel and Mangalam. Guys, hi, morning.
Hi, morning, guys.
Morning. Yesterday was the day where we saw the up move that came by. There was some consolidation towards the end of trade, but today is the second day, and today that a follow-on buying will be extremely crucial, and to that extent, perhaps more on the mid-cap end of things than anything else. But we eventually got the FII buy number. 200 crores, but buy it is.
Absolutely. At least they're not selling, which is good news. But now all eyes, I think, on the monsoon. We'll wait by till scorching hot this morning as well. A little bit of a drizzle yesterday didn't result into anything big. And today it's very, very hot.
Santia got some comments coming in from the IMD. They said that it's not coming before the last week of June. And I didn't realize because of the weather, schools have started already. Usually when you come to office and schools have started, it's drizzling.
Yeah.
But typically, I thought maybe summer vacations are still on.
Nothing at all. Nothing at all. And one just hopes that that's not the case because that's not going to be great news. But, more on this in just a bit. Let's just start from the top. Oil's at about 83. So there's not very much incremental change compared to where we were. Yesterday morning, I think we were at about 84, so 83 right now. And this is the lowest we've seen for oil, Brent oil prices since early March. Now, there's a lot of stuff said once again from both sides, Iran, Trump, and we'll wait for the final thing. But Trump said that on Friday, the Strait of Hormuz will be completely open. We'll play out some sound bites from President Trump as well. U.S. equities rallied like we did in Asia here. I mean, remember, Japan was up 5%. And many other markets were up 2.5%. Actually, relatively speaking, if you look at most Asian markets yesterday and look at what the Nifty did, we kind of underperformed even yesterday. So that was something. I'll get to levels, etc. in a bit, but that's US close, about 1%, 1.7, 3%. So across the board, strong rallies. By the way, SpaceX continues to power higher and higher. And I think it's now crossed the 2 trillion mark in terms of market capitalization. So you're looking at some big moves there. Now, both sides, Iran and US, are set to meet in Switzerland on Friday to sign the deal. By the way, there's lots of stuff going on in terms of what is in that memorandum of understanding, which has been signed electronically for now. But I don't think anyone has the final text of what is being signed, right? As some have put it, the risk is it's a memorandum of misunderstanding. One just hopes that is not the case. And, both sides have largely okayed broadly what is the core of the agreement acceptable to both sides. So we'll see. But this thing, of course, is going to get done. For now, the markets are trading, this MOU, this whatever you want to call it, and we'll see on Friday what really comes through. But hopefully the core of it will remain the same. Maybe some hiccups down the road, that's to be expected, but nothing beyond that. Now, eye on the rains here in India, and I think the focus increasingly will be on it. Because it's El Nino, and globally it's been called Super El Nino and all kinds of things. But just take Maharashtra as an example, the state that we are in. Monsoon rains, IMD yesterday saying that only after the 20th of June, 23rd or 24th. Actually, the latest that the monsoon arrived in Maharashtra was in 2023. That was the 23rd of June. So maybe this is going to beat that now as well. We'll get you more details, get you some experts on the subject as well. But this is so important for so many things, right? Let's just get you a couple of other stock-specific thing, which is interesting. So HCLTech, and you'll hear from the management in a bit from now in the next 20-25 minutes, is putting in $150 million into Sarvam AI, which is the sovereign AI, 10.46% stake, about $1.5 billion in terms of valuation. Is that what that translates into? Coforge is holding its investor day today. It's not happening in Bombay, it's happening in Noida. So keep an eye out on that one. We'll see what headlines come, etc. And of course, later this week, many have asked, right? I mean, we've got this nice move higher. What really leads the market ahead? Reliance did well yesterday. Reliance, by the way, is going to have its important annual general meeting on Friday, that is later this week, and is always lots of headlines out of that, and sometimes the stock does perform into it, and perhaps post that we'll see what really comes through. Yesterday, the market, of course, if we can have the Nifty up, the intraday, we had a nice move up, and then, of course, from the highs, the index sold off. And we then, of course, did not. So the point is, we've broken above the falling channel, but at the highs, the rally started to fizzle out a little bit. So that's the key point. So the levels don't change very much. Supports are 23,800, which is the previous swing lows, and then 23,650. Hopefully, we don't see 23,650 on the upside. The swing high resistance is 24,088, which is, by the way, around where the market, I think, went to yesterday. And then we are at the 24,600 kind of levels beyond that. That's a long way off, but 24,088 is the immediate resistance target, whatever you want to call it, as far as the Nifty is concerned. I just want to quickly make a mention of the Nifty Bank as well, if you can have the intraday up. Because here, there has been a pretty consequential change as far as borrowing costs are concerned already. From the time of the Reserve Bank of India meeting, you look at commercial deposit rates, commercial paper rates, 3-month tenor, 3-year tenor, they all come off anything between 40 and 70 basis points. So the cost of deposits for the banking financial services system, both banks and NBFCs, NBFC is much lesser though, but banks largely, I think, has come off, and expectation is that it will come off even more. Remember, before the RBI meeting, expectation, actually end of May or so, expectation was that the RBI in this cycle will hike by about 200 basis points. Right now, that 200 basis point hike expectation has fallen to 100 basis points. And if you want to be optimistic, perhaps they won't even do 100, it'll be lesser, which means that this repricing of deposits lower will keep happening. And that is the reason why perhaps banks, etc., are a segment to watch out for. We spoke to a slew of experts yesterday, and they all kind of alluded to, because of course how underweight foreigners are on the financial services space, private banks, etc. But I think the other reason is the repricing of cost of deposits lower is the other big aspect to look at. GIFT Nifty will give you a quick sense of how we're likely to start, and then of course we will pick it up from there. I think 50-odd points higher. Asia largely flattish sideways after yesterday's big moves. Nigel has walked across with the F&O positioning, the stats. Nigel, take it away.
I think the trend is up, but some kind of consolidation in the near term wouldn't be such bad news. And remember, today you have the Nifty weekly expiry as well. That will play out. Remember, we had 2 out of the 4 factors that are aligned in favor of the bulls. And now we have 3 out of the 4 factors that are in favor of the bulls. Let me explain. Crude oil prices have cooled. That's point number 1. The rupee has stabilized. That's good as well. And point number 3 is the FIs, they turn buyers. Well, measly buyers. But at least the inflows, well, they're accepted coming in from the FIs. For now, we'll have to wait to see whether or not this is a flash in the pan, or is this a change in trend. But good to see that the FIs turning buyers 200 crores, and the DIs, they continue to put in the money. So between them, we are close to 3,400 crores or thereabouts. The fourth and the most crucial factor, though, is going to be the onset of the monsoon. That's the next big trigger for the markets from here on, because otherwise the inflationary concerns come back on the table. So we'll have to keep an eye out on that. And yesterday, when we saw the markets doing well, there were clear signs of some shorts on the market, for the market on the whole, that covered out. Because the Nifty, the open interest was down. The Nifty Bank as well, 5% lower in terms of open interest. And if you look at the FI index futures, well, there were some mild moves out there. There were some mild shorts that got covered out and some mild longs that got added as well. Remember, they continue to remain net short with close to 87% of their positions on index futures, or, on the short side. On stock futures, there were more longs that were added in comparison to shorts. So you like that as well. Net, the positioning from the FIs from being extremely defensive, that's turning a little bit more constructive. So we'll have to see more of the same. That's what could really take these markets up. Well, in terms of the options data, since today is the weekly expiry, these strikes will expire today itself. We had a fair bit of action added on the 24,000 call and the 23,800 put as well. And going by the options data and the recent technical levels that we're looking at, the numbers that I'm plugging in is the resistance mark comes in at around 24,050. That's close to the highs that we saw yesterday, so that's going to be important. And support, going by the the writing that we saw at around the 23,800 put, this 23,700 mark becomes an important reference point on the downside. The Nifty Bank, that's been outperforming the Nifty, and now that has taken off all crucial technical levels. What I mean by that is the 20, the 50, the 100, as well as the 200 DMA, all of them have got taken out. So if you're looking at a reference point, then you have the 200 as well as the 100. So that's close to around, 600 points lower from here. You'll expect the Nifty Bank to continue its fight and continue to lead the way if it can protect those lower levels. And finally, the India VIX, just around 45 days or so ago, it almost went to around 30 and, you're fretting a little bit. Now that number has cooled down to sub 15. And as I mentioned earlier, if the India VIX cools off to sub 15, then you'll expect a fresh leg of this up move. So good to see India VIX now well behaved at around 14.4. Bracing for a day of consolidation or maybe a bit of a positive bias, but it seems, at least in the near term, this trend is pointing to the upside.
Indeed, Nigel. Thanks a lot for that. Consolidation is something that the bulls would like. And once the consolidation happens, the chances are that mid-cap stocks actually outperform because the street believes that maybe at lower levels there would be support for the frontline indices. But let's get you some more updates coming in from the West Asia. US President Donald Trump has said that the memorandum of understanding with Iran has been all signed electronically and the Strait of Hormuz will be completely open by Friday. He also reiterated that Iranians have agreed to never have a nuclear weapon.
I'm very happy to say when it's signed, the deal's all signed, and the strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found, but it's essentially ships are starting to go out now. On Friday, it'll be completely opened. And the main thing is that Iran will not have a nuclear weapon. They fully agreed to that with strong policing powers, and they won't have a nuclear weapon, which is what it was all about, because they probably would have used it if they had it.
All right, good time to then get in Matt Orton, the Chief Market Strategist at Raymond James Investment. Matt, good morning. It's peace so far. Give and take everything, all the little niggle that, the street is still contending itself with. It is by and large peace, so that's what the price is telling you. Does that now mean that, the street starts to focus on opportunities which they missed out on while the war was on? And in that, maybe emerging markets find a space, and India?
Yeah, I certainly hope that's the case. And I think when we look at the developments that have happened over the weekend, the biggest positive development is that regardless of how this next 60-day ceasefire period goes, we continue to remove left-tail risks from the table. And I think that's the most constructive development. I think we still need to be a little bit cautious with respect to getting too optimistic, because we still haven't seen the text with respect to this deal. We know both parties have evidently agreed to it, but we don't know exactly what's contained there. But I think by and large, the initial decreases in oil should likely hold absent some big change. And you're already seeing optimism from investors flow back into some of the markets that have been most adversely affected because of higher oil prices. That includes certain emerging market nations, that includes India. And I think the key follow through is going to be when we get to next month and earnings season starts to pick up, are we going to see follow through with respect to earnings growth? And I think that's going to be critical, not just for India and emerging markets, but everything around the world. It's been a momentum-led rally in many markets, and earnings have to deliver.
Matt, hi. Good morning. I think this SpaceX stock's done well. I think it's doing even better in after-hours trading as we speak. Matt, what's your sense? Is it normal kind of reaction here? I mean, the market value in relation to revenues, of course, sounds absolutely out of whack, but. And how can we use that SpaceX as a sort of indicator for the broader market? What's happening in the US? It's done so well.
It has, and I think it's clear evidence. And, Prashant, I've been optimistic on where the markets are going to go, particularly U.S. and the AI trade, for a very long time. And last time we spoke, I cautioned investors not to worry too much about the market being able to absorb SpaceX. And we saw the IPO go incredibly smoothly last week on Friday and continued gains this week. And so I think what it shows is that the market has appetite to continue to put risk. to work, but the key is it has to be thematic, right? It has to fit into an area where investors believe there's going to be growth going forward. And that's why, regardless of where you're looking for opportunities, anywhere around the world, it has to fit into a broader theme, whether it's macro development, where I think India fits very squarely into strong GDP growth, very good consumer tailwinds, especially if we take some of the worst case inflationary scenarios off the table. In the US, it squarely fits in AI CapEx beneficiaries. And I would continue to lean into a lot of those trades on weakness. So I think it broadly speaks to the fact that risk is on, and investors do want to put money to work in where they believe there are long-term durable gains.
Okay. Hi, Matt. Good to see you again. Matt, India's participating, but is there a good case that India actually starts outperforming post our recent underperformance? Crude oil prices have cooled, and we have FIs that have been very underweight, and hopefully that trickle of inflows that we've seen turns into a larger number. Is there a case India outperforms? And if you could share a couple of stocks that you'll be looking to pile into from our Indian markets.
Yeah, absolutely, Nigel. And I think there is a case to be made for India, and I think it rests on two different pillars. I think number one is really just from a passive structural perspective. As investors start to put more money to work in emerging markets, especially if you see a little bit of weakness in the dollar, that should benefit the EM trade. India will naturally benefit from flows going into emerging markets, broadly speaking. But secondly, India is the value stock of emerging markets, where you still have strong macro trends underlying it, but valuations have compressed significantly. A lot of risk has been taken out of valuations, and I think investors that perhaps want to diversify from some of the winnings they've made in South Korea and Taiwan and the AI trade, you can now look to India and again be more confident that some of those left tail risks are taken off with respect to the ultimate impact of inflation. And you're seeing that through stabilization of the rupee, which has been critical for foreign investors to put more money to work. So when I look at India right now, I would agree with what a lot of analysts are saying, that financials are a key place to look. I'd be looking at banks. ICICI, HDFC, your big heavyweights, will benefit from passive index flows, but they're also just so cheap. And I think commercial loan growth really should start to pick up. Deposit costs aren't going to be as high as expected. There's a good case to see ROE expansion. Other names, I think you look more at a kind of hard asset type plays. Bharti Airtel's really been beaten up pretty hard. And I think there's a case to be made for ARPU to start to accelerate. You're going to start to see, I think, more debt consolidation. And I think the story is generally positive going forward. And of course, on, I'd say, just the infrastructure side, like GMR, airports, that name is doing a great job of really diversifying into real estate in other parts of the airport as opposed to just travel. And so I think there's a lot of really interesting value in the Indian market for those investors who are looking to do the work. And I really continue to like Adani Ports. And M&M to me is also just continues to be a screaming value right now, given how discounted the name has become, understandably given concerns around oil prices.
Absolutely. 20 times earnings on Mahindra & Mahindra. And it's a conglomerate, lots of, drives value from a lot of different businesses. Of course, auto very much the front and center, the core of it. Thanks very much for joining us, and really appreciate your time here on CNBC TV 18, Matt. Well, let me just quickly run you through the interactions lined up on the program today. At 9 o'clock, we'll be joined by Kumar Rakesh of BNP Paribas, and talks to us about HCLTech, Sarvam AI investment, as well as a focus on the auto space. 9:20, Rahul Arora of Ashika Institutional Equities on markets. 9:35, Affle joins us to discuss their recent acquisition tailwinds and opportunities ahead. Following that, the management of Chalet Hotels talks to us at 9:45, F527 Outlook and more. And towards the end of the program, Lata speaks with Suresh Ganapathy of Macquarie on the impact of the gush of FCNR deposits on banks' financials.
Time to slip into a quick break. We've got a lot of stock-specific action track for you. Get it there in just a bit in our special Top 10 segment. But we're looking at HCLTech, Adani Enterprises, GMR Airports, Lloyd Engineering, Z, Northern Arc Capital, Yes Bank, as well as Bandhan Bank. They'll all be reacting to positive news flow. On the flip side, Craftsman Automation as well as GIC will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. 50 points to kickstart things as the GIFT Nifty is indicating right now. That still leaves a room of almost 125 points from yesterday's high for the market to contend with. Currently, the GIFT Nifty is up 45 points at a time when the Nikkei is lower and the Korean markets up by about nearly 2%. But a lot of stocks on our radar, and our research team, as always, is up for all of you. And to tell you what is on their minds, let's go across to Vinny first. Vinny, you're tracking HCLTech.
Hi, absolutely. HCLTech, now they've acquired a 10.46% stake in Sarvam AI. This is for a value of around 1,427 crores. It's an all-cash investment. Timeline for completion is 2 weeks after the signing of the agreement. Now, Sarvam is actually raising $300 million. So the valuation for Sarvam AI now becomes $1.5 billion. This is HCLTech along with other PE VC names like Peak 15 are also in the investment list, but HCLTech leading the names over there. Now, Sarvam AI, obviously, they have a turnover of around 45 crores, and it's a leading AI company. What does it mean for HCLTech? It's a minority stake, so obviously it doesn't impact their financials, but it's a strategic advantage for them in terms for the sovereign AI theme. It works out for them in that play. They are looking to develop the industry as well as client-specific language models. It will help them on that front, on the AI front as well, and it will help them leverage and expand Sarvam's multilingual AI capabilities in India, beyond India as well. So that's a positive sign there, as well as the Anamura also continues to maintain their buy rating and target price of 1,600 rupees per share post this acquisition as well. 10% stake is just what they've purchased as of now. So green is what we could see here.
Thanks a lot for that, Vinny. Well, let's go across to Sudarshan because there's some fundraising that's back, some supply that will be hitting the market as well. Sudarshan, tell us about Craftsman as well as GIC.
Good morning, Nigel. So Craftsman Auto has launched QRP to raise up to rupees 2,000 crore, and as per sources, indicative price at a discount of almost 9% to closing market price, and that range is rupees 8,250 to rupees 8,750 per share. So just because of the higher discount going with red here. Next one is GIC. Government has launched OFS to sell up to 5% stake to raise almost rupees 3,100 crore, and here the base size of the OFS is 1,235 crore, and if government goes ahead and exercises green shoe option, and for that size rupees 1,853 crore. Floor price here also is at a discount of 9% to closing market price. Here the floor price is 352 rupees per share, and for non-retail investor, issue opens today, and for retail investor, issue opens tomorrow. And here also because of the higher discount, I'm going with red.
Okay, going with red there, lots of paper supply. Thanks very much. So for that, well, more stocks with news flow. Ria is here with that list. Ria, morning.
Well, good morning. Let's start off with Adani Enterprises first. The company has entered into a pact with Jabil Incorporated, which is based in the US, in order to build data center infra platforms in India. And as a part of this, they will be deploying a multi-gigawatt of high-intensity AI rack capacity and also advanced infra for global data center build-outs. And together, both of these companies will work to deliver an end-to-end design-to-deployment hardware ecosystem. And as per the company, the global market opportunity for this exceeds nearly $3 trillion over the next 7 years. So this is a big potential opportunity for the company, and the stock expected to open in the green on the back of this partnership. For moving on to GMR Airports, they have come out with their monthly update for the month of May. The total airport passenger traffic has gone up by 6.1% on a year-on-year basis in May, with the domestic traffic going up by nearly 7.9% compared to the previous year. And the domestic traffic is what has driven the growth this time around. The international traffic has been very muted, up just about 0.4% compared to the previous year, and this has been due to the temporary disruptions in flight operations caused by shifting airspace conditions amid the continuing geopolitical tensions. And this is what the company has attributed to the fact that the international traffic has remained muted this time around. On a year-to-date basis, however, for FY27, the company has crossed around the 20 million passenger mark. This is the highest ever total passenger traffic for the company, with the record domestic traffic at just 15.8 million passengers. And the company has said that this has mainly been driven by the domestic traffic growth at the Delhi airport, with the Delhi airport constituting nearly 68% of the total traffic. But overall, positive update for GMR Airports, and the stock expected to react positively to this. Moving on to Lloyd's Engineering, which will be in focus as the board will be holding a board meeting on the 18th of June to consider a preferential issue. So that stock stock will remain in focus. And lastly, Z Entertainment will also remain in focus today. The company has seen a viewership spike with 100 million viewers across its digital, linear as well as its social platforms on the FIFA opening weekend. The digital app Z5 has garnered nearly 6 million viewers for the FIFA World Cup on the opening weekend. And the company has also launched its Unite 8 sports channel right before the World Cup. And for this, the Unite 8 channels have achieved a reach of over 25 million households up until now. The linear weekly market share for Z Entertainment has also gone up by 120 basis points to 18.6%, which is a 48-week high for the company. However, the company has also said that they are in steady dialogue with viewers to gather feedback on the glitches that were faced during the opening weekend of FIFA.
Got it. Okay, all right, Ria. And in terms of that, Iran has just equalized against New Zealand, so it's 2-2 apiece. There's a live football match going on, FIFA World Cup. Thanks for joining in. But let's focus on some other stocks in news. Ananya joins us to help us out with that list. Morning, Ananya.
Good morning. So let me first start with Northern Arc Capital and Yes Bank. So they are likely to remain in focus in today's trade after strategic partnership. So let me walk you through the agreement. So under the agreement, Northern Arc will leverage its network of 368 originator partners to help Yes Bank source MSME, rural and priority sector lending. Now, while its platform, NPOS, Nimbus and NewScore will be integrated with Yes Bank's lending architecture for faster loan onboarding and credit delivery. Now, on the wealth side, Northern Arc Investment Managers or NIM, the asset management arm and wholly owned subsidiary of Northern Arc Capital, will offer AIF and PMS products, while Yes Bank will distribute Northern Arc's investment and bond offerings. Now, the opportunity is significant, with Northern Arc having facilitated nearly 2.5 lakh crore of financing till date, managing assets worth 19,686 crore and enabling 1.3 lakh crore of credit placement. The partnership is positive for both companies as it can support the faster loan growth for Yes Bank and higher credit deployment and fee income for Northern Arc Capital. Now, moving to Bandhan Bank, they have approved the sale of 304 crore housing finance NPA portfolio comprising accounts overdue by more than 180 days to asset reconstruction companies through the Swiss challenge route. Now, the move is positive as it will help the bank to offload the stressed loans, clean up the balance sheet and improve the asset quality going forward.
All right, Ananya, thanks a lot for that. So those are a bunch of financials that we will keep on our radar as well. So in case you missed all the stocks that we're tracking this morning, let's do a quick recap. Stocks with positive news flow. We have HCLTech, Adani Ent, GMR Airports, Lloyds Engineering, Z Entertainment, Northern Arc Capital, Yes Bank and Bandhan Bank. Stocks with negative news flow, Craftsman Automation and GIC. With that, let's go across to Manisha Gupta for a quick roundup of all the action from the commodities market overnight. Manisha, more of the same. Consolidation continues after a drop.
Oh, well, absolutely. We saw 6% of a decline in the crude oil prices in previous week, 5% of a decline yesterday. So that is about 11% down in 6 trading sessions. We still are trading below $83 a barrel. This is as markets await further details of the U.S.-Iran peace agreement. The interim accord to be signed in Switzerland on 19th of June. The street is waiting text of that and more statements clearly from both these countries, including Israel as well. We have seen gains continuing in case of gold prices. 2% of an overnight gain is keeping the prices above $4,300 an ounce. But everything in metal seems to be now sliding down. The Chinese housing data has come in on the weaker side. If the Strait of Hormuz opens, then that means that all the aluminum that is behind the blockade will also start coming into the market, including sulfuric acid as well. So that is what is weighing on to the metal prices right now. So silver has come off the kind of gains that we saw yesterday. Aluminum is trading at a 2-month lows. Copper prices trading nearly a percentage point on the lower side. Same is the case with steel, iron ore, zinc, all of that really in the negative in Asia right now.
All right, Manisha, thanks a lot for that. So those are a bunch of cues coming in from the commodities arena. Take a short break. On the other side, an exclusive interview with the top leadership at HCLTech and Sarvam AI, as Sarvam AI has secured nearly $234 million in funding led by HCLTech, which will invest for about 10.5% stake in the company. Stay tuned for that.
Welcome back. Well, let's welcome Mayuresh Joshi, Director Research, Mark Smith India, who joins us on the show. Hi, Mayuresh. Good morning. HCLTech going ahead and buying 10% in an AI-related company, Sarvam. What do you make of this, and how would you view this news flow for the stock? It appears more strategic in nature.
Morning, Nigel. No, I think if you probably look at Sarvam model and all the news articles that are probably circulating around that, they've got applications across the enterprise stack, as well as deployment of agentic AI agents in terms of simplifying workflow requirements as well. So I think what stuff Sarvam is probably doing is probably something which is called as the start of the AI moment in India. And therefore, I think HCLTech's acquisition of Sarvam, being a lead investor in them, I think that's a good move that HCLTech has probably done. And I'm pretty sure, Nigel, that I think a lot of IT companies will follow suit in terms of probably looking at acquisitions within this space itself, which is going to be probably value accretive as we go down the line.
Right. So that's about HCLTech. But meanwhile, a lot of the paper supply has begun as well. There's Craftsman Auto, there's GIC. What do you make of this trend now? Do you think that indicates the appetite for better demand in the market right now, given the sort of situation that we're in geopolitically? And does that mean good news for us?
Good morning, Mangalam. I think you probably need to take it with both sides of the coin. And therefore, I think companies which are probably issuing paper, I think you probably need to analyze them on a company-specific basis. What are they expected to do? Is there enough appetite for the industry or the sector as a whole? Secondly, I think for the company itself, with the raise that is expected to probably happen, what kind of value add is probably expected to take place? And ultimately, I think if there is some element of raise, how is that utilization probably going to play out over the next few quarters in terms of effective numbers that you probably rolled out? So I think there are a lot of ifs and buts for all these paper issuances as we speak. But in our own sense, I think there are plenty of opportunities outside these fundraisers that the secondary market probably is offering at this stage.
Where would those opportunities be, according to you? If you could give us some names this morning.
So again, I think two spaces that we are clearly liking at this juncture. And again, this is in view of how Q1 numbers will also play out. Supply chains are still going to take time. And therefore, a relative performance in terms of how Q4 has fared, in terms of ensuring better supply chains and assuming that demand probably remains constant, at least in the first half. I think that is going to be critical as far as India is concerned. And therefore, I think domestic engineering manufacturing companies and specialty chemicals are two spaces that we like. A couple of names within those spaces, I think Grindwell Norton within the domestic manufacturing space is something that we clearly believe where numbers in Q4 played out wonderfully well for them, specifically on their ceramic and the refractory performance business, which performed exceedingly well, specifically on the EBIT front. As well as the abrasives business. I think a large part of the market, 1/3 of the market, Mangalam, out of the $500 million market, is still largely unorganized. And therefore, I think players like Grindwell, with new products being introduced at this juncture, seem to be better placed, both in terms of the abrasives, the performance material segment, and the
Right, Mayuresh. Thanks a lot for that. Grindwell Norton is the stock that you've spoken about. We'll come back to you during the course of the show to discuss more ideas with you. But the big story of the morning, as HCLTech has bought about 10.5% stake in Sarvam AI, let's get you a big CNBC TV 18 exclusive. Shireen Bhan is in conversation with C. Vijay Kumar, CEO and MD, HCL Technologies. And along with him is Pratyush Kumar, who's the co-founder of Sarvam AI. Shireen.
Thanks very much, guys. Yes, it is the big story. And if you take a look at my Twitter handle, the tweet that I had posted after the release had come in has gone viral, quite literally. And the reactions tell you that, there is clear excitement about this deal, about the fact that there is an Indian IT services company that is betting on an Indian frontier model company like Sarvam. Joining us now, the two men in the middle of the action, CVK and Pratyush, congratulations. Many thanks for joining us here on CNBC TV 18. Appreciate your time. CVK, let me come to you first. It was 2 years ago at the NASSCOM Leadership Forum where you and I spoke, and you had very categorically stated that India needs its own foundational models. India needs its own LLMs because that will be imperative from a national priority point of view. it's taken a while for you to make this bet, and that's the feedback coming in, CVK, as well, that why have you waited as long as you have, and what finally tipped things in favor of Sarvam?
Yeah, thank you, Shireen. I'm glad you recalled that old conversation, which was January 2025. At that time, I had not known about Sarvam, and probably Sarvam was also early days. And I think we met during the India AA Summit in February. Around the same time, we were talking to you as well. Of course, we found Pratyush, Vivek, and team an incredibly exciting platform that they've built, and the adoption and the quality, all of that was just very exciting. And then we started the conversation, and we've got this done very quickly, and we are absolutely thrilled that it'll open up a completely new chapter of opportunities for us as a company, and we will definitely help Sarvam to scale up as well.
I want to understand from you the opportunities that this opens up, as you pointed out, the new chapter that you speak of, CVK, in just a second. But let me get Pratyush into the conversation as well. Pratyush, congratulations. $300 million fundraise, $150 million coming in from HCLTech. What are you going to be deploying all of this capital for? Take me through what the runway now looks like.
Hi, Shireen. No, thanks for having us this morning in India. I know you and I have been chatting about this for a few times now. The thesis of sovereign AI, which is what we've started with, is becoming increasingly real, right? The atmosphere is clear that you can't, the most important component of technology you can't rent. You have to have control over, and that's what the company was founded on. To your point about what we're going to do with all this money, as you know, AI is something that takes capital to build and scale. And both in terms of training the next class of models, in some sense, this is for us day zero of being globally competitive with CVK coming in, with other investors coming in. This is really the time when we start playing internationally. And for us, therefore, the capital being deployed to build the next generation of models and also scaling up our compute footprint in India to serve enterprises, serve startups, serve the government. These are the two broad things that we'll be investing in. Really excited that we are onto this next orbit, so to speak, of Sarvam.
I'll come to the next orbit and what you intend to do as far as compute and the next generation of models is concerned in a second. But let me get CVK back into the conversation. CVK, let's now talk about the next chapter, in your words, the opportunities that this deal, picking up 10.5% stake in Sarvam, opens up for a company like HCLTech.
Yeah. So, Shireen, we've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, Physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. Right, sovereign AI has, in my view, there are 4 different opportunities in sovereign AI. First is, of course, foremost is India sovereign AI opportunity, which is, first of all, Indian enterprises in banking, insurance, government, tech, and even other commercial enterprises. All of them are looking for adopting AI in a significant way, and everybody wants to have a control on how they're deploying the technology, because these are all very large, strategically important institutions. So the enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush, and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large. The way the enterprise AI architecture is evolving, of course, it is evolving very fast, but the most optimal solution would be some kind of a hybrid model. You don't need the frontier model capabilities for doing a lot of basic tasks, which are high intensity, high volume tasks within enterprises. So it will be a private SLM, which is client specific or industry specific, that the clients would deploy. which will build agentic and all other capabilities to run a lot of their day-to-day operating model and leverage the frontier models for things which they are really highly suited for. So I think that hybrid model gives you data security, it gives you very good price performance, and in many countries it also gives multilingual capabilities. So I think all these three makes it a powerful solution that we can take to global enterprises. And the fourth opportunity is the same sovereign AI can be taken to many other countries, which Sarvam team, Pratyush and team are already working on. And that is an area where we have a lot of presence across the globe, and we would be able to take this to those countries as well.
Right. CVK, if you can just quantify the addressable market that you speak of, both the enterprise market in India that you intend to target, as well as the international markets that you intend to go after. And, you're absolutely right. We are now in this phase where token maxing is no longer the trend. In fact, efficiency and optimization is what everybody is looking at. But there are other players who are already doing small language models. SLMs are not new to the market. So what will be the differentiator for Sarvam and HCLTech as you try and address this market? And if you can quantify for me the total TAM, India enterprise plus global, that you're looking at.
I think India enterprise AI market is at least $20 billion in size, but the global market will be at least like 100x that. That's what I would say. It's really big because every enterprise is spending on AI. Now they need a solution which is very optimal from a price performance perspective. People are struggling with, as you said, token maxing and many other challenges. So the global market opens up, a very, very large TAM. I don't want to just quantify it, but it's very significant. And maybe Pratyush can add a lot more on
Pratyush,
and also his perspective in the global market.
Do add to that, Pratyush, and also explain to us how ready you are with being able to address this enterprise market. I mean, you've already got the large incumbents in there. You've of course got the Anthropics and the OpenAIs also addressing the Indian enterprise market and of course the global enterprise market. But what will be the key differentiator as far as you are concerned, and how ready are you to address this?
That's a very good question. It's good to give your viewers some clarity on that. See, what we have achieved at Sarvam is to be able to train from scratch a large language model with 100 billion plus parameters, right? So we had no dependency on data, on engineering, on R&D, or infrastructure, and we're able to do that end to end. Now, the reason to put ourselves in the constraint to do that end to end is exactly for this moment now, which is we can tell enterprises through the deep partnerships that HCLTech has that we can take your context. Your context is data. Your context is your tools and enterprise machinery that you have created, and then fine-tune models to do very well on the workflows and tasks you are interested in. In fact, Satya Nadella wrote an interesting article about the frontier ecosystem is required for equilibrium. This is exactly the same story. You can't have 2-3 companies in the world sort of providing the most important component in a post-AI world. Every company will have to say, here is my data, here are my workflows, here are the things I really want to care about. How do I go build a custom model for this? And this requires R&D. So just like India succeeded in IT services, the opportunity starting today is how do we win in AI services, which will be R&D led, which will have a product surface of a very different kind, but will also need the deep consultative and trust-based relationship that is required to win in these places, right? And I think that's a massive opportunity. I think CVK mentioned the numbers, but I would say it's multiple trillions of dollars. And it's an entirely new platform and paradigm with which we need to work with. And the advantage of getting in early and compounding is very, very high, right? Because once you are doing this for a few of these enterprises, one can take and spin that wheel much, much faster. So what you saw happen at the frontier, which was aggregating the world's intelligence in one place, is now going to get replicated across organizations with their custom trusted setup. And that is what we are working towards.
Pratyush, let's talk a little bit about the timing as well. And I know you have nothing to do with it, but the fact of the matter is that we are on the cusp of a very significant development where, as you pointed out, renting intelligence now has a question mark on it because of the developments that have taken place in the US with the Trump administration. How much of that is likely to provide the tailwind, so to speak, for companies like yours?
Look, these are structural things, right? I mean, of course, the events are interesting, and in this particular one, it has many different implications. I wrote about it on Twitter, but I think these are structural aspects, right? If you go back to, let's say, a couple of decades back, people started using databases, and the first databases were esoteric. They were hard for people to sort of like figure out, but over time, things got democratized. But then things also got specialized, again, democratized, and so on. And AI, though it looked like it's something that it's a winner-take-all market, I don't really think it is so. And we've always believed that, right? And the tools for building AI, consuming AI, adapting AI will get democratized, but with a product surface that is very research-led. And that is what I think the opportunity is, right? And I think it's a dual opportunity. One is there has to be passion within the country to do it. Like in a country like India, it's going to be a big market. The per capita consumption of AI is still very, very low. We'll expand that, but also take it to every company globally on doing the same thing.
All right, CVK, I want to understand from you because you've heard this question being asked several times in the past as well. Indian IT has been slow to the AI party. You haven't done the R&D spends that were needed. Indian IT companies have focused much more on buybacks and dividends. Is this an existential moment? And your response to that existential moment is this bet on Sarvam?
No, I think I've also answered it many times. I mean, the existential threat of Indian IT has been written many times. We've collectively reinvented, and we only continue to be a major force to reckon with for global enterprises. Of course, we could have invested more in R&D. We could have built models like this had we put enough energy and intensity into it. But it's never late. And I think this is a great way to partner. And it's also not that easy to innovate at this scale in a large company. So you can amplify what you can do with partnerships like Sarvam and other startups. So I think we are finding the right way to continue to remain very relevant. And we are super confident on our AI-led new services. Like AI Factory, Physical AI, and many other dimensions that we are working on. And this really adds a very powerful dimension to what we intend to do.
Does it change the trajectory as far as your AI revenues are concerned? You've been amongst the first in the industry to call out standalone AI revenue. Does this change the trajectory on that front?
Yes, this adds one more growth lever into that. It's not just AI revenue. We call it as advanced AI revenue because everybody is classifying AI being used for delivering services as AI, but that's really par for the course. We are calling out advanced AI for some specific offerings. And this offers a very strong one more growth vector to the overall strategy that we have.
All right, interesting chat out there. Big takeaway coming from HCLTech that the India AI enterprise market could be approximately $20 billion, and the global market could be also 100 times that, which tells you the kind of scope out there. Interesting chat. We'll get you the takeaways all through today's trading session. For the time being, we slip into a short break. You come back, we go full tilt on the markets. Mitesh as well as Sudarshan will be joining in for some technical trades.
Welcome back. You're watching us here on Bazaar Morning Call. There are mixed moves coming in the Asian markets, and this after a big surge that we saw on Wall Street overnight. Remember, the Nasdaq was up 3%. SpaceX, in its first full trading session after listing on Friday, ended about 20% higher with 3.5% more on its after-hours move as well. The Taiwanese index, that's the one that we're focusing on right now. That's the one which is marginally in the green as against the others. You have Hang Seng, which is down by about 1.5%. The Korean market is the one which outperformed in yesterday's trading session, continues to do so today as well. So that's the one which is up nearly 2% after a near 5% move that we saw yesterday. The Nikkei down by about 0.1% after a 5% move that we saw yesterday. So a wee bit of profit taking is what we're seeing out there as well. What does all of this mean for the Indian market? The GIFT Nifty is indicating a 40-point start, and the BOJ has raised its overnight call rate to about 1%. It was pretty much on expected lines because they've raised their overnight call rate to the highest level since 1995. That explains why the Nikkei is underperforming after a big outperformance in yesterday's trading session. Take a short break, come back. We come back with our own markets, what the trends are likely to suggest. As always, Mitesh Thakkar and Sudarshan Sukhani join in.
Welcome back. There's what I think the pre-open is already with us. The rupees also started 94.61, 10 paisa more against the against yesterday's close of 94.71. That's a dollar rupee, and I think the first rates on the Nifty and the other indices will also be coming up. Mitesh Thakkar is with us, and so is Sudarshan Sukhani. What both would want you to do, gentlemen. Good morning, Sudarshan. You know, you advised going long early, and I think yesterday morning you were saying after the gap up, book profits, and I think from the highs yesterday the market did fizzle out a little bit. How are you looking at things as we start a fresh day?
Yeah, good morning. See, what really happens is that once the Nifty makes a big move, and we have to count it from last Monday, 23,100 to 24,000. So once this big move comes in, then the markets, or rather the Nifty becomes choppy and a little bit untradeable. So we are coming into that position now. But because there is a sense that the market trend has changed, support was found, the markets have gone up, the trade is that be patient, look for a 100 to 150 point dip in the Nifty. The dip is defined as a 100-point decline from the opening prices. If you get that kind of a dip, then go long and also take quick profits. Don't expect another 500-point move now, but it's tradable. So buy significant dips from the open, and if you buy them and if you get money, also exit.
All right, same advice there. If the market's going to be choppy, you buy about 100 points lower from the open and make small profits. Take singles when you can't hit sixes. What about you, Mitesh? You had suggested lightening some 30-40% of your positions in yesterday's trading session. Is there time to reinitiate them or maybe stay out?
Good morning. I think around 24,000, 24,100 was my area where I suspected some profit booking will come in, and it did happen yesterday. We kind of closed about 150 points lower than the intraday high. The overall setup is not negative, so therefore I think now buying on declines may not be a bad idea. But I would also agree with Sudarshan that buy it slightly at lower levels. Maybe this is a pullback going on. My preferred zone of buying would be around 23,750. And keep a stop below 23,600. I think in the next few days, there is a good chance that we might retest 24,000, 24,100 and eventually clear it and head towards 24,300. So the bias is positive, but tactically buying if you get a 100-point kind of a decline from current levels.
All right. What stocks would you back today then?
So I have, in fact, a mix of buys and sells today. On the buying side is Bharat Forge made a fresh high after consolidation. This is a buy with a stop at 1994 for targets of 2075. Then a buy on Gas Authority, GAIL, which was a buy yesterday as well. Today is a fresh call with a revised stop at 171.2. Look for targets of 184. Couple of sell calls. Aurobindo Pharma gave a breakdown below its averages, so could see some more selling pressure. That's a sell with a stop at 1430 for targets of 1360, and Nestle is a sell with a stop at 1398 for targets of 1320.
Sudarshan, your call?
Well, Angel One is a buy with a stop under 345. TI India is a buying opportunity, stop under 3175. GAIL is a buy with a stop under 170. So I have three buys, and my only short is Zydus Life, where you can sell with a stop above 1105.
Right, gentlemen, thanks a lot for that. We'll come to you just before open and thereafter later then on the show as well. Let's now welcome Kumar Rakesh, who's the analyst IT and Auto at BNP Paribas, who now joins in to focus on a couple of things. One, we focus on obviously the global auto sector trends and more importantly, the recent big deal that was announced, HCLTech buying about 10.5% in Sarvam AI. Kumar, does that change your view towards the Indian IT services stocks now that a deal like this has happened? And maybe this is first of many from all the other players. Would you, use this as a moment to be constructive on the IT services space? If you could give us a call on this, and obviously we'll discuss autos thereafter.
Hi, good morning, Mangalam, and thank you for having me on the show. So we have been classifying the risk to the IT sector broadly in two categories. One, risk to the business model, whether they would be relevant once AI starts gaining traction. And the second, the risk on the revenue model. We never had doubt that the business model is at risk. These IT services companies would still be relevant, whether the application which is being implemented, it's coming from software companies, or if the plugins are coming from the frontier AI model companies. The need for IT services companies would still be needed, and there are enough of evidence and reasons to back that argument. The risk, what investors are grappling with and what we are seeing today in the numbers is more on the revenue model. And that is something which will gradually take more time. And we think there would be some companies who are going to benefit from the transition to AI as they build more capabilities on the AI side. This deal announcement is one of those indications. And there's some companies who potentially can be laggard in this transition. And hence, we are preferring to be selective in terms of picking our top picks within the IT services space. This deal definitely helps us build more confidence in terms of some of the companies becoming more aggressive in building their capability on the AI front.
All right. What do you make of this deal in particular and HCLTech? Do you have a call?
So in this particular case, as I think in the session Shireen also was talking about, globally we have seen that there is a risk to access to these AI models. from one executive order itself. And hence, having multiple AI models access for enterprises would be critical. We have seen that consumers may be okay in terms of concentrating their use cases to one or two companies. Enterprises historically have not been. The last 30, 40 years, enterprises have spent in terms of diversifying their entire tech stack across multiple companies. And hence, we don't think that they would be comfortable just one or two companies dominating the entire AI value stack. They would want to have different use cases being used through different models. And this particular deal definitely helps in terms of bringing Indian companies to global scale and making the enterprise use cases as well.
By the way, just to move on to another name, Coforge is having their investor analyst day today. Any thoughts on this one? And what would you expect? Anything you're hoping to hear? Did they put out something like a guidance, which is like a new guidance or a number which market will be fixated on?
Good morning, Prashant. So unfortunately, I'll not be able to speak on specific names in IT, but what we are generally seeing, we have seen multiple investor days happen by Indian IT services companies, global IT services companies as well. The common theme which is coming out is that these companies are pivoting their pricing model, revenue model more towards outcome-based. Either that is through building their own platform, building their own IPs. And we would expect similar themes to keep coming out from the upcoming analyst days as well, where these companies potentially will showcase more of the platform and in-house capability that they have built, which can help them pivot their revenue model away from headcount growth to more acceleration of revenue per headcount, platform-driven, outcome-based revenue model. And that is something which we would expect coming out from the upcoming analyst days.
All right, let's drive to Motown then. Let's talk about the auto space. Now that the peace deal, the idea of it is upfront and in the price right now for a lot of the indices across the world and oil prices which are lower as well. How does that change your views on some of these auto component makers, some of the auto stocks? And also, we have seen an EV rally, EV stocks, two-wheelers rally, while petrol prices were higher, oil prices were higher. With that coming off, do you see that rally come undone?
So first, from the macro data, which is fuel prices, inflation, and the rest of the macro data, if you look at the long-term trend, there is no direct strong correlation of auto sales with them. Of course, they do impact in some ways, but given that the penetration in India of automobile is much lower, there are structural drivers as well. So hence, we don't necessarily see one-to-one impact. If the fuel prices starts going up, it will necessarily mean that the demand starts slowing down. However, there is a very strong correlation of how the consumer sentiment is. If the consumers start feeling that this is a prolonged issue and the inflation is going to go up in the next few months and they should start cutting down their discretionary spending, that is a far higher determinant for how the auto sales pans out. At least in the last 2-3 months, we hadn't seen consumer sentiment starting to see a material impact, partly because they were partly immune to the kind of inflation globally we had seen. And now, thankfully, this deal starts coming through. In that scenario, the sentiment hopefully wouldn't see an impact. Then the strength of demand that we have seen continue even post the geopolitical issues ramping up could potentially continue to play out in the coming months as well. And hence, from the demand perspective, we were not specifically concerned. We were getting concerned more on the commercial vehicle demand because there is a direct implication. If the industry starts struggling in terms of access to some of the gas or diesel, we can potentially see an impact on the usage of trucks as well. We'll have to see that if there is any secondary impact of that still to play out or not. But that's the only area where we were concerned in terms of demand, and we'll watch out if there is any implication still of that or not.
Got it. Just one thing. There is the other thing, right? Credit growth is starting to pick up very strongly once again. Deposit rates are starting to come off, so eventually, I don't know, that'll translate into lending rates coming off, although we're looking at some rate hikes perhaps later this year by the RBI. That is one. So credit growth, I'm assuming, is easy. Liquidity is a big one. Second is the monsoon rains, especially. Is that which, how would you assess? You think, if there's a bit of a cloud around the range situation that puts a doubt? I mean, punches any rally, autos sees. What's your sense, Kumar? How would you read it?
So let's split that into two parts. One, the consumer demand, and the second, industrial demand, which is trucks and all. On the consumer side, given that the prices have come down meaningfully post the GST rate cut, and despite the recent few price increases that we have seen, there is still sizable reduction in price, which is still in play in the market. And there is a significant price elasticity to those price reductions. We calculate the price elasticity would be 1.6 to 2 times different segments of the consumer segment. So there is a significant pull in terms of demand because of the price reduction, which will still in play, while there are some of the macroeconomic challenges and tailwinds which we are talking about. But the price reduction is the significant tailwind which is still in play and likely to continue to be in play. And hence, we are not super concerned on the consumer side of the demand. Of course, the growth which we currently are seeing will likely taper down in the second half, would be lower in the next financial year. Those arguments are definitely there, but we are not super concerned on the demand.
Kumar, I'm sorry, we're just hitting market open, so we will leave it there for now. Thank you very much for joining us. It's a pleasure having you here on CNBC TV 18. I just want to highlight some brokerage notes which are standout. Nimish has got that. Nimish, over to you.
Hi, Prashant, sir. Today's standout is on Dixon Technologies. A kind of an anti-consensus a downgrade on Dixon from CLSA today. They've downgraded the stock to an underperform rating from hold, and they have a target price of 10,400. They believe that the recent rally on expected approvals is overdone. The elevated memory prices is going to have an impact on the organic volumes of Dixon in FY27. In fact, the delay in the backward integration could further impact the earnings and pose a downside risk to the estimates on the street. In fact, on valuation front, at 48 times on FY27 or FY28 PE, the risk reward looks unfavorable to CLSA. So a downgrade to an underperformed by CLSA on Dixon Technologies, and they have a target price of 10,400, nearly 12 to 13% downside from current levels.
Okay, so keep an eye out on this one as we open, and open we have. So 23,900 on the Nifty, it's about 0.25% higher. Nifty Bank is up 0.25%. The Sensex is up 1/3. The small cap index is, we'll just come up with the first rates as we go along. About 1/4 on the mid cap index, and the small cap is up 0.4%. So, I mean, out of the four, the small caps are once again doing the best. The Nifty heat map gives you a quick sense of how we're likely to start. The 50 stocks will come up, and what do we have? HCLTech on one end, it's doing well. Bajaj Finance, SBI Life, Tata Consumer, etc. And you got about 10 names which are lower. So Hindalco, Tata Steel are some of the stocks. Shriram Finance, of course, was the top mover on the Nifty, so that's seeing some profit booking. But 50 on the Nifty as we begin this session.
Well, the broader markets as well, we have more number of stocks, way more number of stocks advancing than the number of stocks which are declining. But on the gaining side, we do have a couple of these tech names. So Keynes Tech for one. I mean, it's more of an EMS play out here. IFL Finance, gold financiers have been doing well since yesterday. So IFL Finance has done fairly well. Managar Gas is slightly higher. We have GMR Airports. Ria did tell us about the passenger growth for the last month. On the losing side, we have a couple of these commodity plays. So Nalco is down about 4%. We have Vedanta, which is down by about 1.5%. Hindustan Copper down by about 1% as well. Manisha did say that there was some moderation in commodity prices overnight. If you look at the other group of stocks which are not doing too well, Aarti Industries, after a big surge yesterday, so is seeing starting a little lower. Arvind Smart Spaces actually stands out. The real estate pack did extremely well in yesterday's trading session. Arvind Smart Spaces did not participate in that. And now today, this morning itself, the stock is opened with a gain of almost 6.5% with a fair amount of volumes backing it. We're seeing some traction in a couple of these travel names that continue from yesterday. So Travelnews Tech is up around 2.5%. QSR plays Devyani International is up around 5.5% as well. In terms of paper supply coming in, GIC has opened about 4.5% lower. So by and large, it's stock-specific, news-specific sort of moves that we're seeing, with the overarching theme of the mid-caps actually outperforming, gainers far outnumbering the losers.
Well, that's right, Mangalam. Just take a look at some of these stocks that are flying away. Devyani International, that stock is up close to 7%, so big move out there. Vedanta stocks, well, the ones that are listed, there's a split verdict out there. Now the street is choosing what they want and what they don't want. So Vedanta Limited was as is listed, but Vedanta Iron and Steel, that's up close to 5%. On the flip side, you have Vedanta Aluminium, that's now down close to around 5%. Remember, there is some kind of nervousness because aluminium prices have corrected. Just around 10 days ago, it was around $3,650 a ton. That's come down, to around $3,380 per ton. So because the war premium is going out of the way, that's why, in fact, the street is a little bit nervous. Well, I'll tell you what, most of the street are still factoring in $3,000 to $3,200 per ton. So maybe in that context, the initial estimates should not change at all because it's still trading about those levels. We'll see how that goes. For the time being, a bit of a downtick is what you're seeing on Nalco, Hindalco, as well as on Vedanta. Grow, there's a massive large trade that's taken place out there. Close to around a crore shares changing hands out there. We'll wait by to hear who exactly was part of that particular trade. But that's clearly the big mover today as well because of the high volumes. HFCL has now started moving from circuit to circuit. So good move is what we're seeing on that particular name as well. And as Mangalam pointed out, Arvind Smart Spaces, the stock had seen a big correction. That's popped up in today's trading session. So good move out there. And I think that should be the list. Sapphire, that as well is up close to around 4.5%. Both Devyani as well as Sapphire, both of them up 4 to around 7% in trade.
Okay, well, that is the opening as far as this Tuesday morning goes. And let's just put up HCLTech if we can for a quick bit before we go any further. I think the stock is about 2.5%. And it's interesting, right? I mean, typically, there's people have wondered over the years whether large investments like this how will the market react? But I think there's been such almost an uproar as far as Indian IT. This debate actually is perhaps the right way to look at it. What should Indian IT companies do? Should they continue with all these buybacks? Should they sort of pivot to making these kind of investments if they come up, et cetera, et cetera. So I think HCLTech, the first of the lot. In a pure play foundational model companies, which is Sarvam, making an investment and a large investment, meaningful investment at that. So markets, of course, not rewarding it, but it's up 2.5% as we speak. So that's something. 80 odd points lower is where we are at right now. Rahul Arora is CEO, Ashika Institutional Equities. Rahul, good to have you with us here back on the program. Thanks for joining us. So, it's looking much better, of course. So let's just hope that the deal between US and Iran is the final real deal. And Friday, of course, is signing. But markets, of course, started reacting sometime before that. I mean, I think from the end of last month, slowly but steadily, lots of parts of the market started to price some of this in. What's the view, Rahul, now from here on?
Morning, Prashant. Thanks for having me on the show. So I think 2 or 3 things here, Prashant. One is, of course, as you rightly mentioned, the US-Iran deal. But interestingly, it's coming at the back. It's coincided with the FIFA World Cup starting, and you do have the Iranian football team on US soil, which is an interesting paradox of sorts. But let's see how that pans out. But I think, Prashant, would I hasten to call this the beginning of a mini bull run sort of a situation? I'm not entirely sure. Because as we discussed, when I was last on your show, I think for a lot of corporate India, both IT services related and manufacturing related, I think some clarity may emerge when Q1 results come out in terms of, how the overall demand environment in the US is shaping up with respect to IT companies. And with respect to local companies, how they have absorbed this oil shock that they saw when crude went north of 100, substantially down the pit, rather, and the impact of freight, logistics, and so on and so forth. Of course, it hasn't shown up in the CPI or WPI print just yet because that will happen with the lag. But we're also sitting at the cusp of what's looking like a fairly dry start to the monsoon season. Even the Kharif and Rabi acreage is a bit circumspect at this point. So all things considered, I think this has been a good bounce. I think even if you look at the NASDAQ, of course, the world is talking about the AI play. The NASDAQ is up about 1,200 points from the lows it made on the 9th of June. So that's been a huge reversal there. But I would say this is not, in a sense, I would say that I don't necessarily want to say sell on rise, but I don't want to get too euphoric at this point. I think if you get, a Nifty at 25,000 or thereabouts in this run, I think it may not be a bad place to take some money off. You don't know how things are going to be 30, 45 days from now. But one thing that is a big uncertain, Prashant, at this point is how interest rates in India will move. the camp is divided whether the RBI just lets it roll till October and sees the supply side absorbed, or whether they actually come in and hike in August. So there are some unknown variables, which is why I said I think if you get in this move, if you get a Nifty close to about 25,000, I may view it as a place to probably exit some positions.
All right, exit positions if the Nifty moves towards that 25,000 mark. Uncertainty continues. Still a divided house on where the interest rates would be, Rahul. But we can't, not discuss the consumption space when you're with us. Right now, the staples are doing a lot better. And the belief is that the next leg of rally for consumer stocks would come in staples as against discretionary because of the pricing, power that staples have gotten once again, all thanks to the inflation. And also because maybe the discretionary space is now saturated when it comes to demand and valuation. So staples, after underperforming, the street believes that maybe the next leg comes in for there. Are you in that camp?
Morning, Mangalam. So I think if you look at volume growth, Mangalam, for, say most of the headline consumer staple companies, whether it's a Lever, Marico, Dabur, Imami, I don't think we're in that situation where we're talking about double-digit volume growth even in the next 1 year. And to the point I was just making to Prashant a few minutes back, after a long time, you've seen, the last 4 or 5 months, a talk of revival in the rural economy. But if you don't have monsoons that pan out as we would expect, that would likely put some pressure. I was talking to one of the retail companies that has a very large presence in UP, Bihar, and they were a bit circumspect on the way monsoons had started. So I'm not sure in terms of how rural incomes will play out. Obviously, there have been a slew of state elections, and there have been some handouts and farm loan waivers that have been announced that will probably land up going into the hands of rural consumption. But Mangalam, I think even if you see today, right, most consumer staple companies, the larger ones, are trading between 45 to 50 times. For a situation where you're talking about volume growth across the board, right from Colgate to say Hindustan Unilever, we are talking about broadly between 3 to 6% kind of volume growth, maybe about, say, a couple of percentage points on pricing and a couple of percentage points on premiumization. So the point being, I'm still not getting a number north of 10%. So for that to be paying 45 times, I'm not so sure. Your point on consumer discretionary is a very valid one. I think valuations are very, very excessive. You're seeing that in hotel companies, case in point being Indian hotels, it's finding it a little, tough to re-rate from here because I think ARRs are going to be a little tough to bounce off from here. But I think some parts like aviation, Alcobev, UNSP, UB, they may still continue to do well in the short term. Specifically on staples, if I have to allocate to the portfolio, Mangalam, I would allocate to food companies, Nestle, Tata Consumer, and Britannia. I think that's where we have a little more conviction, both in terms of volume growth as well as in terms of margin expansion. So my head of research, Krishnan, who looks at the consumer space very, very closely, is expecting that these companies may deliver anywhere between 13 to 15% kind of growth in profits. So I think if I was to be in staples, Britannia 1, Tata Consumer 2, Nestle 3, maybe if you want to push in a Dabur at number 4, and in consumer discretionary, I would probably play UNSP as number 1, maybe followed by Indigo. And just maybe for the premiumization theme, I would probably throw in a Hotel Leela in there.
All right, take that point. You spoke about Tata Consumer this morning. There is a note that is coming from Citi. They have a buy call, 1450 rupees target price on Tata Consumer is among the top Nifty gainers. They are saying that, their meeting with the management yielded positive commentary coming in from them. They are fairly confident of growth. They're saying demand is resilient with no visible slowdown so far.
Okay, all right. Thanks, Mangalam, for that alert. Well, Rahul, I wanted to ask you on the delivery companies. When Eternal, Zomato, when it listed, there was a lot of excitement. Then the stock corrected. Then it pulled back a good deal. Then there was an argument that Swiggy is trading at a discount and maybe it doesn't need to trade at that discount. The discount just widened, and now in all probability we'll have a Zepto sometime during this year as well. What's your view on this space? Because growth doesn't seem to be the problem, but profitability and competition seems to be the issue. Your preference?
So Nigel, this typically happens when the market goes into a sideways or a corrective phase. The focus shifts to cash flows and return on equity and return on capital employed. And when the market seems to rebound, then it's back to, net order value, gross order value, and, so on and so forth. But that being said, I think if you look at, the e-commerce platforms of the 3 or 4 companies that you mentioned, Eternal seems to have, absolutely seems to be doing the best. And I think even at these prices, Nigel, if we were to enter, I think you could probably make 25-30% on Eternal. Now, the only question is, how do you want to value all of these companies, whether it's a Blinkit or an Instamart or a Zepto? Of course, you have a couple of IPOs that are on the way as well. We would not, be too gung-ho about the IPOs that are coming in at this point in time, because we've done some preliminary work. But I think if you look at Eternal specifically, because that was your question, the kind of growth that you're seeing in food order delivery, north of 50%, in some quarters going to 80% kind of growth. I think with Eternal and Swiggy, the good part is these guys have a lot of cash on their books. Now, I don't know what they're going to do with this kind of cash, because after the IPO, they've come in for multiple rounds of fundraising of $1 billion and plus as well. But that doesn't, of course, you can talk about dark stores, you can talk about, sort of launching of new products, but it doesn't concern me so much with the kind of losses they have because of the cash flow that they have, if that makes sense. But I personally think that if they're able to trim down their losses on the e-commerce business, then the runway, I'll give you an example of Paytm. Paytm went to about 800-900, came down to about 300-400. Suddenly said, okay, we're going to focus on profitability, and the stock went up about 50-70% from there. I think something very similar can happen to an Eternal and a Swiggy. Between the two, I would prefer Eternal just because of the food delivery also, and the fact that the losses on the e-commerce side are a little lower. But whichever valuation metric you may take, Nigel, it's a little difficult to make a fundamental case to buy these stocks. But like I said, I think given the kind of growth rates of 50-80% that you're seeing in Eternal, I would probably say that there's a 25-30% pop still left in the stock from here.
Take that point. We have cash of what? 18,000 crores on Eternal. Swiggy has about 16,000 crores. Zepto, as of their updated RHP, is close to around 5,700 crores, but they're obviously raising 8,000 crores. So add that, would be about 13,000 odd crores on their books as well. Swiggy has said that they will turn QCom profitable, at least adjusted EBITDA break-even by the first quarter, the quarter that we're currently in. And Eternal's Blinkit has turned profitable in the last quarter already.
Okay, all right. Rahul, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18. Well, I think let's just focus on the other big talking point, which is monsoon rains, right? So the World Meteorological Organization says that chances of an El Nino event in June-August are 80% in 2026. In fact, Maharashtra, Gujarat are seeing 70% plus deficits, at least for now. Hopefully this will be made up. But, well, Mr. GP Sharma is president at SkyMet Weather Services, the private weather forecaster. Mr. Sharma, thank you for joining us. What is the situation right now? If you can go step by step, is the progress weak? What's the total deficit? And where is it lacking, really?
On the monsoon front, as you know, it arrived a little late, but then only for a few days it advanced along the west coast, covering parts of Kerala, coastal Karnataka, and reaching up to Goa, and barely touching extreme southern parts of Konkan. But thereafter, monsoon has stalled, I will say, for the last almost 1 week. 8th onward, it's not inching forward now, not even a small inch or I will say by few even centimeters or so. It is stationary now. It is stuck there on the Konkan coast, and on the other front, that's a Bay of Bengal branch also, though it is advancing a little with a moderate pace, but then that's a normal over West Bengal, Bihar and adjoining parts. Monsoon current has already come, but it is not as we desire. All parts of the country, they are deficit as of now, except Northwest India, where the pre-monsoon activity is fairly good. Okay, that's on account of pre-monsoon and not at all for the monsoon. Monsoon is a slow, sluggish. It is not behaving.
Right.
And as it is up, it is almost about 32% now in the first 2 weeks. Yeah.
Yeah, sorry, let's just take it one by one. So on the western front, you're saying from the 8th of June, monsoons are stalled, right? The Konkan area, they're not progressing. On the eastern front, you're saying they've covered West Bengal, Bihar, etc., adjoining areas, or you're saying that it's normal on the eastern front?
We have covered West Bengal and half of Bihar and Jharkhand, but then still the rainfall distribution, even what we have there, it's not even. Okay, it is not a monsoon type, typical monsoon type rainfall. Northeast India is never a big problem. It was raining even much before the arrival of the monsoon. We are more concerned about the eastern states. Perpetual deficit we are seeing over Bihar and Jharkhand for the last few monsoons. And as I said, yes, it has covered West Bengal. But then Bihar and Jharkhand, whatever portion it has covered, it is still deficit over there. Okay. So worry is there are no good signs for the monsoon to advance rapidly. I think it will remain in this position, particularly the Arabian Sea branch on the western side. It is going to remain stalled for over about 1 week. I won't be surprised even if it takes about 10 more days to be there and don't move further to cover even Mumbai. Gujarat is next, but then it is getting delayed and the delay is getting substantial now. It is worrying now. Okay. The monsoon system, which are the main triggers for the monsoon to carry it forward, to take the monsoon flag further, no system is forming in the Bay of Bengal and in the Arabian Sea as well. Arabian Sea as such, even if the system forms when they move away, they spoil the monsoon. It's better if they don't form there. But yes, west of the Bay of Bengal, there is a requirement at the moment that quickly some system should come. But there is no indication for the next at least about 1 week. So that's what I say. Monsoon deficit is going to grow bigger. And from 32%, I'm not surprised, even in the next about 1 week, goes to about 40% now. Yeah, that's it.
So this is, Mr. Sharma, this is 32% is all India deficit.
That's right.
Okay, and this is from the 1st of June, right?
1st of June. 1st of June. Yeah.
Okay, and typically June, July, August, September, how is the rainfall distribution? Like June is responsible for how much of the four-month rain?
June and September put together is about 30-32%. July and August put together is 2/3. That's about almost about 70% of rainfall in core monsoon month, June, July. Otherwise, June should be about 15-16%, similar amount for last month, September. Yeah.
Okay. June is typically about 15% of the monsoon, total monsoon rains, and here we are about 32% deficient. And you're saying it could rise to, it could be as high as 40%.
In the next 1 week itself.
Right. So could you give us some historical perspective? Have you seen this kind of late arrival? I think 2023 we saw this, right? Maybe especially on the western front.
There are cases, yes. You see, even if you see 2014 and 15, in 2014, the monsoon had just stall rains were deficit in the month of June itself. Sometime it was deficit by even about 50% also, but the next year monsoon, it was surplus. So this variation, spatial variation in the monsoon distribution, yes, it is a characteristic of the monsoon, but whenever the deficit grows bigger, it becomes difficult to catch up at a later date. That is the worry. Monsoon, you see, one typical thing which I have noticed in the monsoon, howsoever bad the monsoon may be, it doesn't fail in all the 4 months. There is always some hope in that, irrespective of El Nino or Super El Nino, which we are calling this time. It does come up for some time at least, but then these are very crucial days. You see, second half of June and first half of July, this is the period when possibly most of the sowing operations, they take place. People, the farmers, they prepare the field, go ahead with the sowing. So this is a very crucial phase, and it is a worrying part at the moment, because the areas which need the rains most, rain-fed areas, core monsoon zone and the rain-fed zone, there it is a little critical situation. Deep parts of Gujarat, Maharashtra, Madhya Pradesh, the rains are not reaching there. And worrying point is nothing is looking very likely, at least in the next about 10 days or so. June is going to disappoint us badly.
I see. So you're saying the June deficit could grow to 40% in the next 1 week. And this is largely as a result of this El Nino weather system, sir?
See, it is not alone El Nino cannot alone influence the complete monsoon season. Yes, it is a major player, all right. At the moment, we were just about in the answer neutral condition. El Nino has just begun, I will say, if at all, because the Pacific is warming at a very rapid pace. In the last about 2 weeks only, I noticed it has the temperature has increased by almost 0.6 degree, which is very large. It doesn't happen so rapidly. So pace is quite fast. El Nino is definitely catching up. And in addition to El Nino, none other factors at the moment, they are in the favor of monsoon current, which to progress it further. Be it the Indian Ocean dipole, be it the MGO. There are a couple of other factors which they come to the rescue of the monsoon in case it is going off track. But unfortunately, nothing is behaving at the moment. So monsoon has its own energy, yes, internal energy, but at the moment, that is how it went past for the last about 1 week to start with after the onset. But then now, possibly that also is a little exhausted. So, worrying situation is next about 10 days or so, but nothing much will happen. The rain deficit will grow. The part will, north and central parts of the country, possibly there the situation will become a little worse also, I will say. At all, something comes up, it is only towards end of June some system will form and some recovery at that time. But nothing looks very promising that also even at this stage. Yeah.
Okay. Overall, you would say the areas of worry is north and the central parts of the country. That's at an overall level, as you see it right now.
Yeah. For monsoon area also, rainfed zone, which we say, that is Madhya Pradesh, Maharashtra, Gujarat, parts of Rajasthan, and also to some extent, even the eastern parts of the country, Bihar, Jharkhand, Chhattisgarh. Southern parts of peninsular India, they do not get affected. As I see in the past records, at the moment also, state of Kerala is good, they are normal. Even parts of Karnataka, north interior Karnataka, big portion, it's behaving, the rainfall is good. Parts of Andhra Pradesh in south, that is the Rayalaseema region, next to south interior Karnataka, that is also okay. Coastal parts are okay. Coastal Karnataka is okay. South Peninsula, that does not get impacted very badly. Even during the El Nino monsoon, it gets spared. That's what I've noticed. Okay. So big worries for the central parts, which are rain-fed, as well as they stand more chance because even the systems, when they come, they do not reach those parts very, very effectively. So worry remains the central parts, that is inclusive of Madhya Pradesh, Maharashtra, Gujarat, and eastern parts of the country. Yeah.
So where are you total, what's your total estimate at now, sir? The deficit, and are you revising that for the...
See, it is these are still early days. Though I said the deficit is about 32%, but you see the rainfall in the first half of June, the normal rainfall for the country is about 3 millimeter, 4 millimeter per day. Total for the month is 165.6 millimeter or so. These are small amounts. So with respect to this total, deficit of 32% is not very huge, provided it better. As we reach the last days of monsoon or even start of July, if it behaves, still we can catch up.
Sure.
Crucial months will be July and August. These are the core monsoon months.
Yeah.
In case the rains come at that time. So we have to wait. We have to be a little optimistic. Yes, the situation will revert and then we get better rains in the month of July. Yeah.
So thank you very much for explaining all this to us, and I hope, as you did too, that things pick up towards the end of the month and in July, really. I mean, because June is about 15% of the total rainfall, so it's not a big month, it's an important month, but July and September are the big ones. Thanks very much for joining us with that, sir, the rainfall situation. 70 points, by the way, on the Nifty, 23,927. I think we have the AFL management with us, Nigel.
Well, that's right. Let's move to AFL. That's the next management on the show. The company has acquired Ad Colony assets from Digital Turbine for around $4.7 million. We're now joined by Mr. Anuj, who is the chairman, the MD and CEO of the company. Hi, Anuj. Good morning. Thanks a lot for speaking to us here on CNBC TV 18. Well, we've got a few talking points that should come for our viewers up on the screen. All of them, all the three talking points come up on the screen. Synergies from this Ad Colony acquisition, the capital infusion from promoters, and the 20% growth. Is it sustainable or not? Well, Anuj, help us out with this recent news piece first. The Ad Colony acquisition is done at around $4.7 million. It's being acquired without any customer contracts, I understand, and it's done on a slump sale basis. What's the realistic revenue contribution from this particular asset? And there'll be some synergies you're factoring in as well. So could you quantify that?
Sure. Well, first of all, thank you for having me on your show. Ad Colony Assets is something that we've been watching for many years now. Okay, in 2000 to 2001, when Ad Colony was in the market to be sold, we were one of the contenders. We evaluated whether we should acquire it or not. We were deeply interested in some of their strategic assets. And I'm very glad that in 2026 now we've been able to acquire those strategic assets that we have always wanted and we've always been tracking very closely. So this is definitely a very meaningful addition to the overall Apple 3i consumer platform tech stack. And what we are achieving here from a strategic point of view, like we have different stakeholders in the ecosystem. If you look at the consumer side of the equation, we are getting deeper audience intelligence. We are able to drive more personalized experiences and recommendations on the consumer's devices. And we're able to drive premium conversions for our advertisers. From the advertiser's perspective, we are able to drive deeper verticalization through our platform to serve the various industry verticals where we serve the advertisers. So this is actually in keeping with our 10x growth strategy, which is about verticalizing our platform and going deeper, closer to the advertisers across all the industry verticals. For the publishers side of the ecosystem, having an SDK on iOS, on Android, going deeper integration of that SDK with the Apple SDK and making sure that we can drive more consistent and clear signals from there to enable greater monetization. This is really deeply strategic for us. In terms of the business that we will generate from it, I think there's no specific Ad Colony acquisition related forecast, but I think it should suffice to tell you that the Ad Colony name is a very credible, reputable name in the industry, especially in developed markets. And this will help us to win the credibility of advertisers and publishers alike. And therefore, in the whole ecosystem, Apple will be going out as a much stronger name in developed markets and will accelerate our growth in developed markets meaningfully.
Anuj, just to follow up on that, you said that you first looked at that asset in 2000 to 2001, which was when it was on sale. You liked it. You've been following it since. It's 25 years later.
Clarification is 2020 to 2021, if I said it wrong.
So that's 5 years. Got it. Okay.
5 years ago. Yeah.
Got that. So 5 years is what you've been tracking this for. What has their growth been in the last 5 years? And with now you having them, how much will that accelerate your growth by? You did say that it increases, the scope of offerings you make to your customers, and you go deeper into, you penetrate a little more. How does that change your cost per converted user, or how does that change your metrics?
I think we can drive much greater volumes of premium conversions. That's number one. I think we can potentially look at improving the CPCU rates. That's number two. Number three is really about developed markets and deeper penetration with our strategy on verticalization and so on. Let me link it to your third sort of strategic talking point, right? Which is 20% sustainable. Even without the Ad Colony acquisition, the Ad Colony assets acquisition, I think we were cruising along very sensibly calibrated on the 20% plus growth path. With this particular acquisition done and integrated, our ability, predictability, and the dependability of our guidance towards a medium-term growth of about 20% on the top line, hopefully a faster growth on the bottom line, I think that has become much better anchored, more dependable, and I think these are steps in the right direction.
Okay. All right. Anuj, I believe developed market as a percentage, that's hovering in mid-20s, right? As of now, as a percentage of your mix?
Developed markets, it's about, over 20%,
20%. And the ambition is to take it to what, 40, 50%?
Well, I think, for the longest time, I've believed that developed markets should be a larger contributor to our business. But, we keep doing so well in global emerging markets and in India that it's been keeping pace, right? So our India and global emerging markets is growing at a very, very steady pace as well. In fact, it's growing faster than developed markets. I think with this addition, what we are looking for is, can we calibrate up and grow the developed markets at par at the same pace as global emerging markets. So I think the balance should still stay for now until we do another acquisition, for developed markets where the balance might shift to a higher percentage contribution.
I want to ask you a little bit more about that other acquisition that you're looking at as well, but give us a brief detail. The cost per converted user, what is the difference between, say, developed markets, the India business, as well as emerging markets? I believe for developed markets, it could be in the vicinity of around 70 to around 90. While for India and emerging markets, it's relatively lower. So if you could just give us a broad
I would
mix.
say it's much more nuanced, because when we talk about verticalization, then you have to talk about not just one CPCU rate. You talk about the CPCU rate for fintech in developed markets, or CPCU rate for healthcare in developed markets. There you derive great premiums on that. Compared to, let's say, doing entertainment in emerging markets. So I think that there is a difference. It's a very nuanced topic, and it cannot be covered in a short way. That's the reason why we give an aggregated trend line, because we are growing across and we are diversified across so many industry verticals. We are specializing our platform for those verticals, and our goal is always to attract the most premium conversions for our advertisers, enhancing their ROI, and therefore justifying value on the higher CPCU rates that we keep on charging. If you look at our trend lines, our volume of business is growing, the CPCU rates on the business are growing, and I think that's powering the revenue growth of our company.
But safe to say
I think that trend should continue.
Right. So Anuj, but, on an average, you've been doing around 55 to around 60 on CPCU. That remains around that vicinity. Would that be fair? Or do you see...
we already around 60, and we should keep pushing, edging it up. Every other quarter, you would see that we are inching it up. Yeah.
Okay. I just wanted to understand about the other acquisition that you're eyeing in the developed markets itself. If you could give us some sense on that, because you've announced 1,100 crore warrant issue. If you could give us a sense on the purpose of that warrant issue, and then we speak a little more about beyond that.
Yeah, for Affle 3i, the purpose is very clear. We are looking at, having the right kind of a capacity to do a meaningfully sized, M&A transaction. And I think our board has a unanimous decision to support this fundraising. I think 96% of our shareholders voted in favor of it. Almost all the institutional investors voted in a significant way in favor of this. So I think this is a vote of confidence of the company, also of the promoter company, on the strategies that Affle is pursuing in the market. And I think it is the right time to buy, because given all the geopolitical issues and otherwise, it's the right time to play on the front foot, to be aggressive, to grow.
No, one would have thought that the pricing could have been a little more. One would have thought the pricing could have been a little more aggressive from your part, the signaling, because 2,100 rupees is what the street has seen this stock to be at around a year ago. Thereafter, it corrected all the way lower, and now 18 months from now, you'll be converting it at around what, 1,487, which is still a discount to where it currently is. So maybe.
The pricing is actually at a premium to the current market pricing, and the stock exchanges and SEBI has a very clear guideline on how pricing has to be done. Okay. And a big part of the money is already coming in. So 25% of the money comes in as warrants upfront without any shares being issued.
Right.
Okay. And so I think that the structure is very clear. The pricing is fair. The premium is a premium to the trailing market prices when we came in. I think the important thing is not exactly that. I think the most important thing is that because the pricing has to be fair, the governance has to be right. The most important thing is a significant amount of money being put in by the promoter into the company, and the shareholders are accepting it, receiving it well, because the overall growth strategy will unlock tremendous amount of value. This is the right time to be a strong buyer in the market.
Yeah.
And I think we will create a lot of value for
Anuj, we're running a little short on time. Very quickly, if you could give us a sneak peek, should the acquisition be a 300 million to around a 500 million acquisition? Would that be a fair estimate? I'm giving you a very broad range, or will it be closer to 500?
Look, we've just done an acquisition of only around $4 million.
Yes,
So I don't want to
but I
constrain it.
believe that this acquisition is going to be a few
I would
$100
say
million.
that, yeah, of course. So what I'm saying is that we have the flexibility to transact small, to transact big, and we have the muscle power to do it, and we have the time to do it. We will not be under any pressure of timeline or any guidance, but we will do the right transaction. And there are many, targets that we are talking to. And I would not want to compromise anything on the valuation or the negotiations at the moment.
And we'll re-invite you at that point of time, because I believe it could be fairly large. And what I hear is it could be maybe 2 to 3 acquisitions that you're looking at.
It's relative. Large is a relative word. What I would say is it will be a sensibly calibrated acquisition that will generate tremendous shareholders' value. And we will not acquire anything that we don't believe that we can grow organically going forward at least 20% growth and to achieve 20% EBITDA.
Thanks a lot, Anuj.
Acquired asset. So our calibration is very sensible. We're not finding size that will compromise our speed or efficiency. We are looking for something that will add to our velocity, add to our efficiency. So the 20% growth over 20% EBITDA is something that is super important to us. And whatever acquisitions we do should add to that, not take away from it.
All right, Anuj, thanks a lot for giving us that vision. We look forward to chatting up with you once this deal does get closed. For the time being, we slip into a short break. On the other side, the management of Chalet Hotels is waiting for us. Stay tuned. Welcome back. The last few trading sessions have actually been particularly good for the travel and tourism space, specifically from a domestic standpoint. And now the belief is that maybe foreign tourist arrivals will happen as well as soon as you do have some more clarity on the geopolitical situation. So let's get in Shwetang Singh, the MD and CEO of Chalet Hotels, who joins in now. We obviously discuss on the occupancy pickup in the first quarter, FY27, the outlook that the company is given. But additionally, the annuity business, which gives a lot of comfort to those who are looking at, seasonalizing the hotel business, so to say, as well. Thanks a lot, Shwetang, for joining in. Just a question on the expected growth in the first quarter. How has the pickup been, given the West Asia crisis and the likely impact of higher costs? Now that there is some semblance of peace coming by, have you seen increased, inquiries?
Good morning, Mangalam. Thank you for having me on the show. No, thank God that I'm doing this interview a couple of days later than what we were last scheduled to do this, because, at least we have some good news to share. Not only us, I think the larger humanity is breathing a sigh of relief, seeing what's now sort of playing out in the Middle East. But, principally, this quarter has been actually surprising from a point of view that we had anticipated a much worse situation. But April came in quite steady with a high single-digit growth. In May last year, if you remember, we had Operation Sindoor and some very, very heavy monsoons. So we had a very difficult May last time. This time we had a couple of things going for us. One was the fact that the social calendar, the marriage calendar sort of clustered up in May, and the fact that we had a low base that we were coming off. So May in general has had a very, very good growth over last year. a very high double-digit growth. June was looking steady. We were not happy with the pace of pickup, but now with this change that's happened, we hope that we will quickly come around the corner, and therefore in this quarter we should skate by in high single-digit to early double-digit numbers on the growth front.
Okay, that still is a little away from the 12 to 14% guidance that you're given for this year. But I understand that, a lot of that will be picked up in the remaining 3 quarters, the second half being a lot more active than the first half of this year. Just a word on MMR, because there has been a fair amount of construction that you've been undergoing in Powai. There was some renovation at Vashi. Has the MMR occupancy come back?
No, first let me answer just add to what you said. And the point here is that you're absolutely right. Q3 and Q4 are very, very strong. This is also because destination weddings from the Middle East is being cancelled. They are generally a strong quarter in any ways. We would expect foreign tourist arrivals to come back, and with a lot of pent-up demand. So Q3, Q4 is very good. We just have to see how quickly the sentiment comes back post this announcement of this deal that's happened in the Middle East. So that's what we are watching out for Q2. In general, as I said, Q1 has been around what I have been guiding towards the late single digits and early double digits. So we should be coming back to the overall guidance that I had spoken of earlier in the year. MMR, yes, MMR, some of the pains had been created by ourselves. That's because we are building for a larger future especially at Powai, with the large real estate play that's coming there of almost 900,000 square foot. That alone should give us about 150 crores in EBITDA as soon as it stabilizes, and it's coming out of the ground very rapidly. We are scheduled to finish that project by the fourth quarter of this year and first quarter of next year. So we are very, very hopeful from that particular campus. In general, the porch is back. So the issue that we had with the marriages, etc., that is back. We should have it properly functioning by the end of next month. The noisy part of the work is also finished, so we expect that campus to come back very rapidly and very quickly. As far as JW Sahar is concerned, even though the market has sort of seen some supply, we have still been constantly beating the market, and by a fair margin. So we are very confident even with JW Sahar, and with the Marriott Bonvoy program, we have nothing to worry.
Right. Shwetank, hi, good morning. Just a quick sense. So how many total keys do you have now? What percentage of the inventory is still affected by all this, renovation and construction and other activities?
So we have a total of 3,389 keys that are operational, with about 1,650 odd in the pipeline. Actually, from the renovation part, the impact is not massive. It's just that we lost some crew, and that's for the construction that's happening in Powai. Overall, the 4-point Sheraton, which we are now rebranding as Athiva, was also under renovation, but that's now completed as well. So actually, nothing this year should be impacted majorly by any form of renovation.
This is Khandala.
No, this is the one in Navi Mumbai. The Khandala one was complete in November, and actually it's picking up very well. The guest feedback has been absolutely brilliant. I hope some of you have been there, and I know that the feedback has been really good.
I can tell you, Nigel and I, both of us have, visited the Khandala property back when it was Dukes, and now when it is Athiva as well. Fairly close from Bombay, and this
is the Dukes one.
It's a Dukes property, yes, which was obviously.
I think I've been there maybe 15 years ago.
Yeah, that is when it was Dukes. Now recently it's been rebranded as Athiva when they took it over. And on Athiva itself, Nigel, you had a point?
No, I'm saying you can't recognize it, Prashant. Dukes, I went there with my parents a few times, and I took my parents, in the last 1 year or so. You can't recognize it. The revamp is phenomenal. So maybe you take us.
You take us.
I'm glad you called that out. I'm really happy with that feedback. I tell you, it was a difficult project, but we invested about 170 crores in it. Not even a blade of grass is the old one. It's absolutely brilliant how it's come along.
Yeah, it is brilliant. We feel that as well as customers, and I can give you that feedback. But the one thing that I wanted to understand from you is that you had extremely strong brands with you. Obviously, it takes a different muscle to start a new brand by yourself, right? Athiva as a brand, I just wanted to understand, what's your plan of growing this brand? Because now your 4 Points brand, also you're rebranding it to Athiva. And how are you building demand channels for this? Supply is what you are adept at, and earlier demand channels would have been built by the brands that you already had. Now with Athiva, how do you plan to build the brands?
So look, we have taken a very pragmatic approach to it, and we believe that what we are doing with the brand today is a gift for the next generation. So maybe not in my lifetime, but we will see as we go along. The point here is that we are putting this name on our hotels right now, and the way we are looking at it is that we are still very brand agnostic. Should a location require an international brand distribution or a luxury positioning that does not fit with the existing positioning of Athiva, we are not unnecessarily stretching the brand at this stage. So as you can see, we have announced the Ritz-Carlton in Hyderabad after launching the brand. So we were very clear that the positioning we were looking for is luxury for that market. With Athiva, we have taken a two-pronged strategy. First, we are trying to develop a regional brand. We are not trying to go pan-India straight away. So we are looking at Western India, basically Goa, in and around Maharashtra, and maybe as far as Rajasthan with the latest acquisition. Then the idea is to sort of establish the core of the brand, prove to ourselves that we can do it repeatedly for ourselves and for the guests. Only then we will think of going third party. Also with the brand, the way we are looking at it, that if it's a largely domestically fed market, which means the guests are from the domestic market, then we will look at Athiva on a standalone basis. Should it be fed by international clients, let's take US for example, we will potentially look at tying up with a soft brand, which will allow us to have access to their distribution and their loyalty program.
Okay, all right. Final question, Mr. Singh, before we let you go. What about the mix between, real estate in terms of revenues? I guess in the past, you have spoken about a number of 25 to 30 crores per month. You could correct me on that.
Yeah,
but what will the mix
you're
look
absolutely
like?
right. No, you're absolutely right. We have already hit that number. We were at 28 crores exit in March, and it's already building up to 30. We have done a few signings, which we'll announce at the end of this quarter. So it's already built up to the number. We are above 90% in occupancy on our existing real estate. With the new 900,000 coming up and the market in Powai being very buoyant from a real estate perspective, we don't see that as a challenge. So that will quickly get absorbed as well. Overall, in the real estate, we should have about 450 to 500 crores of pure EBITDA coming through just from the real estate. And, given that we bought in about 1,700 plus crores from hospitality last year, you can see that it's already contributing significantly to the bottom line.
Okay, from this 28-30 crores post commissioning of these, the upcoming projects, say in the next 2-3 years, where does this number head on a monthly run rate?
Actually, not even 2-3 years. We should expect this by the end of next year at about 40-45 crores a month.
Got it. So that becomes a
450-500 crore business.
It's a 500 crore.
It's a significant business, and at 100% EBITDA margins, we love the business.
At 500 crores, 100% EBITDA margin, who wouldn't love that business? Thanks a lot, Shwetang, for joining in.
Thank you.
Good luck for scaling these businesses up for you, and good on you for great customer service that you're providing at some of your revamped properties as well. Can't wait to see what next. With that, we'll take a short break with the news that the market continues to hold on with gains closer to around 55 points on the Nifty, marginally off the highs of the Nifty Bank, but no real worries after the outperformance that we've seen out there as well. Focus on the commodity space when we return.
Okay, welcome back. I think we've got markets which are coasting along. Nifty Bank has come off the highs. Nifty itself is up about just 50, 55 odd points, was up about 75 in the morning. Base metals are in focus, aluminum in specific. Manisha is here with that on commodity markets. Manisha, morning.
Thank you for that, Prashant. Well, absolutely. Metals have come off its highs. The interim agreement between US and Iran has led to a lot of concerns easing off, really. Aluminum should be first on your screen because we've seen 4% of a decline in the overnight market. It continues to trade on a weaker side in the Asian markets right now as well. And that one is trading at a 2-month lows, by the way. The Hormuz blockade and attacks on smelters in West Asia had choked supplies, and we did see bauxite to refined aluminum to aluminum itself in short supply because 10% of global aluminum does come in from Middle East. But now with an expectation that this blockade will open up, you will be looking at release of Middle East aluminum inventories, and that is what is weighing onto the prices right now. But copper as well has come off. We've seen a percentage point of decline in the last 24 hours, and that is because a lot of mining and smelting requires sulfuric acid, which also was coming in from Middle East. So now that you would perhaps get easier and more abundant supplies, also has seen a decline in case of copper. Zinc prices are trading slightly in the negative as well. And add to that the fact that the Chinese housing prices have continued to decline for a 35th month straight therein. And we also are looking at a slight increase in inventories when it comes to China. That's weighing onto the prices also. The longer-term trajectory for metals markets, believe, is still on the higher side because of mine slowdowns and smelters and the kind of newer projects that are not coming in, at least in this year and the next, would continue to support the prices. That exactly is the case for copper, where the estimates of an annual supply deficit of around 491,000 till 2030 is what the markets are working with. For zinc, this current year is looking at 19,000 tons of a deficit as well. So those factors, those numbers would continue to support the prices. But the last thing should come in on your screen, and that really is how the prices have fared on a month-on-month and YTD basis. So there you have gold negative on month and just about flat in this year now. Silver prices have declined 10% in last 1 month and 2% down for the year. So we are looking at longer negative trend there continuing for silver. Platinum, the declines have been much sharper, 11% down on month and 15% down in this year till time. This is what the base metal prices have done. So on month basis, we still are looking at a positive copper and zinc. Aluminum prices, because they have declined quite sharply in the last week, 10 days, is the reason you're looking at a negative on a month basis. But for this year, and there you have it, a double-digit growth just about continues for metals. So anywhere between 13 to 15% of a gain is what many metals are displaying. It's going to be an important week, not just because it's going to be a signing of interim peace agreement between US and Iran, but also because this is going to be the first Fed meeting that Kevin Walsh is holding. And then apart from that, you also have UK, Japan and Australia monetary policy meetings in this week as well. So a loaded week in that sense.
All right, Manisha, thanks very much for that absolutely loaded week and lots to watch. Well, we'll take a quick commercial break. On the other side, Lata speaks with Macquarie Capital's Suresh Ganpati on the impact of the gush of FCNR deposits, which is expected on banks' financials. Which are the banks to watch, which will benefit the most? Coming up in just a bit.
Welcome to It's the Economy. Banks and financials have been the outperformers in June. While the Nifty is up only 1.3% as of yesterday, June 15th, Bank Nifty is up 5.4% and Nifty Financials, which includes some of the NBFCs, is up 3.6%. Nifty Private Bank is up the most at 5.64%. Couple of reasons for this. Credit growth as of May 31 is a scorching 17.7%, the highest in post-COVID 5 years. While the Reserve Bank's FCNR schemes will make funds slightly cheaper for banks, thus improving their margin. At least that's the expectation. So is this the time to jump headlong into banking shares? And if yes, which banks? Or NBFCs for that matter? To answer these, I have with me Suresh Ganapathy, Managing Director and Head of Financial Services Research at Macquarie Capital. Suresh, thank you very much for joining us. Apologies for yesterday. There was a technical miss. Okay, this is really the first question. Do you think that given this aggressive credit growth that at least I was not prepared for and a likely improvement in margins, are you re-looking your earnings expectation or any numbers for banks?
Yeah, now it's of course, Lata, a bit early, but just a little bit on this credit growth itself. I thought for the sake of viewers, I'll give you some clarity. Usually what happens is that 31st May over 31st of March, you see an absolute decline in credit numbers, right? Decline or at best flattish. This time around, we have actually seen a 1.5 trillion increase. So what's happened is because of that, an increase this year versus a decline or a flattish levels last couple of years, the base has been a little bit more favorable. And therefore, you have actually seeing a 17.7% kind of a big number. Having said that, this is still a pretty strong credit growth because post GST itself, we did see a pickup. And this credit growth is, of course, also very broad-based, Lata. It's not concentrated in any one particular sector. A few sectors like power and gold loans, of course, have contributed to this growth. But just a little bit on the overall earnings outlook itself for the overall space. Look, I mean, let's put it this way, that this is one sector which is capable of delivering 14-15% earnings growth. And what is interesting at this point in time, Lata, is none of us, be the sell side or the buy side or the market, is factoring in any kind of rate hikes into their numbers. So if at all we see a rate hike happening during the later part of the year by the Reserve Bank of India, then there is actually upside to margin numbers and therefore earnings growth. So net a pretty decent, healthy earnings trajectory is how I will put it for the overall financial ecosystem.
But you're not tweaking them higher anytime now.
Sorry, I lost it.
No, you're not tweaking the numbers up, are you?
No, not yet. Because see, the credit growth doesn't move the earnings in a big way. What moves the earnings in a big way is margins.
Correct. And that's what I'm coming to then. In that case, let's discuss the FCNR numbers. I read a couple of your reports. Oh. Now, the market itself is dilly-dallying between about 50. There are some people saying 70 billion, etc., etc. And we know that some of our banks have excellent NRI clientele. So do you think that, at least a 300 basis point or something kind of improvement in margins is possible? 3 basis points. Sorry.
Yeah, so 3 basis points is possible, Lata, but it's small. See, you have to look in the fact that even if you'll end up getting, say, on the lower end 30 billion and on the upper end $60 billion of FCNR money alone, you're talking about anywhere between 1% to 2% of the overall deposit base of the banking system. As a percentage of overall funds, it is even lower number. So getting a 50 to 100 basis points advantage on the FCNR deposits will not move the margins in a big way. So you're right, 2-3 basis points is a very small marginal impact. What is more important is what could have been the impact had the FCNR deposits not flown through, because currently the loan growth is at 17.5-18% and the deposit growth is 12%. So we are looking at a very big gap of 600 basis points, which is clearly not sustainable. The FCNR at least bridges that gap, and to that extent, what could have been a very tight liquidity or a scramble for deposits or CDs, that goes away, and therefore you are preventing to a great extent what could have been a margin compression had the situation persisted without the FCNR number. That's how you should look at it rather than the...
You're saying margins will remain steady. They would have otherwise declined, and now you're actually seeing them steady, right?
Correct. That's right. And it can go up if at all there's a rate hike.
Oh, okay. Now that is receding as crude falls. So I don't know whether we should pack that in this early into the earnings. What is your estimate? What is your analysis vis-a-vis public sector banks? I read your report saying that all that is good in public sector banks has already played out.
Yep.
But they have been surprising us. For the last 5 years, they are surprising us every time we write off saying, okay, the best is in the price, credit cost can't fall further, margins can't improve anymore. They have been surprising us. You wouldn't give that possibility now?
Yeah, so look, the last couple of years, Lata, the story has been by the high LCR, low LDR banks, which was indeed the public sector banks, right? And now the LCR levels have already come down to dangerously low levels. I mean, they can't go down below 120%. The PSU banks will indeed keep that much amount of LCR. And the LDRs have already gone up to 82, 83% at a broader system level. So you have to understand that the strategy of buying low LDR or high LCR banks now is done and dusted with. We also have the ECL norms, which is going to take place, which is going to be effective 1st April 2027. So all said and done, the PSU banks no longer have the leeway unless and until they get the deposit growth up. And if you look at actually the deposit numbers, which is of course the FY26 numbers are out now, the PSU banks continue to lose market share on the deposits front, right? So while they're gaining market share on the loans front, the deposit front, they're losing market share. Now, because you really don't have an excess LCR, you cannot sustain that amount of growth, right? So in all said and done, and also the FCNR deposit that we're talking about, last time around during taper tantrum, HDFC Bank alone mobilized 10% of the incremental, more than 10% of the incremental FCNR money which came in, and that time the market share was not 10%, right? So if you look at it this time around, it could be 15% of the incremental money. So bulk of that FCNR money is going to go to private sector banks, and they're offering better rates than the PSUs, many of the PSUs. So they will get a greater degree of benefit, and they are the ones who have a slightly lower LCR and a higher LDR compared to PSUs. So the benefit should also accrue them. So all said and done, you take into account ECL, you take into account the lower LCR for PSU banks compared to what it has been in the past, and the FCNR angle, everything points towards saying that the PSU bank rally is over, and it makes every sense to move towards the private sector banks at this point in time.
Well, at an overall sectoral level, private sector, public sector, what you say may be right, but just earlier late last week, I interviewed the PNB MD for money control, and their LDR is at 73%. So they think that we can go slow on deposits now. After all, we are much better off than many other people. But anyway, there are, and by the way, Bank of Baroda also has a lot of international branches. So we don't know whether they will do well in FCNR. But Suresh, what's the pick of your pack for you?
Yeah, so my pick of the pack is very clearly at this point in time ICICI and Axis over the next 12 months. We do like HDFC Bank on a 3-year framework, but of course, in the current environment where there has been a lot of negative news flow surrounding the management transition and stuff, and other related aspects, we are pushing ICICI and Axis at this point in time. And in the NBFC space, we have a slight bias towards the lower valuation NBFCs or cheaper valuation NBFCs like Aditya Birla Capital and Shriram Finance at this point in time. Mind you that the next 3 to 6 months look pretty good from a bond yield perspective. We already wrote a note that the bond yields are down 25 basis points from the recent peak. The FCNR money will, as you know, Lata, will be parked in government securities. The foreign money is also coming in government securities. So we are in a comfortable yield environment, at least for the next 3 to 6 months, which will, of course, benefit NBFCs in the near term. Yeah.
Okay. Just coming to your ordering of private sector banks first, ICICI Axis, HDFC Bank.
Yeah.
Yesterday, we saw a positive FPI flow. Now, India is seen as opposite algo for crude prices. Crude prices falling, India becomes a little bit of a buy. If that 200 crores yesterday turns into something big, won't banks like HDFC be the beneficiary? Because they were the one which were the funding companies when foreigners wanted to move out and buy the NVIDIAs. Now, if the tide turns, they have a better chance?
I mean, definitely, if at all the FCNR money also, they'll end up getting a bulk of the money like last time around, and the fact that they need more deposits compared to everybody else, considering the fact that their LDR levels are already high at closer to 95%, yes, they will definitely benefit. I mean, the reality of the matter here is that, Lata, I mean, this year we have seen $25 billion of selling in the in India, and 50% of that has come in financials. And interestingly, the fundamentals of financials today are the best. I mean, we just wrote that credit growth is at a scorching pace, margins are okay, asset quality is still very good, ROEs are decent, and still they'll end up getting sold off very heavily. So they should be the biggest beneficiary. So all the top private sector banks which have been funding that FII money in a way, let's put it that way, to sell off India, I mean, that is something where you will see actually maximum amount of flows. Yes, so all of them. Just to let you know, Kotak's, for example, foreign holding, Lata, has gone down some 15-16 percentage points in the last 18 months. From 40, it is down to 25. Look at the kind of massive selling that we have seen in some of these private sector banks, right? So everybody becomes a beneficiary.
And they posted good Q4 results, actually. Kotak.
Across the board, banks actually posted pretty good numbers, and still they got sold off. So that's the irony of this entire sell-off, I would say. Yeah.
Fair point. You know, you just touched upon NBFCs, but I wanted a few more details. Yeah. Would you place NBFCs even above private banks, considering that we are likely to have a lower cost of funds for maybe the next 6 months? Up to September, the FCNR is allowed. So they have about 4 months of cheap money, possibly?
Yeah. So look, it can definitely be a better tactical pick above private sector banks on the back of easing liquidity, falling bond yields, and of course, resolution of this war happening, right? So they become quite a tactical pick. But, you know, all said and done, Lata, I'm still staring, and maybe you concur with me on this aspect here, is that I'm still staring at a fiscal deficit number which is higher than 4.3%, which the government has budgeted. So should be the total borrowing program should be higher. In that context, from a full year perspective, I'm not sure whether we are looking at bond yields remaining at about 6.8% or so, and we don't know what Wash is going to do by the end of the year post the midterm elections, right? So we are staring in the second half possibly a higher bond yield or higher rate environment, and therefore NBFCs become a tactical pick for the first 3 to 6 months, beyond which obviously I will be a little bit more skeptical about that rally. Yeah.
No, actually your point is fully taken. If we are also staring at you know, an El Nino which is quite severe, we just spoke to SkyMet on the show. If it is that severe, it may not be a GDP problem because we have enough grains, but it may be a humanitarian problem, and that may end up even more fiscal expenditure for the government. So I'm completely with you that the fiscal deficit and hence a higher borrowing cannot be written off this year. And the second half, I mean, why only Kevin Marsh? Sanjay Malhotra should also watch out. If, you know, inflation is at above 5%, you can't have a 5-quarter repo. I take your point on that. Very quickly, would you want to add PSU banks? I don't have much time, but would you want to add some more PSU banks to your list? I mean, the conversation with every PSU bank, their digitalization has really come up good. And therefore, a second NPA cycle is unlikely. They don't get the valuations that private banks for similar NPAs get. Do you think a valuation re-rating is also possible?
Oh, look, I think, yeah, Lata, today the gap between the privates and the PSUs are the lowest ever. Right. So today, if I were to look at an FY28 basis, just to share some numbers, HDFC, Axis, and Kotak, give and take trade between 1.3 to 1.4 times price to book. Now, that's a PSU bank multiple. A private sector bank having double the ROA of a PSU bank available closer to a PSU bank valuation. And so are some of the mid-cap private sector banks at similar valuations. So in an environment where you're looking at large-cap private sector banks having this kind of a valuation, it becomes a no-brainer to be overweight on the large-cap private sector banks.
Fair enough. Point taken on valuations. Thank you very much, Suresh. Always a pleasure speaking with you on a sector that I enjoy analysing a lot. Wrap up on Bazaar on that note. Chartbusters after the break.
HCLTech bets on sovereign AI acquiring nearly 10.5% stake in Sarvam AI for about 1,400 crore rupees. The company's C. Vijay Kumar tells CNBC TV18 that the investment opens a new chapter of opportunities. The stock is the top Nifty gainer today.
The metal index is the top sectorial loser, led by aluminium players, as the war premium on aluminium gets repriced due to the US-Iran peace deal. Prices of aluminium have fallen by close to around 10% from its 4-year highs.
The government launches an offer for sale to offload up to 5% stake in GIC with a floor price of 352 rupees, a sharp discount to previous close. The stock on that slumps 6%.
Citi issues a buy call on RR Cabel with a target price of around 2,650, citing strong demand across markets and scope for margin improvement. The stock is up 3.5%.
And GMR Airports rally continues. The stock is up another 1.5% after Kotak Institutional Equities issues a buy rating with a target price of 118 rupees.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, the markets are holding with gains. We're up close to around 80 points. It's been a bit of a wibbly-wobbly morning. But the Nifty is still holding up. And today, I think tech is leading the way. The Nifty Bank is doing a relative underperformance. That's more or less flattish as we speak. In fact, it's up only around 25 points. Mangalam, green is the color.
Green is the color. And it's like one of those cricket games, right? You know, when one of the opening batters is taking a rest, is on the non-strikers, and the other one tries to get in a few. And that's exactly what the tech index is doing right now, though it's been out of form for a very long time. Let's see whether this HCLTech deal brings a new, fresh wave of form coming in to the IT pack or not. The Nifty IT index up at the high point of today's trading session, but that's after a lot of underperformance and a lot of pain that we've seen in the IT pack. The Nifty Bank, on the other hand, absolutely flat right now. But if you look at it over the last week or so, it has been a star performer, and that's why maybe pausing a bit for the breath on the non-strikers, and let's see where that goes from here. But the good part is that the markets hit a century early morning itself. Dharmesh Shah joins in for a quick technical check. Dharmesh, we did well yesterday, notwithstanding the sort of profit booking that we saw at higher levels, a little over 24,000. Today is the weekly options expiry. The Nifty is sitting with a gain of almost 100 points. Where do you see it go from here?
So good morning, Mangalam. Absolutely, I think so. Yesterday has been something a good day for the market. I would say there is something that change in the sentiment after a long period of time. That was clearly visible in the Nifty. Yes, profit booking was there near the psychological mark of 24,000. But just want to highlight one thing, that if you look at the market since April 2026, each of the rallies, the magnitude of the rallies have been around 700 to 800 points. The current the magnitude has been around 940 points. So it clearly showing that the fall which was there for 11 trading sessions is getting retraced in just 3 trading sessions, indicating a faster time of retracement. So we believe, I think so, things are getting better. If you look at the market breadth, I think so the percentage of the stocks which are trading above the 250-day moving average has improved from 44% to 48%, and 52 to 62 to 60%. So it's clearly showing, I think so, things are getting better. It's more of a broad-based rally. Sentiment has changed after the fall in the crude oil prices, and it looks like, I think so, the way the crude price is behaving, it looks for a target of around 77 to 78. Same, I think so, with the dollar, I think so, which is again, I think so, getting weaker and expecting dollar to head towards 94.20. So we believe, I think so, overall, I think so, market looks positive. Yes, any dip towards 23,500, 600 should be looked as a buying opportunity, and we look for a target of around 24,500 as far as Nifty is concerned.
Got it. All right. Dharmesh, what about individual stocks? What's your take? You're giving the outlook on the Nifty as well as on crude oil prices. What about individual names?
Yes, so there's Nigerian stocks.
Okay. All right. I think we'll get back to Dharmesh once we get a more stable line. But for the time being, the markets continue to hold on to the 100-point gain. I think Dharmesh was indicating that he's relatively more optimistic as well. And I believe we got him back. Dharmesh, go ahead.
Yeah, so banking, again, I would remain with positive for, but Kotak Bank remains to be, we remain to be constructive positive for Kotak Bank. If you look at the Kotak Bank for last several weeks, I think so, a strong base formation in this range of 375 to 345, And finally, we have witnessed a breakout of 405. So below, Kotak Bank is something one which we like from the current levels to look for a target from 448, keeping a stop loss of around 389. Apart from Kotak Bank, in the mid-cap side, I think so we need to be constructive positive for Philips Carbon. Now, again, Philips Carbon, the stock has witnessed a falling trend line breakout, supported by strong sets of volumes, expecting Philips Carbon to head towards 332, keeping a stop loss from 289. So Kotak Bank and Philips Carbon remains to be a top pick.
Kotak Bank and PCBL, Philips Carbon, the erstwhile Philips Carbon, now renamed PCBL on the bourses. So those are a couple of his picks. As we move forward, just look at the FMCG pack. We have big gains coming in from Nestle. ITC has moved to the high point of trade for the second day running. We've seen Trent pick some pace as well, and Tata Consumer along with Asian Paints doing extremely well. So we'll just monitor the FMCG index that should come up for you right now, currently at the high point of trade, also causing, giving some support to the frontline index after underperforming over the last few trading sessions. Let's get you some ideas for profit. Today we do have our colleague from Money Control Pro, Lekha Badlani Jamnani, who's joining in with the stock.
Yes, thanks. So my stock pick is Apollo Hospitals, which delivered a strong Q4 FY26 performance, wherein growth was broad-based across hospitals, diagnostics, pharmacy, and digital healthcare. Now, key growth driver is the Apollo Health and Lifestyle business. Now, this segment is witnessing strong momentum, supported by rapid expansion of its diagnostics network, improving operating efficiency, and strengthening network economics. Now, as scale increases, this segment is expected to contribute meaningfully to both growth and profitability. Another important catalyst is the proposed merger of the Apollo Cradle and Apollo Fertility with Cloud9 Hospitals. Expected to be completed by Q2 FY27, the transaction unlocks significant value for shareholders while enabling Apollo to retain participation in the future growth of what will become one of India's largest integrated maternity and fertility care platforms. Apollo also offers strong long-term growth visibility through its aggressive capacity expansion plans. The management aims to increase the hospital capacity to around 13,000 beds from the current 9,600 beds over the medium term. Now, looking ahead, capacity additions in the hospitals business are expected to support sustained revenue growth, while improving profitability in Apollo 24/7 and diagnostics should drive margin expansion. The Cloud9 transaction further demonstrates management's ability to unlock value from its healthcare portfolio. At current valuation of around 26 times FY27 estimated EV/EBITDA, Apollo remains one of the highest quality healthcare compounders in India, with multiple drivers for long-term value creation.
Always good to see you, Lekha. Thanks a lot for joining in and educating us about that particular name. For the time being, we'll slip into a short break. We'll get you more on markets and stock-specific action on the other side. Stay tuned.
Welcome back. In the broader markets, a couple of these EMS guys are doing extremely well after having seen a bit of a correction in the past. PG Electroplast is the one which is making a bit of an attempt to come back, up 5.5%, so spiking as we speak. This morning we had pointed out Keynes Tech having opened fairly strong. Now it's only built onto those gains. It's up around 4% there as well. And that's not all. Nimesh's standout brokerage today was on Dixon Tech. While that one's holding with a mild green, look at the other one, Amberent. That's up around 2%. So across the board, there are some gains that we're seeing in this EMS space, and nearly 2 stocks in the broader markets advancing for every stock which is declining. The VIX doing extremely well from a bull's perspective as well, down about 5.5%. So all of this points well for the overall market, being led by the IT pack today. And which is the leader out there? It is HCLTech. The top Nifty gainer has picked up stake in India's largest pure play AI startup, Sarvam. Vinny joins in with the details and what it means for the company and the sector.
Hi, morning. So for HCLTech, they've acquired 10.46% stake in Sarvam at a value of around 1,427 crore rupees. It's an all-cash investment. Completion timeline, obviously, this will be completed within 2 weeks of the signing of this contract and deal as well. Now, Sarvam is raising overall $300 million. HCLTech obviously is one of the leaders in terms of this deal, as well as other players are there, like PEVC players. Peak 15 is there. There's Khosla Ventures and other VCs that are a part of this deal as well. Now, Sarvam AI, obviously, they have a turnover of around 45 crores as on FY26. It's a leading AI company based out of Bangalore. They have a lot of AI models, text, and other formats as well. What does that mean for HCLTech? This is a minority stake, so it's not a financial impact, but it's a decision in terms of moving more towards the AI strategic decision. They'll be able to leverage the benefits from the sovereign AI, the theme that is there as well. And Sarvam is, and at the top in its section as well, and this sector as well in terms of sovereign AI. They develop industry as well as client-specific language models, which will help HCLTech as well, and this will help them leverage and expand Sarvam's multilingual AI capabilities in India and beyond India as well. Nomura continues to maintain a buy rating. Target price is 1,600 rupees per share, and they also highlight this is a first-of-a-kind investment by an Indian IT service company. So that is something that the street is finding interesting. But let's also listen in to what the management of HCLTech had to say on the same.
We've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, Physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. We've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, Physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. The enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large.
Okay, all right. So Vinny has updated us with regard to that HCLTech's AI investment. But Vinny, we can't let you go so fast. Siemens India as well is buzzing on the back of an order win. Tell us more.
Hi, absolutely. So Siemens India, they've received an order for supply of propulsion systems as well as train control and monitoring systems for 12 train sets of Pune Metro, and this is from Titagarh Railway Systems. Now, obviously, this work will include designing, manufacturing, supply. All of this is included, especially for the traction converters, other converters, traction motors, as well as the train control monitoring systems, which is important part of the deal as well. Now, do not forget that Titagarh had, in a phased manner, received around 46 train set orders from Pune Metro, and that was a value of around 1,560 crores. Just for reference, now Qantas propulsion system accounts to around 40% of the train set's entire cost, and train control and monitoring systems account to around 8 to 12% of the cost. So it will be a significant part that in terms of the order win that comes in for Siemens India as well. Right now the deal is signed with Siemens AG, but obviously it's going to be made in India and everything is related to Siemens India. So everything will go in from Siemens India's point of view as well. And that is why we're seeing that the stock is moving in trade, holding on to gains of almost more than 1%.
All right. Thanks a lot for that, Winnie. A lot of stocks higher right now. Coforge is up around 3%. We're seeing some traction in Persistent as well. And as our team was at the bottom of the screen alerting, Sonata Software is the other one, which is up 5% as well. So the IT rally has now percolated into the mid-cap end as well. Coforge obviously has their analyst day today. We take a short break, come back, getting more on the markets and a lot of stock-specific action. Stay with us.
Markets at the high point of the day, 125 points higher. When the markets see a bit of a recovery, then you have fresh supply of paper. And that's precisely what's happened. And we have GIC, which is under pressure as the government has launched an offer for sale to divest close to 5% stake in the company. Well, Sudarshan's tracking that one. He joins us to fill us in with all of those details. Sudarshan?
So the stock is under pressure, currently down almost 6% because government has launched OFS to sell up to 5% stake to raise almost 3,100 crore. And base size of the entire 3,100 crore is of 1,235 crore. And if government goes ahead and exercises the green shoe option, that size is 1,853 crore. Why the stock is under pressure? Because the floor price is at a discount of almost 9% to yesterday's CMP. And that was floor price is 352 rupees per share. Now for today, it has opened for non-retail investors, and tomorrow it will open for retail investors.
All right, so thanks a lot for that. So that's about GIC, currently under a little bit of pressure, down about 6.5% on account of that supply. But when it rains, it pours in the broader end of the market. Look at NIIT Limited, just moments ago, the stock was, absolutely flat, but now seen a spike of nearly 13% and decent volumes backing that counter as well. In fact, this month it's been a rank outperformer. Over the last month or so, the stock has surged 60%. So obviously something going on in NIIT. It's hit triple digit in today's trading session. There you have it. A month ago, it was about 61 rupees and now at close to around 101 rupees. And with volumes backing that counter in today's trading session, up 13%. But another stock which is doing fairly well is RR Kabel, mildly off its morning highs, but there is a bullish note that is coming from Citi. Upasana joins in with the details. Upasana, Citi is positive on the stock with a higher target price.
Well, certainly Citi has given a buy call on the stock with the target price of 2,650 as the demand remains strong across the company's domestic and export markets is what they have highlighted. Now, export, if we see, the company's export business was under pressure in the month of March because of the temporary disruption, but April onwards, there is a strong demand pickup in both the segments, that is domestic as well as export segment of the company. Just giving some perspective, company's 30% of the revenue comes from the exports, making it one of the highest amongst its peers in terms of export book, which is catering mainly to the markets such as US, Europe and Middle East. Now, management expects a double-digit volume growth in Q1 FY27 and even on full-year basis, that is FY27. Exports have rebounded sharply is what the brokerage has emphasized in the last 3 to 4 weeks, and export growth and margins are expected to improve further in the upcoming quarters. Operating leverage will also support margin expansion going forward is what the brokerage has highlighted. Now, competition from the new entrants, which is one of the key blips when it comes to cable and wire companies, the brokerage believes that this is fairly manageable for the company. And also, strong demand for fans and pricing actions should support company's FMEG profitability, and it might break even in FY27 is what the view is here. So overall, certainly a positive note highlighting the demand recovery in the export and domestic markets.
Got it. All right, Upasana, thanks a lot for that. Well, India has posted a current account surplus in the month of April, as per the data released by the Reserve Bank. However, the capital account saw a deficit because of the FPI selling. Lata joins us to dissect that data. Lata?
The big news is the Reserve Bank has started giving the BOP data quickly. Okay, so what we have got is the balance of payments data for April. Normally, what they used to do is they used to give the quarterly data, that is Jan-March data, after about, say, June, with a 60 or a 75-day gap. Now, with a 45-day gap, you are getting the balance of payments data for the month. And it's a monthly release, not quarterly. That's the big news. Remember, the Commerce Ministry gives you only the trade data 15 days after the month is over. So, yesterday, we got the May trade data. But trade data is a small part of current account. Trade plus remittances is current account. Capital account, no ministry gives us anything. That includes FPI, FDI, ECBs, all that. So now RBI is giving us that wealth of data, which is very good because you can take a good view on the rupee. Now, what is the first monthly data on current balance of payments telling us? April has been a damn good month because remittances have been 70% higher than the year ago, same month, April. So it's about 16 billion in terms of money come in. And if you looked at the deficit, April trade deficit we already had, that was about 27 billion. But if you added all the entries, you have a current account surplus, which is very, very positive. No gap to fill, even if the FPI sell out. But the FPI sold out more than just this 4.7 billion, which is the FDI data is again very positive. Now I'm coming to the capital account. 7.4 billion compared to 1.6 billion year ago in the month of April. So very good net FDI, but FPI, as we all know, this data we already know, minus 8.7. So that took away all the goodness of the net FDI. And then you have to add other things, like NRI deposits, ECBs, other banking capital. If you added all that, the negative is actually minus 11.3 on the capital account. But because we have a surplus of plus 4.7 in current account, the overall deficit in balance of payments was 6.6 billion. The faster this data comes, it's more consolation for the rupee market. Just a word, yesterday we also got the May trade data from the Commerce Ministry. That again had one important positive news. Exports are at an all-time high. 45.2 billion. Imagine at a time of tariffs, at a time of Gulf War, all these complaints and Indian exports have done very well, but imports are also high at 73 billion. So the deficit remains the same. But the important point is we have some net FDI is good in April, current account surplus in April, and all-time high exports in May. All told, there is some good news in the external front.
All right, take that point, Radha. Good news on the external front. What we'll do is we'll also look at the market, just to keep an eye out on Reliance. That stock has suddenly spiked. Remember, on Friday, we do have the Reliance annual general meeting, and typically ahead of that, we do see some traction on this stock. That big boy has been absent, in terms of its contribution to gains. And now if that wakes up, we'll see a bigger move on the Nifty by its sheer weight. That's Reliance at the high point of trade. But what we'll do is we'll, wrap up on this edition of Chartbusters on that note. Thank you so much for watching from Nigel, me. And we'll take a short break, come back on the other side. The team of Trading Hour will take all the market action forward.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Patakia. Joining me as always is Ritu Singh. Ritu, good morning. We are continuing from where we left off in yesterday's trading session. It's another day of green, but yet again the 24,000 mark proving to be elusive as of now. We are still at the highest point of the day though, and today being the weekly expiry of the Nifty contracts, it's either this way or that as we go into the second half of trade, Ritu.
That's right. Good morning, Hormuz. Yes, all of those factors to keep in mind, but still above that 24,000 mark, like you said, but we're trading on this optimism rally that continues in trade today. Look at the macro parameters as well. Crude oil staying below $84 a barrel even today. You have the rupee also relatively stronger in trade. 94.63 is where we're at. Crude at below 83, in fact, and the market breadth is looking, at least in favor of advances so far. You have almost two stocks that are advancing for one stock that is declining, and the India VIX is also down about 5% today. So it's looking like a good setup. Bank Nifty, now there's been a bit of a weakness there, perhaps, some buyer fatigue, which you pointed out in the morning, after the kind of rally we saw. It's down by about 47 points, yo-yoing today. It was in the green just some moments back, now in the red again. The IT pack is doing relatively better, almost up 1.5%. But for the, both the frontline indices, gains of almost 0.5% each. So it's looking like a good setup. IT, FMCG, all of these are doing well today. The laggards, of course, are metal in pharma. But let's go across to Hormuz again for the top movers in today's market to keep your eye out on. Hormuz has the list for us. It's over to you, Hormuz.
We had spoken about the fact that the 24,000 mark is going to be a very important one for the index for the next leg of the up move. Yesterday, we fizzled out from those levels into the second half of the trading session. Today, we're holding on to 24,950 as of now, but every time there has been a bit of a bump in intraday trade, there has been some supply that has emerged. The dips are getting bought into, yes, but the bulls would now hope that 24,000 is the level that sustains on the upside going into what happens to be the monthly expiry session in a couple of weeks from now. Well, we had asked a question in the morning that if banks show some exhaustion / profit booking at higher levels, who puts their hand up? It is IT that's putting their hand up today, and the Nifty IT index is the one that's contributing to the gains in today's session, led by HCLTech and a lot of others. And the other one that's putting their hand up today is Reliance Industries. That's the one that is also at the highest point of the day, 1.5% higher for Reliance, and that too is contributing to the gains on the index in today's trading session. We spoke of IT. HCLTech is leading those gains today, of course, on the back of the Sarvam stake buy that it made earlier late last evening. Coforge, Persistent, TCS, all of them contributing to the gains in today's session. What's sulking though are metals, and it's not today that metals are sulking. It's of course it's a big story of the day. Nigel will speak about those in just a bit. But Vedanta Aluminium, a second straight day of lower circuit for the stock after its listing yesterday. Hindalco is down in 9 out of the last 10 trading sessions. It's another 3.5% knocked off today, and Nalco, the top loser on the metals index, 5.5% lower in today's session. Among the newsmakers today, Suzlon is one such name. The stock was up around 6% earlier. It's cooled off slightly from the highs. Grow had a big block deal taking place earlier in the day, so 4% lower on that stock, seeing some profit booking from higher levels. PG Electroplast 7% higher today. Of course, the onset of the delayed monsoons and of course the extended summer is boding well for such companies. And GIC, of course, after the OFS that has opened for non-retail investors in today's session. You take a look at some of the small cap buzzers in today's trade. VA Tech Vabag, of course, for the West Asia exposure. Premier Explosives doing well. Godavari Biorefineries, after the patent that it received from the Japan Patent Office, 6% higher on this one as well. And lastly, stocks at 52-week highs today. Look at Dr. Lal Path Labs. The stock is up 10% at 52-week highs in today's session. GMR Airports has cooled off from the highs, but some positive brokerage updates coming in over the last couple of days for the stock, and that's doing well too. A 52-week high for GMR Airports, Ritu.
Well, thanks very much for setting that up for us. But let's zoom in on the aluminum stocks that Hormuz was just referring to. All of them down in trade today. That is our big story of the day. All of these stocks, Nalco, Hindalco, Vedanta, reeling under pressure after prices have hit their lowest levels in nearly 2 months. Nigel D'Souza joins us now to break it down for us. Nigel, the stock prices reflecting what's happening in the prices overall, and even the newly listed Vedanta under pressure again.
Well, that's right. The easing of geopolitical tensions following the US-Iran peace deal is leading markets to reprice that war premium that it had bid up. And that's what resulted in aluminium prices moving up. Now, remember, aluminium prices have corrected by close to around 10% from the recent highs after touching the highest levels we have seen in the last 4 years or so. And those recent highs were hit towards the end of May 2026. Now, what was the rally driven by? Well, it was driven by concerns over potential supply disruptions in the Middle East. We must take note, though, that even after this 10% correction, the current prices of aluminium are above analyst estimates. They are factoring in aluminium prices at around $3,000 per ton to around $3,200 per ton over the next 2 years. But why does the street believe that prices will be supported? Let me give you a few reasons. First, the GCC countries as well as Iran put it together, they account for around 7 million tons of aluminium smelting capacity. And parts of this capacity, they were affected and they were impacted during the US-Iran conflict. Now, restarting of some of these affected facilities could take as long as 9 months, which will limit any kind of big supply response. So that's point number one. Second, China's is the world's largest aluminium producer. It continues to operate under a production cap of around 45 million tons. And they're already running at around 97% utilization levels, which means China cannot just come in there and push out a lot of supply. Point number three, the long-term demand drivers, well, they remain intact. You know, we talk about rising investments in AI, in data centers, renewable energy, broader energy transition, all of them. That's what will give aluminium consumption a push globally as well. So the bottom line is, though the geopolitical risk premium is fading, the broader supply-demand balance suggests that global aluminium market could remain in deficit in the next few years, which could provide some kind of support to prices after this recent correction. So the broad numbers Street is working with is around $3,200 per ton for this year, and then coming down to around $3,000 per ton. So we'll have to keep an eye out whether or not that range gets broken. But for the time being, it appears there are factors in place that that particular range gets defended. Back to you guys.
Nigel, thank you for putting that together for us. Explains the kind of pressure that you have seen in a lot of these aluminum companies, Hindalco, Nalco, Vedanta Aluminum, of course. Profit booking, one factor, yes, but as Nigel mentioned, there is pressure on the global aluminum prices there. So 5.5% lower for Nalco. Take a short break. On the other side, we put the spotlight on the bond markets with Manisha Gupta. Welcome back. As promised, shifting focus to the bond markets, then Manisha Gupta is joining in with the latest. Manisha.
Thank you so much for that. Well, I'm looking at the bond markets, which are holding firm. The rupee slightly off the kind of highs where we closed it yesterday. But importantly, it is the crude oil prices still trading below $85 a barrel. We have seen 6% of a decline in crude in the previous week, 5% down yesterday. It's trading quite flat right now. And that's exactly what the markets are taking cues from as well. But interesting numbers coming in from the bond markets, where for the month of June, the foreign investors have pumped in nearly $1.84 billion in Indian bonds. Well, this clearly is the highest in last 16 months, and the push or the reversal has come in sense of inflows after the tax cuts on FI bond investment that has led to record inflows coming back into the space. And then the rupee has strengthened. You've seen bond yields decline. All of that has been quite supportive as well. What the markets will watch out now, of course, is the global monetary policy meetings between US and Japan and Australia and UK. It also is going to be about the peace deal signing on 19th of June. But it also is going to be about the SEBI board meeting, which is also on 19th of June. Apart from various points and steps that the board perhaps could be saying yes to, a couple of things that the bond markets will watch out for. One, of course, is the proposed green channel framework timeline to launch standard AIF schemes. This is to be slashed from 30 days to nearly 10 is what the markets believe. The second one, of course, is about the online bond platforms. They may be authorized to distribute the 54 EC capital gains tax serving bonds and financial products regulated by IFSCA. So these are a couple of things that this market will also watch out for from the SEBI board meeting on 19th of June.
All right, Manisha, thank you very much for bringing us all of the action from the bond street, from where we'll shift to the primary market actions. And we have Nexus Ventures and Peak 15 backed Turtle Mint Fintech's IPO, which is all set to open on the 19th of June. My colleague Yash had the opportunity to speak with the management to understand their business model and the strategy around how the company wants to use the proceeds from this IPO. Here's an excerpt from that conversation.
When we started off, when we filed the DRHP, obviously we filed basis the provision numbers of what would be the OFS. But as we have reached closure, we've arrived at the final number, and that's how the number is what you see in the RHP. Those are the final numbers that are reflecting in the RHP.
Okay. One question as far as the valuation itself is concerned. I think the last round of private market fundraising that happened in 2023, the valuation which that fundraising had given to the company was upwards of about 6,000 crore rupees. The valuation at which the company is coming out with its IPO is much lower. Normally, we see this the other way around, where valuation between the private market and the public market often tends to be on the higher side, with the public market having that advantage. Nothing has changed as far as the numbers is concerned in terms of any aggressive move on the downside. The revenue has grown by about 40% between that period. The loss at the adjusted EBITDA and the net level has remained largely the same. What has been the reason then for that valuation to come down by about 1,500 crores odd?
Right. So first maybe I'll also talk about what is in. So we are here to build the business over the long tenure, over the next decade and beyond that. So for us, from a point of view, it's a long journey. Between me and Anand, we are looking at building this business and creating a large ecosystem here. Specifically from a valuation point of view, I think the market has been reset. We did it in the last round was in FY in 22. The market has got reset. We have had feedback from the bankers and the market, and basis that the valuation has been arrived at. And I would say in the longer journey, from a long period point of view, there is good value to be created for the incoming investor, for the incoming retail investor, and that value will reflect in the growth that the company is poised to see, especially in the B30 market. We hope to deliver very high quality distribution ecosystem using technology in the country.
Okay. One question, and I know you spoke a little about the business in the beginning itself, but I want to understand this a little further. You distribute various financial products, insurance, mutual funds, credit cards, loans. Normally, there's a distributor which does that by itself on its own platform, but you have a slightly different model, right? Help us quickly and briefly understand what that model largely is, and in terms of the commission that you derive from, let's say, the insurer or the mutual fund company, right? Assuming 100 rupees is given to you, Turtle Mint, as the commission part of selling a product, how much flows to the end person who's actually selling it on your platform?
The thesis has been for us has been that the last mile person who will become the potential policy holder needs an advice from somebody who is within their social network. Somebody who is invested in his financial well-being will give him the right advice and ensure that is protected for servicing and also at the time of claim. So we envisaged a platform that will drive the last mile granular reach that is needed. And that's how we sort of built ourselves around the POSP model. POSP is a point of sale person license under the regulations, where a person is able to work under a broking company and then distribute products that are made available under the retail lines by the broking company. And we bridged the gap by creating a technology that allowed the POSP to provide the last mile advisory. So we provide POSPs onboarding. A lot of the POSPs who come onto the platform do not have any, 80% of them do not have any background in insurance. So we bring them in. We create an augment extra income for them, give them livelihood. They go through their training on the platform itself. Turtlemint Academy trains all of them across various kinds of training requirement depending on what they are. They could be a housewife, a retired bank employee, a person who is a student. So depending on their background, they go through a training and then they come onto the platform. All of this is available absolutely free of cost. They can download the app, they can do the training, all of it is free of cost. Once they've done that, then we help them engage with their potential policyholders or consumers. At that point in time, we have an expertise, because this is an expert-led product distribution. We have an expert available who will give the need-based solution to that person's social network. That is available through our expertise, and if we ensure that policy recommendation algos protect the consumer's interest at the time of buying the policy, so that he's not out of money at the time of claim. And then the policy gets issued. All the servicing, claim support and all of that is provided by Turtlemint itself. So from a revenue point of view, we get revenue from the insurance companies. What we measure is service EBITDA in the company. So from the revenue, there is cost of all of this that I just mentioned. And then we also have a branch-wise network, because we also have an offline presence in about 80 plus branches. And after that, whatever is remaining is what we measure. So that measure is service EBITDA. In the last...
That is 11%.
That is 11% in the last, in the 9-month report that we came out.
Correct.
And that is dramatically improved between 23 to now. And we see the platform is also scalable. So we see significant improvement that has come in the last 2 to 3 years.
IPO bound Turtlemint in conversation with Yash. Take a short break. On the other side, if we return with a deep dive into India's microfinance industry with Alok Mishra of MFin. Stay tuned.
India's microfinance sector is showing early signs of recovery after nearly 2 years of stress, with the industry's loan portfolio expanding sequentially for the first time in 7 quarters. Asset quality has also improved to pre-March 2024 levels. Now, according to the latest edition of the Microfinance Industry Network, or MFIN's Micrometer report, the industry's gross loan portfolio came in at 3.25 lakh crores as of the end of March, and that was registering more than 3% quarter-on-quarter increase, led by quarterly disbursements of more than 77,500 crore rupees, which is the highest seen in the last 7 quarters. Alok Mishra, CEO and Director of MFIN, is with us for more on this. Mr. Mishra, good morning. Thank you very much for joining us here. Let's start with that increase that we've seen in the portfolio. Yes, this is an increase for the first time in 7 quarters, after a contraction, but year on year, the book is still down. What would you attribute this to? Is it just a seasonality factor, or do you see a sustained recovery from here?
Thanks for having me here, and good that you brought out this point. I think while the disbursements have grown in the fourth quarter of the last year, and the portfolio, which was contracting for last 6-7 quarters, first time in this quarter has inched up, I think it is a sign that the industry's funding winter is coming to an end. The portfolio quality you already referred to, it has already come to a level which was even better than March 24 figures. That's the confidence, and the government's announcement of the guarantee scheme that adds to the headwinds, to the tailwinds which we are having. And that will lead to, I think, a sustained growth in future, because when the sector's portfolio has come down to 3.25 lakh crores from the earlier high of 4.33, we are still not happy with the growth, because there are still many clients who are waiting for credit, and the market is huge. So I hope that this sustained recovery will continue, and we will continue to grow hereafter.
Mr. Mishra, thank you for joining me. I was very tempted to ask you this question, because this has been a major talking point now over the last few days. Just as the industry is showing signs of recovery, as you also mentioned, there is growth, asset quality is improving as well. We are now faced by the prospects of a delayed monsoon, a subpar monsoon as well, particularly in the northern and the central parts of the country. Does that derail any potential further growth prospects, or fact that it puts the brakes on the asset quality, seeing any further improvement as well going forward?
Well, I fully agree with you, because even in our guidance, we have said that people have to be cautious, lenders have to be cautious. On the weather front, we have to wait and watch, because my past experience shows that if the rainfall is around 85% of long-term average or 90%, we should be able to get through. If it is more severe, it will impact the rural economy. So disbursements will have to be cautious. There can be slight impact on the portfolio quality also, but if the disbursements are tempered, and if the disbursements take care of the rainfall impact, I think we will be good.
But Mr. Mishra, weaker monsoons is one factor. What's happening in West Asia is another factor. You spoke about, the need for tempering disbursements, and yet in the previous answer, you were talking about how disbursements may pick up thanks to ECLGS 5.0, where indeed, MSMEs are the largest beneficiary. I mean, how do you expect that to play out then? I mean, is that also a sign that the bottom of the pyramid is continuing to see some signs of stress, this, increased traction on ECLGS on one hand, and also, so far, what has materialized from the West Asia crisis overall in terms of asset quality?
Well, on the monsoon is a thing which we'll watch out. As I said, the predictions are there, but hopefully by God's grace, we will get through by 90% of long-term average. On the West Asia crisis, while the peak, I think we have already seen it. It has not resulted in much of an impact, or I would say any impact on the sector. Yes, there would be some cases of stress due to inflation on the poor person's budget. But now, if you see in the last 2 days, we see signs of resolution of even the West Asia crisis. So hopefully, in next 3 months, we will see easing out of the impact of the West Asia crisis. But on your question, when you said that I talked about sustained growth as well as tempering credit, Well, I didn't say stopping credit. It is tempering credit because we have to be realistic. Areas which are badly affected in case the monsoon becomes bad, we have to be cautious about credit growth, but not stopping the credit growth.
Okay, what are you factoring in then? Because the 30 to 180 day portfolio at risk, the asset quality there has actually improved quite sharply from 6% to 2%. Is this the bottom, because of the stress that you're building in, because of the monsoons and what happens in West Asia? And, as a result, do you see banks pulling back more? Or what are your conversations with banks indicating?
Well, people are still doing the wait and watch. We have to see because monsoon is still a prediction. What actually happens, we have to see. Banks, when you say pulling, you are talking about funding?
Mr. Mishra, we're asking about funding. Yes, so how is that environment evolving for the MFIs currently? Because your report mentions the fact that there is a pronounced funding squeeze for the smaller ones, and 11 out of your 38 members received no funding at all in the previous financial year. What is stopping the lenders from lending despite there being improvement in asset quality, and what are the conversations that you are having with the banks?
The funding squeeze, which you very rightly mentioned for the small players, is because the funding which has come or which is coming normally is mainly for large players and maybe some medium players, but small is the sector which is very badly affected. And we hope that the 5% quota which has been given under the CGSMF scheme of the government, and the government has now increased this validity period up to August end, that will help the bankers have some confidence because generally it is, I would call it sort of a cherry picking, because you try to lend to the best ones, but we have to understand that the small ones play a big role. We are talking to the banks. Now the government's guarantee cover is also there. So kindly start lending to the small, because you have to lend 5% of it. And that will, I hope, in the next 2 months, the funding squeeze on the small players will also get resolved. I hope so.
Right, Mr. Mishra, thank you so much for sparing time and joining us today on the entire trends that we are seeing in the microfinance industry, and of course the upcoming headwinds as well due to a potentially delayed monsoon. We'll take a short break here on Trading Hour. The market still continuing to hold on to gains of around 23,930. But just before we do that, Rajesh Palvia from Axis Securities is joining in for a quick chart check as well as some trading ideas. Rajesh, good morning. Thank you for joining in. Well, every time over the last couple of days that the Nifty has tried reaching that 24,000 mark, there has been supply. Yes, 23,800 has been crossed. We are sustaining above that. But how important now is 24,000 for the next leg of the up move, and your trading ideas as well for the morning?
Yeah, hi, good morning. Yeah, so 24,000 is having a significant, call writing activity in last couple of days. Still, that level is not breached by the market. So until these levels are not, breached by the Nifty on the higher side, we may remain in the range. But yes, on the downside, 23,800, 850 may act as a good support area for any minor decline. Market has moved up from 23,300 to 24,000 almost. So some profit taking is happening in the market, but the way market has broken out the major supply zone of 23,500, 23,800, and most of the sectors where we have seen underperformance has also managed to give breakout on the near-term chart. So I think trend is likely to exhibit on the bullish side once we able to take out 24,000, 24,050 level. Then next upward target for Nifty we could see towards 24,400. So buy and decline would be a strategy with stop loss of 23,800 needs to keep as a stop loss. Bank Nifty has also managed to give breakout on the near-term, short-term chart. But yes, especially in today's session, some profit taking is attracting on higher level. But again, looking at the near-term, short-term structure, we do hold bullish view for Bank Nifty also. And till Bank Nifty is trading above 56,700, I think any minor decline should be used as a buying opportunity. And once Bank Nifty manages to surpass 57,400, the next target on the higher side we may see towards 58,000. Moving to the stocks, two stocks idea, both on the buy side. First one is SRF. SRF managed to give breakout of falling trend line on the daily chart, almost trading near to day high. Looking at the near-term, short-term structure, the breakout which we are observing on a daily, weekly time frame, we believe that this momentum can extend further. Possible up move towards 2850, 2900 we may see for SRF. So SRF is buy with stop loss of 2730. Another stock is Phoenix Limited. Here also we have witnessed a stock managed to give breakout of multiple supply zone on the weekly chart. And looking at the breakout on a weekly chart, we do hold bullish view, expecting target of 1940, 1950. One can buy with stop loss of 1855.
All right, Rajesh, thank you very much for joining in with those ideas. Appreciate your time here on CNBC TV 18. Slip into a short break on that note. Up next, we'll get you market fundamentals with Mukul Kochar from Investec Capital Services. Stay tuned.
Welcome back. Yet again, supply pressure emerging near that 24,000 mark on the index. We are off the highs of the day yet again. Mukul Kochar from Investec Capital Services is now joining in. Mukul, good morning. Thank you for taking out time. I was reading a couple of contrasting reports on the EMS space today. You had a downgrade that has come in for Dixon from CLSA, while Motilal Oswal is very bullish on the entire space. What camp are you on? Is this memory shortage problem likely to impact the EMS space a lot more than their potential to overcome it?
Almost, thanks a lot for having me today. I'll just take a step back. Manufacturing exports in general is going to be probably the strongest investment theme in India over the next 5 years. Yeah. And I've spoken on your channel in the past, the reasons being that there's decent amount of capital expenditure that's going in the space in manufacturing in general. Secondly, the trade treaties we have signed over the last year means that trade connectivity of India has gone up from 22% last year to 73% today. Essentially, the government bit the bullet against the agriculture lobby, and and probably has done, in hindsight, we'll find out, the most consequential reform of the last 5-6 years, which is signing up trade treaties and opening barriers to Indian goods in overseas market. In that, electronic exports is probably the best position. Yeah. EMS is one category in that. Dixon has its own specific issues. We cannot speak company specific on a public channel, but I can tell you that the space itself is exceptionally attractive over the next 5 years. There are companies we track over there that are doing very well. Dixon is in the EMS space, but there's an ODM space where companies design complete products and give to the OEMs to sell. That space is doing very well. Defense electronics is doing very well. India is deepening its footprint in the electronic space. This is one space which is definitely a space to watch within the manufacturing ecosystem. We're very bullish on this.
Okay, Mukul, are you equally bullish on the aluminum space? I mean, on the back of what's happening with prices, with this, hopes of a peace deal between Iran and US, the prices have come off, the stocks are seeing some reaction after the kind of rally that we've seen. But given the overall scenario where, again, we had, earlier on the channel, Nigel pointing out to the fact that prices will see some support going forward on account of some sort of deficiency that is expected to be in the next 2 years. Do you see a further upside? Is this a buy on dips opportunity, or your view on the aluminum space in general?
So aluminium in general, I mean, is a big part of aluminum production cost curve is energy. Yeah. If you think energy prices are going to take a dip, you can't be as constructive in aluminium to start with. That's the first thing. Yeah. So, and aluminium has had a massive run expectedly since energy prices have gone up as the Middle East crisis has unfolded. The second factor about aluminium, of course, is aluminium gravitates towards countries with low energy costs. So a lot of aluminium smelters have focused their production in the Middle East, Russia, places with cheap energy. And part of that supply got cut off during the Middle East crisis, which we'll see on Friday how things pan out, which is likely to open up again. So, looking at trends, we are not as constructive on aluminum out here. I can understand why the market is reacting after a very sharp run up.
Is the thesis the same for gold financing companies as well? Now that this fear of the Fed raising interest rates has receded, at least as of now, the gold prices are seeing some stability in the global markets. But for an industry as vastly penetrated or as unorganized as the gold financing industry is, Manappuram, Muthoot, of course not specific stocks, but is the industry poised for a bigger runway ahead? And do you see more banks and financial institutions also venturing into it compared to the ones that already have?
So once again, good question, Hormoz. If you analyze the gold financing companies, a lot of their loan growth actually has come from the price of gold. Yeah. So you're bang on when you just link the company's performance, stock performance going forward to the price of gold. Honestly, I don't have any sort of speciality in trying to predict the price of gold. The only thing I know it's high. And I have a view that central bank buying has what has contributed to the gold run up in the past few years, in addition to lack of confidence in reserve currencies. I'm not sort of going to make a prediction on gold prices, but you're right in linking the gold price performance to some of these companies' performance, as the number of people borrowing has not grown, but the loan growth has actually come from gold price, right? So I'll desist from saying more than that, because then I'll go into the company domain, which I don't want to.
Mukul, just to close, quick thoughts on the NBFC sector as well. Because of this news development, bond yields have cooled down. So a near-term positive for them. Do you see some bit of a rally continuing?
Yeah, so NBFCs have already had a good run over the last year, 2 years. We are actually sort of, while you're correct that the fear from bond yields is receding, we actually, for the larger NBFC, worry about increasing competition and the fact that their margins have expanded already. So we are not as constructive on the NBFC space to start with. We see good value in some of the banks, the larger banks as well as the PSU banks, and some of the private tier 2 banks. So we see better value there. NBFCs already had their day under the sun. Margins are high. They've run up. Even though the fear of rate increases is receding, I think some of the other concerns remain, and the prices are up.
Mukul, pleasure having you. Pleasure having you as always, Mukul. Thank you so much for sparing time and joining us today on the show. Take a short break. Back with more on the other side.
Welcome back. Let's get you the macro signal for the day. And today we're talking about the debate around the MDR on UPI, which is back in focus. Now, a senior finance ministry official has told CNBC TV18 that the government is evaluating different scenarios to ensure UPI's long-term sustainability, and they hope to arrive at a balanced approach going forward. Now, simply put, MDR, which is merchant discount rate, is a fee that is paid by merchants on digital payments, and it's typically shared among banks, the payment processors, and the payment networks. Now, for regular UPI transactions, MDR has been zero since January of 2020, and that means consumers like you and I don't have to pay any fees to pay UPI, and merchants also don't really pay MDR on standard UPI payments. But it is worth noting that UPI is not entirely MDR free today. So MDR already applies on RuPay credit card transactions that are routed through UPI for transactions of more than 2,000 rupees, and charges vary by merchant category and merchant type. Now, the debate has intensified now because of UPI's extraordinary growth. Look at the transaction volumes. They've surged from just 2 crores in FY17 to more than 24,000 crores as of FY26, and transaction values have jumped all the way to 314 lakh crore rupees. In fact, today, UPI processes around 23 billion transactions every month and accounts for nearly half of all the global real-time payment volumes and handles nearly 30 lakh crore rupees worth of transactions each month. Now, to support the ecosystem, the government has spent more than 7,000 crores on UPI incentive schemes in the last 4 years alone, with about 2,000 crores that was allocated in this latest budget as well. RBI has also provided nearly 1,500 crores in support for payment infrastructure deployment through the PIDF fund, and yet here's the conundrum. The industry estimates suggest that the cost of maintaining and scaling the UPI ecosystem now exceeds 20,000 crore rupees annually, according to the Payment Council of India, and that raises questions about the sustainability of the current model. The government's position is very clear. UPI should stay free to drive digital adoption, but the policy challenge here is finding a way to keep UPI free while also ensuring that the ecosystem remains financially sustainable. Take a look at my conversation with Dr. Abhijit Foucan, the economic advisor at the Department of Financial Services, Ministry of Finance, on this very issue.
The journey probably 4 years back when the MDR on UPI was made zero, especially during the COVID period, the government, prioritized the entire strategy towards digital first approach. And in order to ensure that the citizen able to financially transact free of cost, certain digital payment transactions were made.
That was 10 years ago. Now we're doing 23 billion transactions a month.
So what am I saying is that while the MDR was actually, made zero in the last 4 years, the government has actually come up, a couple of steps. For instance, the government has been implementing an incentive schemes in the last 4 years. And you would appreciate that we have spent over 7,000 crore to the incentive schemes. On the top of that, the Reserve Bank of India, they have also subsidized the deployment of payment infrastructure.
Which just ended in December, if I'm not wrong.
They have also spent 1,500 crore. So roughly on an average, RBI and Government of India putting together, spending over 2,000 crore every year. Yeah. Even then, what I feel is that though UPI has been scaling, and the associated cost to the ecosystem has also, gone up substantially over time. I think we need to take a balanced, approach to understand and, come up with a kind of a solution that which will not only support the growth of UPI but also make the payment system sustainable.
Fair enough. There's a budgetary allocation for this pretty much every year. You were talking about the RBI incentive scheme that has unfortunately now ended, but the industry estimates the requirement is upwards of 10,000 crores a year, for instance, whereas the budget may provide 1,500, 2,000 crores a year. How do you bridge that gap?
I would disagree to, make a firm commitment. But I would like to actually submit the audience here that we have been constantly, engaging with the ecosystem industry. Yeah. And we have received feedbacks about the sustainability of UPI system. We are looking at different scenarios, taking into account both the UPI ecosystem as well as the, sustainability of the, ecosystem partners. And we are hopefully in times to come, we will come out with some kind of a, balanced approach.
Take a short break. Back with more on the other side. Stay tuned. We're about to head in the second half of the expiry session. Still some supply emerging at higher levels. 24,000 continues to remain elusive for the index. But Ritu and I take your leave on this edition of Trading Hour. Thank you so much for tuning in. Halftime report on the other side.
Stocks open higher after US-Iran sign an MOU. Expectation of inflation easing and supply chains normalizing aid the sentiment. Realty and IT are the big gainers, while metals and healthcare track.
HCL Technologies will invest over 1,400 crore rupees to pick up a tad higher than 10% stake in Sarvam AI owner Exenwise. The IT majors bet on sovereign AI is another bid towards becoming a top AI solutions company. The stock climbs.
Stocks of aluminium makers slide after the metal sees a 4% drop overnight as the war premium fades. Expectations of aluminium capacities in the Gulf coming online, though some were stuck in the conflict, aids the decline.
Monsoon in June is set to disappoint, with the deficit seen scaling to 40% in a week, says SkyMet. Rain shortfall in central and eastern India are big worry ahead of the sowing season. Monsoon in the west may also be delayed by over a week.
Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batran, with me Sonal Bhutra as well as Vinny Motiwala. Well, it's turning out to be a day where we're just about consolidating after the big gains that we saw in yesterday's trading session. So the Nifty is not being able to surpass that 24,000 mark. So 23,927 is where exactly the Nifty is at this point in time. In fact, the mid caps are also just about consolidating along with the Bank Nifty. What stands out in today's trading session, however, or yesterday's, was the net buy figure of around 200 odd crores, which came in from the FIIs. So that was definitely a positive. Remember that the FIIs have sold around 46,000 crores in the month of June itself. It is the first FII buy figure that we've seen in the month of June coming through. And however, it is important to note that at the same time, in the month of June, DIIs have net bought around 61,136 odd crores, surpassing that net buy figure. But nonetheless, let's see whether this continues or whether this is a flash in the pan at this point in time, but definitely a positive sentiment.
Hey girls, good afternoon. While we're talking about a positive remark coming in as far as the US-Iran tensions are concerned, the domestic tension continues to be around deficient rainfall. And that is something maybe the markets are factoring in when it comes to the fall that we've seen from the highs of the consolidation below the 24,000 mark. Northern areas which are important ahead of the sowing season, there are huge parcels of land which undergo sowing during the season. That is where deficient rainfall of around 40% is putting markets under some pressure. Although on the flip side, fertilizer stocks are buzzing on the upside. Big moves there, so watch out for that one. Realty has made a comeback. Second day running, that index is doing really well. It's up around 1.5%. So there is some sentiment positivity that has rubbed off on realty names as well, that there could not be any further commodity price hikes. Having said that, a very stock-specific market, very sector-specific as well, and we'll discuss that through the show today, Vinny.
Absolutely, that's what we'll be discussing through the show as well. As of now, Nifty, yes, 23,900 level, 76-point uptick for the Nifty. After the last three trading sessions, we've gained. This is the third trading session we're seeing a gain coming in. But, obviously, first up, let's, talk about which are the stocks that are moving around in the trading session as well. And to take us through that, Hormuz joining us from the wall to take us through those details. Hormuz, over to you.
Good afternoon. And, it's been a very stock-specific market, as Sonal was highlighting, right? The fact that a lot of these broader market names are doing well, but the one segment that's not doing very well are the metal stocks and the aluminum plays in particular that are under pressure in today's session. Hindalco is down in 9 out of the last 10 trading sessions, a second straight lower circuit for Vedanta Aluminum, and Nalco, the top loser on the Nifty Metals Index, 5.5% lower on the stock. On the flip side, though, the one stock that continues to extend its gains is Sonata Software within the mid-cap IT space, 18% higher now on the stock. At the start of around 11:30, the stock was up around 12 to 13%. The biggest single-day gain that the stock has seen since November of 2021 has Sonata Software. A stock that's at 52-week highs today is Dr. Lal Path Labs, is among the top gainers on the Nifty 500, but it has cooled off significantly from the highs of the day. At one point, the stock was was up almost 10%, has gained in 6 out of the last 7 trading sessions, has Dr. Lal Pathlabs. Some of the other names that are doing well in today's trading session or not so. One of them, of course, is a news flow driven name, is GIC. The OFS opening for non-retail investors in today's trading session, 6% lower on the stock, and as of noon the non-retail portion has been subscribed around about 10%. So not a very hefty response as you've seen to the previous OFSs. Of course, there's some time still left, so maybe picking up in the second half of the trading session is GIC's OFS. And lastly, some of the other names, the real estate names as Sonal was highlighting, they continue to rebound as well. Second straight day of gains for the index, led by Aditya Birla Real Estate. Brigade Enterprises turns X bonus tomorrow. It's a 1:3 bonus. Today is the last day. It turns the record date is tomorrow, and Phoenix Mills too seeing gains of around 2% in today's session. Back to you guys.
Okay, Hormaz, thanks so much for that. But I think we have Nimesh also joining us now. And this is why, because we have a brokerage that's come in from CLSA. They're downgrading Dixon Technologies to an underperform. Let's go across to Nimesh to take us through the rationale behind this and what's happening there. Nimesh, over to you.
Thanks, Vinay. So the stock is at a day's low. It actually opened 2% higher, and then from there it's fallen almost 1%. So 3% down from the intraday high, largely on the back of the CLSA downgrade. So they've downgraded the stock to an underperform from a hold, and they have a target price of almost 10,400, which means a 12-13% fall even from current levels. Now they believe that the recent rally on the back of expected approvals is overdone. They say that the elevated memory price is going to have an impact on Dixon's organic volume growth for FY27. Not only that, a delay in the backward integration is also going to further add and have a depressed earnings for the next 1.5 years. That's basically the call in which they've downgraded the stock today to an underperform. At 46 times on FY28 PE, they believe that the risk reward is unfavorable at current price, and hence a downgrade. So it's kind of an anti-consensus call from CLSA. They've downgraded the stock to underperform today, and they have a target price of 10,400, a 12-13% discount from current levels.
Okay, all right, Nimesh. Thanks very much for bringing us that interesting brokerage call. So Dixon Technology is currently just about lower by around 1% underperform rating coming in from CLSA. We'll do one thing. We'll take a short break. But up next, Vinny is going to be discussing the latest hiring trends in India. So we'll be discussing these key trends, and we'll take that conversation forward with the CFO of Team Lease Services as well. So stay tuned for that conversation.
Welcome back. Well, white-collar hiring remained stable in May despite weakness in IT recruitment. With AI changing the jobs landscape and hiring preferences shifting, Winnie is joining us with more details on what the hiring trends look like. Winnie.
Hi, thanks so much for that. So obviously, let's just start with 2026 and how the year has gone to understand a bigger picture of the hiring trends, right? In January, we started seeing a modest growth driven largely by non-IT sectors and fresher hirings. Then moving on to Feb, we saw 12% growth. That's strongest that one has seen in 2026 in terms of the month growth that one has recorded for the year. IT showed signs of some bit of a life, some bit of a recovery in Feb as well. AI/ML, that also saw a surge coming in. Now, as we move on into FY27, that is looking at April and May, momentum seems to be moderating. April, 6% growth. Then May, we saw a further decline. Just a 1% growth is what came in for the overall hiring trends. Now, breaking it down in terms of sectors. Starting with the winners or who did well, AI and ML, machine learning, those were the standout sectors, 22% in the month of May. Fifth consecutive month in terms of growth for AI and ML in terms of hiring trends there. The demand here isn't just a hype. Employers were looking to actively hire more experienced talent in the AI front as well. GCCs was the next one. We've seen this trend for a while. GCC is a bright spot, 8% growth that came in here. Chennai, Hyderabad, Pune, all of these cities were seeing strong growth as well, posting strong double-digit growth in their local markets. Insurance also has seen a remarkable run over the last few months as well. 6th straight month of growth and double-digit growth, 19% growth that came in the month of May. BPOs, that also led to growth, that also saw good growth led by fresher hiring. 29% uptick in terms of fresher hiring. On the flip side, your banking, which didn't do well. 5th month of decline that we saw for the banking sector in terms of hiring trends, 15% downtick there. Telecom also consistently being one of those large sectors which has performed weak in this overall hiring trend. Pharma, that turned negative in the month of May. We had seen a brief recovery, but May was not exciting for them. And IT overall also was down 7% for the month of May. Now, focusing specifically on IT, because this is a sector which affects a lot of professionals. We've seen those global layoffs come in as well. So Jan started muted, then we saw recovery coming in Feb, March, April, slight bit of that gain there. That was some hope that we had there. But in the month of May, again, you're seeing that we're seeing a decline coming in and 7% decline in the hiring trends. Now, here's the real story that comes in for IT, right? And this all data that we picked up is from Naukri's JobSpeak data. Now, it's a tale of two markets. In the month of April, they had highlighted that, roles that are in the 20 lakh and above salary, hiring is very good, growing at 11%. So higher talent, better talent, premium talent, that's doing well. But for salaries in the range of 8 to 10 lakh or employees in that range, below that as well, we're seeing a decline coming in. So professionals in that range are not seeing much of a growth, not much of a hiring coming in for those mid-level roles. That's a negative decline there. Lastly, AI and ML, which has been trending, fastest growing sector in the entire market. Entry-level roles are being watched very closely, but the mid and senior roles are somewhere where we're seeing a bit of a bidding war, more excitement for those AI/ML roles. So that is something that is exciting in terms of the trends. Now let's take this, conversation forward with Ramani Datti, who is the CFO at TeamLease Services, joining us right now. Ramani, good afternoon. Thank you so much for joining us on the show. The point is that global layoffs are there. So a lot of these tech companies have laid off their employees. And seems like all of that has come into India. What we understand and reports suggest that there are a lot of these tech professionals who are looking for jobs. Is that the situation? And given the May data point, you're seeing that 7% decline in IT hiring trends. So are there jobs also for these employees?
Yeah, good afternoon. Yes, you're right. The number of people who are looking out for jobs, especially within the IT space, there has been a hike, especially over the last 2 months. We've been seeing this starting from mid of April to now, because of two main reasons. So one is typically around the appraisal cycle, a lot of people who are not happy with their appraisal, they also start looking out. But more importantly, this spike is mainly driven by the organizations who are kind of in the transition phase in restructuring their headcounts and resources. They have slightly increased their attrition numbers, involuntary attrition, or you may position it as layoffs. So that also has led to this. Having said that, at the same time, there are more and more open positions and open demand coming from the same set of organizations for premium talent, like people who have niche skills like AI, ML, data engineering, or ML ops specialist, platform specialist, mobile-based workflow specialist. For these kind of skill set, there is an increase in demand. And since many of these skills are newly evolving, on the supply side as well, there is some kind of friction between demand and supply. So because of that, for these premium jobs, there is very high demand, but at the same time, at the mid layer, there is a lot of restructuring is happening. In the short run, it may look like the number of jobs are getting crunched or maybe they are getting disrupted, but it looks more like reshaping. AI is kind of reshaping the jobs, like the job roles and descriptions are changing. But in the long run, the kind of indicators that we are getting is that there'll be, again, whatever jobs that we have seen as lost over the last 2-3 months, there'll be an increased demand, because it's not just IT companies. Now, every organization, whether they are into manufacturing or banking or any business, so they all are taking up digital transformation projects, their own internal AI, ML related initiatives for which they need resources. So there will be a lot more demand coming for these kind of niche skill set, cutting edge technology people in the coming months. But at this stage, yes, we are in a transition phase and we are seeing the restructuring happening across organizations.
Okay. Ramani, hi. Welcome to the show. Just wanted to understand how difficult can this transition get in the IT space? Is the worst over is basically what we're trying to assess. Because as of now, reports indicate over 56,000 Indian professionals from global tech companies are looking for jobs. So it seems to be quite dismal at this point, but is this the worst of the transition?
I don't think this is the worst of the transition, because many companies have not even started with their AI initiatives. Maybe we are talking about mainly with GCCs and IT service companies, which are at the forefront of taking up these initiatives, and they have started the restructuring of their headcounts. But the large number of companies across many industries have just started with their AI journey. So there can be a more restructuring and more transitioning of jobs that we can expect in the coming months. But as I mentioned earlier, I think this would be for a for a defined timeline. It could be maybe 2 quarters, 3 quarters. But people who are able to upskill themselves, who are able to adopt quickly to AI and ML related usage and operations, they'll be at a higher demand. And people at mid-level and senior level, the number of job roles may slightly come down. So that's what we are getting a sense at this stage.
Ramani, when we talk about demand being higher for some of these niche or specialized jobs, let's talk about the entry-level salaries as well. Are they coming at a higher level because you're talking about supply side constraints? And generally, what are the kind of hikes that we are seeing across sectors? We are in an inflationary environment. Is it matching up the salary hikes for different sectors and specifically in IT as well?
Yeah, that's actually a good question, because we are seeing some interesting trends even at entry-level hiring. So maybe fresher level, there isn't much of difference. But 1 year, 2 year experienced people, we are seeing companies are willing to pay similar to what they used to pay for 5 to 7 year experience range. Because now organizations are focusing more on practical skills of the candidates instead of their degrees or number of years of experience. See, because this AI, all we are talking about is only 5-year-old, right? So even the best expert in AI engineering or prompt engineering can have only 4 or 5 years of experience. So that's why people who have the ability to quickly upskill or their ability to work with these kind of workflows, even at an entry level, if they have the practical skills, they are getting paid a premium like how it would be for a 5 to 7 year experienced candidate.
What is the premium percentage?
It is varying like to extreme levels. It can be anywhere between 50% to even 100% as well. Because see, also the other interesting trend that we are seeing is the shift in the job, the type of jobs. So more and more organizations are doing project-based hiring. Instead of hiring them as a permanent employee or a full-time employee, they're calling it as project-based hiring, which can be only for anywhere between 3 months to 12 months. Because they are taking up a specific initiative, some AI project, or maybe some mobile platform building, something like that, for which they need this resource for 12 months. So they are willing to pay even a 50%, 100% premium because it's project-based hiring.
So it's more like a consultancy hiring, right? It's consultancy is what they'll be offering. Short-term jobs.
It's a combination. Yeah. It's a combination. Like some people are doing contract-based hiring, consulting hiring, or project-based hiring. So now these things are also, the types of employments are also going to evolve.
And, Ramani, just on an overall perspective, where are you seeing the hiring trends shape up now? Banking has not been doing well in terms of hiring trends. IT hasn't been too exciting in terms of growth there. Do you think these sectors maybe will pick up pace in terms of hiring trends, or maybe the deflation that one has seen in headcounts for IT specifically due to AI, that's something continues to be a pressure?
See, in the short run, maybe a quarter or two, we may not see any major pickup in white-collar jobs for the same reason, because all these companies have started or just now started their AI journey. So 1 or 2 quarters, they may focus more on rationalizing their current headcount. So most of these sectors, at least from our end, the outlook for next 1 or 2 quarters for white-collar jobs is kind of lukewarm. GCCs, we are seeing there is a continued demand. And across organization for the premium skills, there is a continued demand. However, at blue-collar level or where you need feet-on-street kind of roles, there we are seeing a good demand and the hiring trend has been positive.
Sure. Ramani, just before we let you go, just a brief answer on this. Since AI and ML is basically where the focus is, and you've spoken about how people are looking at upskilling, do we have enough of a supply within this space in order to meet the demand?
Honest answer is no, because at any given point in time, we are able to fulfill only 30 to 40% of the open positions that we are getting from our clients. Because on supply side as well, right now, there is a challenge. Because companies are not looking for certifications. Someone getting a certification that they have trained on AI or ML or some of these niche technologies is not getting prioritized by the organizations. They are really looking for the practical skills to have someone to have a core tech stack, at least one tech stack being their core specialization and openness to work with more automated tools. So this is what currently it's looking like. So a simple certification may not help.
Okay.
So yes, on supply side as well, there is a challenge.
Take that point, Ramani. A very interesting conversation, great insights. Thank you so much for joining us and giving us a sense of what the hiring trends are looking like. So guys, it's time to upskill. That's the key takeaway from this, and specialized jobs getting paid maybe 50 to 100% premium than the regular jobs that we've been seeing in the IT industry. Time for a break now. Up next, Sachitanand Utekar of Trade Bulls will join in with some trading strategies on the other side. Welcome back. You're still tuned into Halftime Report on CNBC TV 18. A slight uptick in the markets, not a big one, but Nifty is attempting some recovery from the lows of the day. So which way will things go? What are the next important levels on the index? Sachidanand Uttekar, VP Research, Derivatives and Technicals at Trade Bulls, is joining us now. Sachidanand, good afternoon. Thank you for joining us. We continue to defend that 24,000 mark. At least there's some resistance there. What are the charts suggesting now? Will we see an uptick from here on or consolidate at these levels?
Good afternoon, Sonal. Sonal, clearly after a strong rally that we have witnessed in the last two trading sessions, the Nifty is trending away from its short-term averages. But it's a good sign if you look at both the momentum indicators, they are positioned well. In fact, there's a good chance that we may surpass that 24,000 hurdle in a day or so, and we may see the Nifty, scaling towards 24,400, which is possible in the coming week. So I think for the day we may see this particular consolidation, but even if we see a decline, I think that decline could be healthy. We are expecting that eventually the Nifty would scale towards 24,420. So a decline towards 23,800, one can again utilize that particular decline to create fresh long positions. One can keep a stop loss at 23,780 on closing basis and expect at least an intraday move towards 24,000. But eventually, going forward, we see this Nifty scaling towards 24,420.
Sachidanand, afternoon. Which are your top bets right now then in the market that you're looking at?
Good afternoon, Vinny. Banking is something which is still interesting, and if you look at the space, HDFC Bank has not contributed enough. But if you look at the way its weekly RSI is positioned, there's a clear-cut positive divergence which has been exhibited. This week, started with a positive stance over and above its 5-week exponential moving average resistance. Now, this particular level has become a support, and if you look at the way its ADX is positioned along with the 5 and 20 exponential moving average crossover, there's a good sign that there could be fresh momentum developing in this particular counter. Hence, we are still recommending building fresh long positions in HDFC Bank. One can keep a stop loss at 766 on closing basis and expect a rally towards 805. The other stock which is looking interesting right now is DMart. Now, if you look at the last few months, the stock was in a low top, low bottom sequence. But in the last few trading sessions, we have seen a good base building action here. The support at around 4180, 4100 has been very significant. We have already seen a breakout from a declining channel sequence, and it has also surpassed its 200-day exponential moving average today. So we are expecting that there could be a good rally in this particular counter. So expecting a price move towards 44.30. And hence, we are recommending fresh long positions in DMart. One can keep a stop loss at 4110 on closing basis.
Okay, all right. Well, we have a couple of queries. We have Anjali, who's written to us from New Delhi. She holds 150 shares of at 160 of ONGC, and she's asking if she can book her profits on this one. What would you recommend, Sachidanand?
ONGC, it is in a trending mode right now, but the trend is on the lower side. If you look at the sequence, it has entered an oversold kind of a trajectory. So probably we may see a bounce back in the near term. But from a major trend perspective, it still remains weak. We are expecting that there could be further downside towards 220, 210 kind of a zone. So in case if a bounce back occurs, I think 250, 255 could be a good zone wherein positions can be, booked.
Okay, take that point. So that's on ONGC. We have one more query, Sachidanand. Ashish Kumar is writing to us from Mumbai. Holds 300 shares of Tata Motors passenger vehicles, the PV business that is, at 400 rupees, and asks whether to stay invested or exit at current levels. Chartically, what do you make of this one?
Well, I think the trend is, improving. In fact, if you look at last 2 months, we have already seen a good outperformance by this particular counter. There are good signs of fresh impulse wave which are forming, and even right now the consolidation that we have exhibited at around that 400 370 mark, I think that is a healthy consolidation above its 200 weekly exponential moving average support. So I think definitely one should, look to accumulate further long positions in this particular counter. We are expecting that this particular base that has been formed at around 320, 330 mark, I think that particular base will hold on, and we may see the stock, eventually scaling towards 450, 500 kind of a zone. So I think it's a good stock to accumulate. Even if we see a decline, I think 370 would be an ideal zone wherein fresh longs can be committed. One can keep a stop loss at around 345 on weekly closing basis and expect a move towards 500 in next couple of months.
Okay, Sachidanand, thank you so much for joining us this afternoon, telling us the levels in terms of market, individual stock names, as well as helping us solve those viewer queries. But thanks so much for that. On that note, we're going to slip into a very short break. On the other side, Manisha Gupta will join us for a conversation with MJ Khan, Chairman and President at India Chambers of Food and Agriculture, as monsoon in June is set to disappoint. So stay tuned in for that conversation.
Welcome back, and joining us on the show now is MJ Khan. He's Chairman and President at the Indian Chamber of Food and Industry. Mr. Khan, hi, thank you so much for joining in. And with the way the monsoon is panning out right now, mid of June done, and we are still 30% below normal, with an expectation that June perhaps could be below normal, not just June, but the overall monsoon season as well. But the way June has started, are you anticipating delayed sowing? And then because IMD has said that September is going to be severe El Nino, that is a time when we see flowering and important time for yields, etc. So the way it started and the way it seems to be ending, how are you looking at agriculture as a space?
I think all indications are showing that monsoon will be below normal. So that is definitely a cause of concern. And though it will not be as disaster as it used to be in earlier years because of many factors, including better irrigation now and also very sufficient stocks. But what is going to be very important is that how the July month unfolds. Because July is the month that maximum sowing happens. So if uniformity of rainfalls is there or near uniformity, then it is okay. Even if lesser rainfall, that doesn't matter as much as the pattern and the distribution. So that is going to be very important. For example, if there's heavy rains in Kerala and very deficient in Maharashtra, which is, of course seems to be like that, then average national rainfall may still be good, but situation on the ground may be bad. So July month is, Manisha ji, going to be very critical for us to watch.
That point is well taken. Mr. Khan, the other thing also is about various important kharif crops that we're keeping an eye on. So you have pulses, you have edible oil, you have cane, there is cotton as well. A crop in particular that you see could be more concerning given the weather the way it is?
Rice surely, because rice is the water guzzling crop. It requires, because there is not sufficient irrigation system that can make up the rain, the deficiency of rains for rice crop particularly. Cotton, etc., can still be taken care of to an extent that there are more sturdy crops, can withstand the little abnormal pattern or rainfalls. So rice is definitely, and sugarcane and cotton will be next, but other crops too. But in major parts of the country, the irrigation have improved, and also the governance quality has improved because of the AI and many other emergency response systems now in place. But as a nation, we are still not in a situation where these kind of emergencies can be well dealt with for the fact that now the climate change and its impact on agriculture can be seen. So El Nino is not going to be now one of the rare years. It is going to be year after year in a way of varying degree of impact, because the climate change is now for us to see. It is in action. It is happening all around the world. So therefore, as a nation, we need to prepare more strongly for that. So good thing is that we have very, very sufficient food grains stocks. But if this pattern is going to be year after year, that is how it looks like with the change of climate. So therefore, I think long-term strategies are required. And I hope that this year's learnings, if at all that kind of situation unfolds, July and August, July particularly, then I think we'll have to working more seriously on what is required to be done, what should have been done all these years.
Point taken. The other thing, Mr. Khan, of course, is about our fertilizers as well. I mean, we've been talking about this on how the government is subsidizing fertilizers in a big way in sense of imports. The whole pricing itself seems to have gone into a tizzy. But with now West Asia conflict easing slightly, markets waiting for 19th of June, where an initial agreement perhaps is going to be signed. How are you looking at the overall fertilizer situation?
See, fortunately, when this blockade happened, it was not the peak consumption period for India, because Rabi was in advanced stage and then later on harvested, and Kharif is still not in the sowing season. So that saved India. Otherwise, the kind of disruptions that happened, I think had it been a peak Kharif period or even Rabi period, it could have been very, very difficult. But having said that, I think there is a good news that the new urea plants are going to be started, additional capacities of, I think, 7.5 million tons soon to be started. We are importing about, last year was, very high imports of 10 million tons of urea. And of course, muriate of potash almost 100% of 4.5 million tons we are importing. And so is the DAP, almost 55 to 60% of 10 million tons that we need. So therefore, on fertilizer front, while urea, we are expanding the capacities, unfortunately, MOP, we have to 100% depend on that. And DAP also, we are less than half producing what we need to produce. So that is a difficult situation, but hopefully this agreement signed and things go normal. So normal arrival of urea and, the other fertilizers we can look forward to. So how the Strait of Hormuz and its impact after signature are done between Iran and US, how it comes out to be, that will determine. But I think that is not as much a concern as of now as what the story is about, that is, a delayed monsoon and deficient monsoon. And
So that's exactly what I was going to ask you next. With the way the monsoon is right now, would you say that this is a time that contingency plans are put in place by the government? What would you look at right now? Is it going to be, drought-restrained seeds? Is it going to be about less water-consuming crops? What is it that on ground needs to happen?
I think not as yet. I understand that NDC meeting that took place of all the chief ministers chaired by the Honorable Prime Minister a couple of days back, there was some discussion on this happened. But in the Agriculture Ministry, which is mainly responsible for, dealing with this kind of situation as far as agriculture is concerned, of course, Home Ministry also does. So preparations are there. There are discussions taking place because BRIC Agriculture Ministers meeting just completed a couple of days back. So now everything is back to normal, and this situation is surely being watched very, very closely, as I understand. But any serious efforts to be seen starting will be only around second week of July. I don't think before that government is going to respond. Wait and watch kind of situation as of now.
Okay, Mr. Khan, thank you so much for joining us with your insights. Manisha, thank you so much for taking us through that conversation. Fertilizer was a big part of your conversation, and the industry needs gas. The force majeure from Qatar wasn't helping the sector so much, and not Petronet LNG as well, but now it's a positive news. Qatar is going to restore half of LNG output a month after Strait of Hormuz opens. Now, do remember, Petronet LNG imports that LNG and then transports it or, reliquefies it and give it to different industries. This would be a big positive for them. India imports around 45% of its LNG from Qatar itself. So this was a big dampener for the gas economy overall. And Petronet LNG, which has a 7.5 million tons per annum of its contract with Qatar, which was under force majeure. They had 3 vessels which were continuously coming in from Qatar at any point in time. But that is something which was stopped because of the Strait of Hormuz issues that we had been facing. These were all long-term agreements. Looks like this would come back. So this is a positive news for Petronet LNG for sure. More gas supplies coming in. The gas prices are still higher, 80% higher versus pre-war levels. So we'll have to see what happens with those long-term contracts, but important for Petronet LNG. We'll slip into a short break, come back with more on markets and stock-specific action.
Welcome back to Halftime Report on CNBC TV 18. Now let's shift focus and talk about GIC. That's under pressure, and this came in after the government has launched an offer for sale to divest up to 5% stake in GIC. Sudarshan is here to give us the latest details on this one. Afternoon, Sudarshan.
Good afternoon, Vinny. So the latest in the OFS list is GIC government has announced that it will be selling up to 5% stake to raise almost rupees 3,100 crore. Of that, base size is of rupees 1,250 crore. And if government goes ahead and exercises green shoe option, that size is 1,853 crore. The stock is under pressure because floor price is set at a discount of almost 9% to yesterday's closing price, and it's at 352 rupees per share. For non-retail portion, OFS has opened today, and as of now, 29% is the subscription, and for retail it would be open today. Let's see if government goes ahead and exercises the green shoe option, and that will depend how the subscription goes ahead and what's the data at the end of the day. But as of now, the stock is under pressure.
Okay, all right. Thank you so much, Sudarshan, for joining us. So that's about GIC. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and some more stock-specific action.
Welcome back. Well, for the markets, it's holding up with a gain of around 0.3% currently for the Nifty, but we're not being able to climb back to those levels of around 24,000. But let's talk about specific stocks. So Dr. Lal PathLabs, that one's doing fantastically today. It's up around 5% at this point in time. KC International is also doing well. So that stock is up around 3.5%. And a surprise up move, which is coming in from the likes of HCC. That stock is up around close to 6%. And in fact, it's gained around 33% this year itself. So it continues its up move. Overall, for the markets, the advance decline ratio is split right down the middle at this point. So around 2,000 stocks advancing to around 2,000 stocks declining at this point. It's a wrap on Halftime Report. Business Lunch will take all the action forward.
Stocks trade higher after US and Iran sign an MOU. Expectations of inflation easing and supply chains normalizing and sentiment. Realty and IT are big gainers while metals and healthcare dragged.
HCLTech will invest over 1,400 crore rupees to pick up a 10.5% stake in Sarvam AI owner AxonWise. The IT major's bet on sovereign AI is another bit towards becoming a top AI solutions company. The stock climbs.
Stocks of aluminium makers slide after the metal sees a 4% drop overnight as the war premium fades. Expectation of aluminium capacities in the Gulf coming online, though some were struck in the conflict, aids the decline.
Monsoon in June is set to disappoint, with the deficit scaling to 40% in a week, says SkyMet. Rain shortfall in central and eastern India are the big worry ahead of the sowing season. Monsoon in the west may also be delayed by over a week.
Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan, and with me as always is Harmaz Patakia. Harmaz, good afternoon. The market's doing well today. Nifty holding at 23,930. Easing of tensions in West Asia, a rally on Wall Street, lower oil prices and a stronger rupee, all of them aiding the market, but not able to sustain at those higher levels.
And not able to. And good afternoon to you as well, Arundhati. 24,000 is that level on the upside now. You're speaking about 23,500, 23,800. So we did cross that 23,800 mark pretty convincingly in yesterday's session. So we are sustaining above that. But 24,000, well, significant call writing still there. So there is still some supply. Every time the index is moving back towards the 23,000 mark, 24,000 mark, supply has emerged from those levels. And then we are trading in this very narrow range of around about 100 points all through the session now. 23,900 on the lower end and 24,000 on the higher end. So that is what is keeping the index in check. Reliance, of course, is the one stock that is putting its hand up in today's session, as is HDFC Bank. So the index heavyweights are keeping the index in the green, but of course 24,000 remains the big talking point. We were mentioning earlier as to if the Nifty Bank takes a bit of a breather after this 2,000 point up move, right? Who puts the hand up? And it's IT that's doing that, it's Reliance that's doing that. So as of now, the bulls will be okay with the fact that we are not falling, but we're not going higher either. There's a weekly expiry as well. We keep that into account as well.
Stuck in that range at this point in time. But if you take a look at those sectors, the realty pack is doing really well. It's the second day in a row that it's in the green. We've got Prestige Estates up 2%, Aditya Birla Realty soaring 4%, and Brigade Enterprises also up 2%. As Harmaz pointed out, it's those IT names that are putting their hands up. It's the top gaining index today. You're seeing HCLTech that's up over 2% after it signed that deal with Sarvam AI. Coforge also up 2%, and TCS clocking gains of 1%. The metal pack, however, is the top losing index. That index is down over 2%. Hindalco down 3.5%, Nalco down over 5%, and Tata Steel down nearly 2%. So that's how the markets are shaping up this afternoon. But the top story we're tracking for you, HCLTech, which is the top Nifty gainer today, has picked up stake in India's largest pure play AI startup, Sarvam. Let's go across to Vinny for all of those details. Vinny, take us through how significant this deal is.
Hi, thanks so much for that, right? Absolutely, HCLTech is buzzing on the back of the news flow that's come in that they've acquired that 10.5% stake in Sarvam AI. The price at which they've acquired it, 1,427 crores for the stake. Now, Sarvam AI is raising actually $300 million at a post-money valuation of around 1.5 billion. US dollars. Now, who are participating in this? HCLTech obviously is there. Then you have other PE and VCs like Peak 15 is there, Bessemer Venture Partners is there, Khosla Ventures are there, among the PE and VC who have invested in this as well. So 300 million is what they are raising, $300 million. Now, what does Sarvam AI do, or what is the turnover? Turnover of the company is 45 crores as of FY26. They're a leading AI company based in Bangalore. They're mainly into building advanced AI models for text and other formats. What does it mean for HCL Technologies? Now, minority stake is what they've got right now, right? 10.5%. So not in terms of a financial impact, but on the strategic wise. It's a strategic positive for them, or a synergy for them, given that the theme of sovereign AI is what they are focusing on. It's first-of-a-kind deal that's coming from an India IT service company as well. This will help them develop in terms of industry. Client-specific language models is what they could focus on as well with Sarvam AI. Solutions on the global client basis as well is what they could provide their clients as well. And obviously leveraging and expanding that Sarvam's multilingual AI capabilities in India and beyond India is a key positive for them. Brokerages like Nomura are also maintaining their buy rating target price of 1,600 rupees per share, saying that this is a first-of-a-kind investment that comes in from an India IT service company who's investing in sovereign AI. So that's an interesting bet that comes in here. On that note, also listen into what the management of HCLTech is saying about this.
We've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, Physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. The enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large.
This is really the time when we start playing internationally. And for us, therefore, the capital being deployed to build the next generation of models and also scaling up our compute footprint in India to serve enterprises, serve startups, serve the government. These are the 2 broad things that we'll be investing in.
HCLTech leading the gains among the IT names in today's trading session. Slightly off the day's high, but still 2.5% higher in a market that has seen the IT stocks largely underperform even during this recovery. A couple of names from the broader markets that are doing well today. Sonata Software still holding on to gains of around 17%. This is the biggest single day gain that the stock has seen since November of 2021. So good going for Sonata Software. Fact among the fertilizer names, 13% higher. Of course, we need to keep this in mind that Fact has very little free float in the market. Most of the holdings, 90% of the holdings are still with the government. And yes, that was the alarm bell we wanted to hear about the sign of caution among a Fact that we had to highlight. Very little free float in the market. So 13% higher for Fact as well. But in some setback for TCS, the Supreme Court of the US has declined to hear its appeal in a long-running trade secrets dispute with DXC Technologies. Ashmit is here with more details on this. Ashmit, tell us more.
Well, this has been a long-drawn litigation drawn primarily out of the United States. There was a lower court which slapped damages of $168 million on TCS that was upheld by the Court of Appeals. Now, importantly, the Supreme Court of the United States has rejected the application, challenging that award that had been filed by the TCS. What that effectively does is that it upholds that award of $168 million against TCS. Mind you, this is just the principal amount. We'll, of course, have to account for the interest component as well. Now, this is primarily on account of claims that were made against TCS that they had infringed on software that belonged to another company, that they were liable to pay damages, and importantly, the US Supreme Court siding with the complainant in this matter. Now, importantly, the company has clarified on its position, saying that they already have accounted for $150 million on their balance sheet with respect to this particular litigation. Now they've clarified that they'll need to account for another additional $70 million to account for the pain that is going to come their way on account of the Supreme Court order. So clearly not going their way. The US Supreme Court upholding that award against TCS.
All right, Ashmit, many thanks for those details. Now, India posted a current account surplus in the month of April as per data released by the Reserve Bank. However, the capital account saw a deficit because of FPI selling. Lata Venkatesh is here with all of those details. Lata?
Well, actually, the Reserve Bank has started announcing every month the BOP data. Now, we need to explain what is BOP versus trade data. The Commerce Ministry gives the monthly data, trade data, 15 days later, after the month ends. Whereas the BOP data was coming only quarterly. What is BOP? Trade data plus remittances is current account. And then you have a capital account where you have FDI, FPI, ECB's NRI capital, that is capital account. That was given to us by the Reserve Bank only at the end of a quarter, 2 months after the quarter. So we got the data pretty late. Now Reserve Bank has decided to give it just 1 month and a half later, that is 45 days later. So now we have the April current account, BOP numbers, which was declared on June 15th. What were the numbers we got? One of the most important things we found was that the current account is a surplus in the month of April, and that's because the trade data was negative. It was minus 28 billion. But we got a positive on remittances, a huge positive on remittances. And as a result, because of some other payments as well, the total current account is a surplus of 4.7 billion, which is very big because we normally want capital account to fill the current account deficit, whereas in April, the current account itself is a surplus. So good have been the remittances flow. Now let's come to the capital account. What is the Reserve Bank telling us? The strong point over there is FDI. FDI has come over $7 billion compared to just 1.6 billion year ago in April. That again is a positive. However, that is erased by the capital account being negative. That we all know. We all know the FPI numbers. It was minus 8.7. That is 8.7 billion went out from the FPIs. So that surplus, the inflows in the FDI got neutralized by this FPI outflows. Plus, there were other capital flows like banking capital, ECBs, NRI deposits. If you took all that, we are actually deficit in the capital account by 11.3 billion. Look at the irony. Time was when current account was a deficit, capital flows was a surplus, it filled the gap. Now we have a current account surplus, but capital account is a huge deficit of 11.3, and therefore the balance of payments is a deficit for the month of April alone at 6.6 billion. Never mind, we are still going to get balance of payments positive when the FCNR flows start coming in, so not to worry. The number is perhaps only for April. By the time we come to June, things may be different. But a point to be noted on yesterday, the Commerce Ministry also gave us the trade data for even the more later month, that is for the month of May. There again, we have a big positive. Exports have hit an all-time monthly high of $45.2 billion. That's a big positive considering that there were tariff worries, tariff uncertainties, war uncertainties. In spite of it, we have hit such a good number. But the deficit still continues. Deficit is again as big as April, a 27 billion deficit in trade, goods trade. That is because imports were also high. It's quite clearly the crude oil prices and such other things that have led to a high, import figure, and therefore a modest trade deficit. It's not a very big one because we have a services surplus. But nevertheless, the important positive takeaways on the external front have been FDI was good in April, remittances were good in April, and exports were good in May. So all told, something to cheer.
Something to cheer indeed. Good things always coming on. Good things to cheer as well. Lata, thank you for that update there. Take a short break. On the other side, more details on the Iran peace deal that was signed electronically. More details on that. Stay tuned. Welcome back. On to the latest updates on the US-Iran deal. US President Donald Trump joined the world leaders at the G7 summit in France, where he highlighted a preliminary agreement aimed at ending the conflict with Iran. He said that the MOU with Iran has been all signed electronically and that the Strait of Hormuz will be completely open by Friday. Now, what is inside Trump's MOU with Iran? CNBC's Megan Casella sent us this report from France.
President Trump wrapping up his first day of G7 meetings just across the border from where I'm standing in Evian, France on Monday evening. And all of those meetings taking place with the president now having a preliminary framework deal with Iran in hand, putting him on some firmer ground with all of those G7 leaders.
I'm very happy to say it's signed, the deal's all signed. And the strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found, but it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
Now, what the U.S. and Iran have so far signed is a memorandum of understanding. It extends a ceasefire for 60 days while pushing discussions on all of those most difficult issues, the specifics of Iran's nuclear program, as well as sanctions relief and the unfreezing of Iranian assets further down the road to be negotiated in the next 60 days. A few more of the highlights of everything we've learned so far on Monday about what exactly is in this MOU. For one, President Trump, Vice President J.D. Vance, and the Iranian Parliamentary Speaker Ghalibaf have all already electronically signed this agreement on Sunday. They say the toll-free reopening of the Strait of Hormuz will begin immediately, but the no tolls part, crucially, is only guaranteed for the next 60 days. We'll have to see if Iran agrees to keep that going longer than just this next ceasefire. The sanctions relief for Iran, U.S. officials say, will be performance-based. They emphasize that means no funds have been unfrozen yet, no money has exchanged hands. None of that financial relief will take place until Iran begins to take steps to dismantle its nuclear program. Now, the signing ceremony is going to be scheduled for Friday, possibly here in Geneva, Switzerland. We expect Vice President J.D. Vance will be here for that, and possibly some other top U.S. officials as well.
We've done a great job, and hopefully it's going to be a good relationship, and we're going to get along. And if we don't, we go back to where we started, but I don't think that's going to be necessary. The Iran deal that we made is going to bring a lot of success to the world, because the oil was really clogged up there for a while. He would call me on occasion and say, "Come on, please, let's go with the oil prices." But the oil is coming way down, so I'm very honored by it.
Finally, we do expect to see some text of this agreement released at some point this week, possibly as soon as Tuesday, maybe not until as late as after that signing ceremony. But the White House is committing to making the full text of the deal public. Now, while that means we haven't seen the details yet, the G7 leaders haven't seen them either. That gives all of them a lot to discuss as these G7 meetings continue on Tuesday.
On that note, it is time for us to head into a short break. Monsoon onset is delayed further. We bring you all of those details on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. The World Meteorological Organization says that chances of an El Nino event in June to August are at 80% in 2026. In fact, Maharashtra, Gujarat are seeing a 70% deficit in just the first half of June. Santya Gora gets us all of those details. Santya?
So Arundhati, let's start with Mumbai. Monsoon's arrival in Mumbai keeps getting pushed back. The normal onset date of 10th to 11th June got pushed to 14th to 15th June due to the delayed onset of monsoon over Kerala. And that date also later got pushed to 22nd to 23rd June. And now IMD has said that monsoon will arrive in Mumbai by 25th of June. But the private weather forecasters, SkyMet has said that it might not arrive even by 25th of June, which means that it will be record-breakingly delayed. Arundhati, it was in 2023 when the latest onset of monsoon was recorded in Mumbai. That was when it arrived in Mumbai on 25th of June. So if it doesn't arrive by 25th of June, which means it's going to break records. Why is it happening? What's the current status of monsoon? On the western part of the country, monsoon is stalled over southern Maharashtra since 8th of June and has not made any advancement since then. And as per IMD, it's not going to make any advancement for the next 4 to 5 days either. Let's talk about the eastern front. Eastern front has, on that front, monsoon has made some progress, but the rainfall activity is not what we want it to be. Again, on the western front, the entire western part of the country and parts of central India are suffering because of the stalled monsoon, and this has deepened water availability concerns as well. In Mumbai, till this morning 6 a.m., water levels in 7 lakes supplying water to Mumbai was only 10.35%. Overall, Maharashtra till yesterday recorded only 24.53% water storage, and till 11th of June, 166 reservoirs across India recorded only 28.28% water. So that's the condition as far as monsoon is concerned.
Santya, thank you for that update there. Now, the central government has officially amended the drugs rules, making a doctor's prescription mandatory for purchasing all cough syrups and liquid syrup formulations starting immediately. Now, over-the-counter sales of these medicines are strictly banned. The shift in policy comes a few months after contaminated cough syrups were linked to the tragic deaths of children both in Madhya Pradesh and in Rajasthan.
And with that, it is a wrap on this edition of Business Lunch. Midcap Radar comes up next and takes all the market action forward.
Good afternoon. Welcome to Midcap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Ekta Batra. Ekta, good afternoon. Some recovery which is underway after consolidating for a while. We are up around 109 points in the Nifty, very close again to the 24,000 mark, which we have been resisting. Midcaps in the green, and so is the Bank Nifty. So that's where the recovery is coming from.
Hi, Sonal. Yes, absolutely. You know, the advanced decline ratio is a key parameter which has improved as well. So we have around 2,200 stocks advancing to around 2,000 stocks declining. And that was even keel at one point in time. So that's a good measure in terms of the market sentiment at this point, which seems to be incrementally on the upside. But nonetheless, let's take you through all of the top stories that we're tracking at this hour. The markets continue to see steady gains with the Nifty trading around the 24,000 mark. IT, Realty and FMCG lead sectors, while metals and PSU banks drag broader markets underperform.
The government launches an offer for sale to offload up to 5% stake in GIC Re with the floor price of 352 rupees. The stock slumps 5%.
Citi issues a buy rating on RR Cabel with a target of 2,650, citing strong demand across markets and scope for margin improvement. The stock rallies.
GMR Airports rally continues. Stock is up another 2% after Kotak Institutional Equities issues a buy rating with a target of 118 rupees a share.
Siemens gains in trade today as the company wins a TCMS supply order from Titagarh Rail for 12 train sets of the Pune Metro.
All right, these are the top headlines that we are tracking. Brent crude prices continue to fall. That's a big positive for Indian markets, something that we are seeing in the market moves as well, though the deficient rainfall is something that we'll be tracking very closely. But a lot of action in the mid-caps, and that's what we'll be tracking.
Well, yes, absolutely. Let's in fact go across to Upasna, who's joining in to take us through all of the mid-caps which are moving around in trade today. Upasna, over to you.
Well, the mid-cap index has slipped into green, nearly flat right now. So first, let us focus on the top gainers today. NIIT Limited is one of the key gainers, up more than 14% in today's trading session. Sonata Software and Dr. Lal Path Labs, both of these are the key volume gainers with volumes more than 20 times 1 week average. MTAR Tech also continues to remain in focus, and it also continues its 3-day winning streak, and the stock is up 15% in the last 2 trading sessions and up nearly about 4% in today's trading session. Suzlon also continues its 3 days gaining streak, and the stock is up nearly about 4%. Now let us look at some of the EMS stocks. They also continue to remain in focus today after Motilal Oswal has come up with a bullish note on the sector. Now PG Electroplast is up nearly about 7%. It continues its 3 days gaining streak and up nearly about 7% in the last 2 trading sessions. Keynes Technology, Motilal Oswal has given a buy rating on the stock with a target price of 4,000 per share, and Amber Enterprises is also seeing a 2% surge as the stock is 13% off its 52-week high. Now on the flip side, let us look at some of the top losers in today's trading session. Rain Industries is seeing a sharp cut of nearly about 6% today. Grow is down nearly about 3%, and Pine Labs continues to remain in focus as the company has clarified to the exchanges regarding the N-Tracker report on the gift card income. The company has stated this is incorrect. So stock is down nearly about 2% as we speak right now on that one.
Okay, all right. Those are some broader market movers. Thank you, Upasna, for joining us as always. It's a good time to get a technical check on the market. Shrikant Chauhan from Kotak Securities is joining us for just that. Shrikant, good afternoon. Weekly options expiry. Do you expect major moves on the Nifty in the last 1 hour of trade?
Yeah, good afternoon, Sunil. Good afternoon, Ekta and everyone. Well, for Nifty, our view is that the market has formed higher bottom at 23,000 as compared to 22,000, which it has made in the month of April. So while looking at the entire setup of the market and today's activity, especially where the market is not falling below the mark of 23,900, I am of the view that yes, the market is heading for 24,000. Eventually, it will cross 24,600, but in the near term, in next maybe 2-3 days of time, we may even see the levels of 24,300. So ideal strategy would be to buy even at current levels more on dips. I don't think that now the market will break again the level of 23,600. But at the same time, we can see 24,300 and 24,600.
Okay, all right. Shrikant, what about specific stocks in a market like today?
So for the day, we are seeing a good amount of activity in the broader market, and especially stocks like a few mid-cap IT companies. There we are seeing good amount of renewed buying interest. In that, we like Coforge, which is currently around 1450, 1445. There we have a target of 1550, 1600. At current levels, it looks reasonable buy, decent buy at current levels with a target of minimum 1500, maximum 1550. And we can keep a stop loss around 1400 for the same. So there we are bullish. We also like Borosil Renewable, which is currently trading around 560, 570. There also, if we see the pattern, then it is forming some V-shaped recovery pattern, and based on that, the stock can move towards 650 or 700. Even at current levels, if we see the overall activity, then consistent buying is happening whenever there is a fall in the stock. So with a stop loss at 540, it's a buy. With a target of immediate basis 600 and 650 on the best case side.
Okay, all right. Thank you so much, Shrikant, for joining us. That's all about market moves and individual tech names as well. But we do have Dr. Lal PathLabs, which is on our radar. Ekta, tell us more.
Well, yes, just a quick stock check is what we're doing for Dr. Lal PathLabs. That stock is up around 4% today and is buzzing in today's trading session. It's off the day's high, but nonetheless, it's showing a lot of traction on the upside today. It is a part of the BSE 500, and to put it into perspective, in fact, it's hit a fresh 52-week high and is up 33% from its 52-week lows. So it's been a significant move that you've seen on Dr. Lal PathLabs, but it continues to be an expensive stock within the entire diagnostic space. In fact, trading at around 55 times 1 year forward. So that's on Dr. Lal PathLabs. There's a lot of interest which has been coming in a lot of these healthcare stocks recently. So maybe it is a part of that rally that we are seeing for Dr. Lal's. But we'll do one thing on that note. We'll take a short break. We'll get a discussion going on Petnet, LNG and HDB Financial Services, which are reacting to news. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Well, the stock on our radar right now is Petronet LNG. At around 12:50, we did see a flash from Bloomberg, which indicated that Qatar has set to restore half of LNG output a month after Strait of Hormuz opens. And that's an important update coming in from Petronet LNG because Qatar says they will be restoring 80% of LNG production as well within 2 months because there was some infrastructure damage as well that happened during the strikes. Now, Qatar announced, Energy, the company that is, announced force majeure during the West Asia war, and Qatar as a country accounted for 45% of total LNG imports that India has. So basically, we import around 50% of the total gas consumption, out of which 45% itself came from Qatar. For Petronet LNG, it is a big deal. Now remember, Petronet LNG buys that liquefied natural gas, regasifies it, and then transports it in the country to different sectors and different industries as well. They did have a long-term agreement of around 7.5 million tons per annum from Qatar. In their Q4 results, they had indicated that they engaged 3 dedicated vessels under long-term agreement, which issued force majeure. And that was an issue for the company. And that's why we did see the stock coming off sharply from the highs as well. Just before the war, it touched a high of 326.4. The March 23rd low came to around 235. And today, the stock is seeing an uptick after this positive news that had come by. What about Indian gas supply? Is that a problem now? Now, India has sharply ramped up gas imports from US. It's up 6 times in May on a YOY basis. Supplies have increased from Oman, Nigeria, and Angola. These have been the other economies from where we are now importing gas. India is also paying spot-linked premiums to secure energy in the form of gas, but gas imports have come back almost to the pre-war levels. And spot LNG prices, they have partially retraced from the highs, but they're still 80% above pre-war levels. So these are some macros that you should keep on your radar. However, a positive news for Petronet LNG, and that's why the stock is at the day's high.
Okay, absolutely. So that's Petronet LNG, which is up around 1.5%. But HDB Financial is also buzzing in trade after a positive Jefferies note. Ananya is here with more details on that.
Oh, well, yes. HDB Financial Services is gaining for the 4th session today after positive commentary at the Jefferies Investor Conference held in UK. So let me walk you through the report that Jefferies came out with yesterday on the Investor Conference. Now, your management said April-May disbursements were well ahead of last year. And despite West Asia-related concern, HDB reaffirmed its FY27 AUM growth target of around 16% versus 11% growth in FY26. Now, Jefferies expects growth to accelerate further to 18% in FY28. Asset quality is also improving. We can see management highlighted better collection and recovery trends despite the West Asia conflicts and El Nino concern. Credit costs are expected to ease to around 2.3% in FY27, which should support profitability going forward. Now, margins remain another positive following the RBI's ECB and FCNR related measures. Bond yields have corrected to nearly 20 bips from recent peaks, helping funding costs. HDB expects NIMs to stay around above 8%, while Jefferies sees ROA improving from 2.2% in FY26 to around 2.5% over the next 2 years. The rally has been backed by strong participation. Now, on Monday, the stock recorded its biggest single-day gain since listing. Even after rebounding more than 25% from its post-listing low of 555, the stock still remains below the IPO price of 740. Now, valuation has also been closely watched. HDB is trading at around 2.5 times FY27 book value and 19 times FY27 earnings. Jefferies believe that it is reasonable given its expectation of 22% CAGR over FY26 to FY28 and an improvement in ROE to around 15% and maintains a buy rating with a target price of 845. So overall, we can see investors are looking for the positive growth outlook going forward for HDB Financial Services.
Okay, thank you so much for that, Ananya. The stock is up 14% in the last 7 days. That continues its up move today as well. But Siemens India, that is the other stock on our radar. Winnie is joining us now with more details. Winnie.
Hi, thanks so much for that. So Siemens India, they've received an order from Tata Rail. This is mainly for propulsion systems as well as train control monitoring systems for 12 train sets, and this is for the Pune Metro. This work includes design, manufacturing, supply of converters, auxiliary converters, traction motor, as well as other systems as well. So do not forget, Tata Rail had over a period of time won train set orders for the metro of Pune, and that was 46 train set orders that they'd received. So this is a good order win that's coming from Siemens India. Just a note that propulsion systems normally account for around 40% of the entire train cost, while train control as well as monitoring systems account to around 8 to 12% of the cost of mobility in long gestation execution segments, especially that's the word that comes in from analysts as well. So in terms of cost also, it will be a significant portion of the cost, and Siemens India will benefit from this, though this is for Siemens India a low margin business versus the other business. Nonetheless, an order win coming in here, and that's why the stock is holding on to gains of almost 1%.
Okay, all right, Vinny. Thanks very much for that. So a lot of stocks which are buzzing around. We'll do one thing, but on that note, we'll take a short break. We'll get you a lot more in terms of specific stocks as well as the markets which are holding on the other side. Stay tuned. Welcome back. Well, for the markets, it's definitely picking up pace. So we're moving closer towards that 24,000 mark. So 23,961 is where we're at. Mid-caps doing better. So up around 98 or 100 odd points currently for the mid-cap index. Let's focus on some stocks. GMR Airports is in focus on the back of May passenger traffic data that suggests airport passenger traffic for the month was up 6%, while domestic traffic logged nearly 8% growth. Let's go across to Ria for more.
Well, yes, GMR Airports has come out with its monthly update for the month of May. Now, the total air passenger traffic has gone up by around 6.1% compared to the previous year, and largely driven by the domestic passenger growth. The domestic traffic is up nearly 7.9% compared to the previous year, and this is what has driven the growth. On the other hand, the international traffic has gone up by barely 0.4% compared to the previous year, and this has been due to the temporary disruptions that were caused in flight operations, caused largely by the shifting airspace amid the continuing geopolitical tensions. So that is what the company has attributed the weak international traffic performance to. On a year-to-date basis, however, for FY27, the company has crossed 20.4 million passenger traffic mark, and this is the highest ever total passenger traffic, with the record domestic passenger traffic at 15.8 million previously, and this was mainly driven by the domestic traffic growth at the Delhi airport. The Delhi airport traffic accounts for nearly 68% in the total traffic, and this is what has driven the growth largely for the company this time around. And apart from this, Kotak Institutional Equities had also come out with a note on GMR Airports today. They have a buy call on the stock with the target price of 118 rupees, and they have said that the comparison of Adani Airports and GMR Airports suggests that there are some material leakages on the non-aero opportunities for GMR Airports that will they can eventually capture. So this is the key point that they have highlighted, and they have said that eventually they see an upside to GMR's non-aero per passenger business, and this may eventually get captured as new ventures into new lines, as well as the scaling up of the existing business, which is the F&B business. So they have a positive view on GMR Airports, and the stock has been in focus on the back of that today.
Okay, Ria, thank you so much for joining us with all those details. That GMR Airports, Bank Nifty has come up from the high, so keep an eye out on that. We'll take your leave for now on Midcap Radar. Stay tuned. MF Corner comes up next. Hello and welcome. You're tuned into this fresh new edition of the MF Corner. I'm Sonal Bhutra. With me as always, Vinny Motiwala. Vinny, good afternoon. Well, one of the days when we actually answer individual queries coming in from the viewers. Let's get started. We have a lot of them, so we don't want to waste any time.
Yes, we do not want to waste any time. And on that note, first the afternoon to you as well. But let's also bring on board our guests for today. We have Kirtan Shah, founder and CEO at Trivanta Wealth, and Nirav Karkera, head of research at W by Grow, to answer all those mutual fund related queries that you all have sent us. Nirav as well as Kirtan, good afternoon. Thank you so much for joining us on the show as always. Let's get started with the first query for today. We have Subramanian, who is writing to us from Bangalore. He has invested 8 lakh rupees in UTI Flexi Cap Fund. The current value is around 2.24 lakh rupees. Wants to know if he should look at some other alternate investment options, as this fund doesn't deliver as good returns as he was expecting. Kirtan, we know we do not have much details in terms of his other portfolio, but his query is on UTI Flexi Cap Fund. What's your suggestion?
I think, Vinny, like you rightly said, I don't have any other details of what other funds is he holding and what's his risk profile or time horizon. So may not be able to help him with respect to his query exactly of some other funds in some other category. The best we can do is help him understand that within the flexi cap category, I think instead of the fund that he is holding, probably there are much better options available. He should definitely go ahead and look at a PPFAS flexi cap or even a White Oak flexi cap. And the logic is very simple. Like I said, I'm only replacing his existing flexi cap with a new flexi cap because we don't have a lot of other information.
So we need consolidated portfolio information to make major changes, or at least advise major changes in that one. Take that point. Neera, what's your take? Instead of UTI Flexi Cap Fund, where the investment is 8 lakh rupees, what do you suggest?
So within the FlexiCap category, UTI used to be a good fund, but since the past couple of 3 to 4 years, it has been going through quite a prolonged stretch of call it a rough patch, right? So in fact, there are various other funds in the same category that have indeed been able to hold up much better also in the face of the turbulence that we have been witnessing. So Aditya Birla Sun Life FlexiCap, ICICI Prudential FlexiCap are some very good options that one can look at within the same category.
Okay, take that point. So let's go to the next query now. Iresh is writing to us from Mysuru. He's invested 5,000 rupees each in Quant Small Cap Fund, Parag Parikh Flexi Cap Fund, Motilal Oswal Mid Cap Fund and Nippon India Index Fund, and says he's been investing in Quant Small Cap Fund since 2023 and wants to know if he should switch to Bandhan Small Cap Fund or continue with the same one. Kirtan, what's your take? And a lot on Flexi Cap funds today, but let's address this individual query first.
I think the first best part about the portfolio is, unlike most other portfolios that get shown to us where you have 15, 20 odd funds, I think the best part is the individual has a very selective list of portfolio of 4 or 5 funds, which is good. Also, what is interesting in his portfolio is he's equally diversified largely across a small cap, a mid cap, and then he has a bit of flexi cap element which takes care of the large cap. So I think the structuring of the portfolio looks very interesting, and kudos to the gentleman for being able to do this. But in his case, I would recommend 2 changes. I think I would replace the current Quant small cap that his query is with probably an Invesco small cap and the Motilal Oswal mid cap by a Kotak Emerging. Thereby what we are doing is we still keep the sense of the portfolio, which is 4 or 5 funds, well diversified across large, mid and small. It is just that we are moving AMCs probably to be able to get a better risk adjusted alignment on the strategy front.
And Nirav, what's your view coming in here as well for Irish? She's obviously invested in 5,000 rupees in each of these funds, Quant Small Cap, Parag Parikh, Motilal Oswal Mid Cap Fund as well as a Nippon Index Fund. What's your suggestion?
So, of course, the portfolio is well diversified, but I'll focus and lean in further into his very specific question on Quant Small Cap Fund. Now, the fund used to be one of the best funds in the yesteryears, but has not been doing well. since quite some time. However, it has started to show signs of promise and revival. So at this point in time, getting out of it would be just exiting too late into the cycle. We believe there is potential for quant small cap fund to stage a recovery, especially considering the style of the fund manager as well as the ongoing market regime. So a good approach would be to let the investment stays, but move further incremental investments into another fund. Now, the very specific fund in question that was brought up was Bandhan Small Cap Fund, which adopts a very distinct style and which is known for its resilience because of its style and its broader set of holdings. A very high number of holdings count, but it works well. That's the fund manager style. So probably incremental money could move in favor of Bandhan Small Cap, but all investments made into quant small cap should be given a chance to ride the recovery.
Point taken there, Nirav. But let's move on then to the next query. We have Gaurav, who's writing to us from Mumbai. He says his SIPs have all turned into bad investments as of now, and especially in 2026. Now, where should he look to invest? Kirtan, it's been a volatile time. We've seen markets not do that well. So, when someone is concerned about their SIP, previously we used to get questions like, where should I shut my SIP? Should I close? At least we're not getting those questions. Maybe where can they look to invest and how should they go about 2026?
I think, look, not just 2026, but 25 also been a bad phase in general. And I'm sure investors would have not had a great experience provided they just started in 25 or 26. So I think this is on the expected lines, because if the markets have not done very well, you're not going to be able to do surprisingly much better than what the markets have done. But I think the best part is that the investor is investing using an SIP, which is the right way to actually invest, and specifically now with the hindsight advantage during market which are volatile. I think what the investor really needs to understand is first that while you are investing in equity, you will have to give it 5, 7, 8 years for it to really be able to show you what's in it when you are investing in the MF first. Second also is this is too smaller time frame, and specifically in a period like 2025 and 26 where the markets have not done really well, you are bound to not be really happy with the outcome. But imagine having done a lump sum versus doing an SIP. Your output in a lump sum would have been much worse than the way the SIP would have panned out to you, because during volatile times, I think SIP is the right way to invest more money, is because while the markets are moving up and down, your probability of being able to collect more units would have really done a much better job in 25, 26 versus a lump sum. So I think my suggestion to the investor is that SIP is the best way to invest in such volatile times. You would have accumulated more units over just doing lump sum investing, and it is too small a time frame for you to really be able to judge whether it's done good or bad. I think these are just market cycles, and he should continue.
Market cycles, and that is what you should consider with your investments. Let's go to the next one, and this is a fund almost everyone talks about. Nirav, let me come to you for this. Shivam is writing to us from New Delhi. He says, given the market environment, does Parag Parikh Flexi Cap Fund is it still relevant in the current market scenario? There's been so much debate, right, how this fund has not performed in the last 1.5 years, when it was actually, in fact, the darling of investors at a point in time. Do you think the investment should continue, or fresh investment should be made in this fund?
So there are a few nuances about the fund, right? The fund is typically a large cap fund for all essential purposes. And, it has quite a large allocation of its overall portfolio concentrated in the top set of holdings, the top 10, 12 holdings. Even within that, there is a large composition of financial services, banks, and IT services. Now, when you look at it this way, you realize that whether it be on the market cap side, where it is large caps, or on the sectoral side, talking about banks, financial services, and IT services, all of these segments have been on the unfavorable side of the market over the past year and a half. And now add to that the collective weight that is assigned to these segments, which is really high. Almost half of the portfolio is concentrated around the top 10, 12 such holdings. It is only mathematically conclusive that the fund had to go through a very, very rough patch. Of course, they've shared quite a history of being able to navigate market cycles effectively. But another thing also, now only time will say whether it was a smart move or not. But there is a peculiarly high level of cash holdings also that could be a potential drag on future performance. Now, one thing that we distinctly notice that while they have a flexi-cap fund and an ELSS fund, the cash holding is not so high in the ELSS fund. So this leads to the question whether this is a part of a strategy, a choice, or a design constraint as the fund size is increasing and they are unwilling to go below in the market cap segment. So having said that, there is a slight offsetting effect, probably one of the very few funds giving exposure of in the ballpark of 10 to 15% towards US big tech stocks, which could offset quite some drag over there. So net, the performance remains a wait and watch. One thing that is fortune is very quick, very strongly tied to is a turn in the entire market regime. It needs to break out of the sideways curse that it is going through, and probably some bit of, if there were reversals, especially from the FII front into the same segment, this fund could really stand ahead of the others. So right now it is wait and watch, not really a bad one outright, but not as enthusiastic as we used to.
And Kirtan, I know you started the show and we had that flexi-cap query where you mentioned Parag Parikh flexi-cap as well. So you still think it's relevant, right? Or you would say the other name you'd given was White Oak flexi-cap as well?
No, I think PPFAS is a buy for us. I think it's very unfortunate that the investor community, just because of the last 1 year performance, is not very willing to look forward to the fund that has been so consistent since the time it was launched. Also, I think the bigger problem is that people don't really understand the style of the investing of the fund manager and just looks at the returns and invest. I think the fund manager has been very categorical and very clear since the inception of the fund that they are a value style fund, and hence all the investments that they've done is only looking at the valuations and not got carried away in general by how the market momentum has played out. And also taking cash calls is actually an inherent part of how the fund has been managed. So I think if these strategies have worked for the fund in the past, I don't see a reason why this should be the reason for you to exit. And 1 year is too small a performance, I think, for anybody to be able to judge.
Take that point. The debate on PPFAS continues. It's all over social media as well. But take your point, gentlemen. The fund breakup and their cash level understanding is very important before you make any investment decisions as well. We'll slip into a short break. On the other side, we'll continue to answer all our queries, all your queries with our guests. Stay tuned. Welcome back. You're still tuned into MF Corner. We still have with us Kirtan Shah of Truvanta Wealth and Neeravar Karkera of W by Grow. And we are answering all your individual mutual fund queries. Neerav, let me start with you this time. Ranjit Reddy is writing to us from Chennai. He wants to know mutual funds focused on energy and power sectors. We do have some options here. This is, of course, a sectoral theme that the viewer is looking at. What are your suggestions here?
I feel the most effective way to invest in these themes are through ETFs. There are two ETFs that exactly target these segments. So you have the Motilal Oswal Energy Index ETF, which tracks the energy index. It is a broader composition of gas, petroleum, and power theme. And Grow BSE Power ETF tracks the Power ETF by BSE. This is very focused on heavy electricals, power transmission, power generation units. I feel these two are good starting points for anyone looking to invest in these plays.
Point taken there. A couple of names there. Looking to invest in this place, then you can look at these names. Let's move on to the next query. We have Himanshu Ray, who's writing to us from Kolkata. He asks if investing in alpha and momentum funds at the same time would be a good investment decision. Kirtan, your suggestion?
See, I think both of these themes typically end up following what stocks have done well in the past, and that's the kind of allocation that they want to give for future. While they are slightly different from each other, but more or less they will have a lot of overlap in my opinion. And hence, while you are trying to do too smart beta, I would rather suggest that you select between an alpha or a momentum and then add a value theme to it. So I would be somebody who would do probably a momentum and a value, then probably do an alpha or a momentum together.
Okay, all right. Take that point. The next question is, there's a lot of flexi cap actually on the show today. So the next query is coming in from Raman Jain, writing to us from New Delhi. He asked, out of multi-cap funds or flexi cap funds, which category would be suitable for investment purposes? For a 30-year-old, he asked whether he can remain invested for the next 30 years. And additionally, something on similar lines, Kshitij Kumar is writing to us from Pune. He asked whether multi-cap asset funds or flexi cap category, which would always be the winner between the two in the mutual fund space. Your take, Neerav.
So one thing is that the flexi-cap fund definitely has more freedom and it can operate as a multi-cap fund whenever it wishes to. But unfortunately, the reality of life is very different. Most flexi-cap funds have tilted towards being a large cap fund. So the bottom line is not really whether a flexi cap fund is better than a multi cap fund, but whether the fund manager, given the size and the style of the portfolio, is able to generate alpha sustainably. So although a flexi cap fund may be large cap tilted, if the fund manager is good in identifying opportunities on the large cap side and allocate and size his way into generating alpha, I feel that becomes a better option. And on the multi cap side, it becomes a much viable option if the fund management has a credible track record of generating ideas on the mid and small cap that is able to generate that alpha kicker through pure bottom-up stock picking. So it's not a category choice, it's a fund choice, and the category becomes largely incidental. So for those investing for the longer term and who want to have an absolute minimum allocation towards mid-cap and small-cap 25% each, multi-cap is the way to go forward, but you need to be sure that the fund manager is also confident of generating opportunities in the mid and small-cap segment.
Point taken there. And Kirtan, your suggestion, multi-cap versus flexi-cap, that's the query coming in from two of the viewers. So what would you suggest and propose to investors?
I think I would completely agree with him saying that it is more on the scheme and the fund manager than the category. But let's say if I still have to answer the category question, I think for a long-term investor who has the risk appetite to be able to maneuver around the volatility that might come across when you do mid-cap and small-cap investing, I think multi-cap hopefully can end up doing a better job because multi-cap as a category has a compulsion to invest 25% in mid and 25% in small, which will make sure that 50% of your portfolio largely is in mid and small at all given point in time. And like rightly pointed out by Neerav, I think in the flexi-cap category, if you look at the average of all the flexi-cap funds that are currently available, most of them have close to 70% in large cap. So flexi-cap in India, unfortunately, has become a pseudo large cap fund which existed before 2018. So I think it is more to do with risk appetite and being able to digest the volatility. The investor really has to understand that multi-cap will have at least 50% small and mid, and the large cap will largely have a smaller bit to mid and small. So I think this is the distinct understanding that the investor needs to have before they make a judgment.
Thank you so much, Nirav and Kirtan, for joining us today. It's always a pleasure to have both of you on the show, and always good to address all the individual queries which are sent by the viewers as well. And with that, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Today, Taiwan index opened up with gains. Hang Seng has opened up with cuts.
It's signed, the deal's all signed, and the trade is already partially open.
Oil's at about 83, so there's not very much incremental change compared to where we were.
It'll open up a completely new chapter of opportunities for us as a company.
HCLTech on one end, it's doing well. Bajaj Finance, SBI Life, Tata Consumer, etc. And you got about 10 names which are lower.
Whenever the deficit grows bigger, it becomes difficult to catch up at a later date. That is the worry.
Government has launched OFS to sell up to 5% stake to raise almost 3,100 crore.
We are still at the highest point of the day though, and today being the weekly expiry of the Nifty contracts, it's either this way or that.
Aluminium prices are around $3,000 per ton to around $3,200 per ton over the next 2 years.
Exports have hit an all-time monthly high of $45.2 billion. That's a big positive considering that there were tariff worries.
We are up around 109 points in the Nifty, very close again to the 24,000 mark, which we have been resisting. Mid-caps in the green, and so is the Bank Nifty. So that's where the recovery is coming from. Qatar has set to restore half of LNG output a month after Strait of Hormuz opens, and that's an important update coming in from Petronet LNG.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and I'm going to be your host for the remainder of the show today. Final 60 minutes ago, it's not too bad a day. In fact, it's good because it's the third straight session where we're seeing a century on the Nifty. You'd like that, and as we speak, we're at the high point of the day. Well, you've tuned into the final hour of trade and Closing Bell. Let's tell you what we have lined up for you first on the show. The Nifty has hit the 24,000 odd mark. The markets spoke up in the last hour of trade. Broader markets, they slightly underperform. IT, FMCG and Realty, well, they lead the gains, while metal stocks, Nalco, Hindalco and Vedanta, they're under pressure as aluminium prices have cooled off. We'll do a deep dive into the aluminium pricing story. Will come up in just a bit. Tata Consumer as well has perked up on the back of a bullish note coming in from Citi. Mangalam will be joining in to tell us the rationale of that particular note. And in a key development for the gas space, Qatar says that the LNG output recovery could be swift once the Strait of Hormuz does reopen. With India heavily reliant on a Qatari LNG, the update is positive actually for companies like Petronet LNG. Pressure persists though on Pine Labs as the company refutes media reports and downplays any potential RBI-related impact on its profitability. Okay, what do you do then? You've seen 23,300 and now you're seeing around 24,000. All of this in a matter of 3 sessions. Should you be booking some gains or should you be riding for bigger gains? Well, Mitesh Thakkar joins us to help us out with his take. Mitesh, what do you make of today's move on the Nifty first? You could tell us where the IT index is going through a bit of consolidation. Not the IT index. Let's talk about the Nifty Bank actually, because that's underperformed after a few sessions. And would you be more bullish on the Nifty Bank in comparison to the Nifty?
Good afternoon, Nigel. I think, we have been more bullish on the Nifty Bank, but today it is the Nifty which is kind of trying to play catch-up. Now, between the two, the pattern of the Bank Nifty still remains stronger, but the Nifty also, given the fact that the Bank Nifty itself is about 40% weighted in the Nifty is also getting some kind of leg up, and Nifty now is very close to the highs of 24,031, which 24,050, which we recorded on the 25th of May. So I think that's one target which I had, and then I suggested once we cross that, we have a good chance of heading towards 24,350, 400 zones, and maybe even higher. But that's the near-term target. So stay positive on both the indices. But between the two, I still prefer from a positional trading point of view, I still prefer the financial names. But as of now, I think both the indices are looking good. Right now, I have a buy call on TVS Motors with a stop at about 34.10 for targets of 35.35, and Titan is a buy as well. Titan, I would recommend keeping a stop just below the day's low of 42.83, so keep at about 42.80, and look for a target of roughly around 44.50.
What could be the big swing factor, Mitesh? You recall when you had, Sehwag, Ganguly, and then you had Sachin as well. What's been happening is that the Nifty Bank, the Tech Index and Reliance, they have not been able to party together. But every now and then there is a bit of a relationship and a partnership that they get into. And for today's trading session, the Tech Index and Reliance Industries has found its form. Remember, Reliance Industries corrected 8% in the last 1 month. What are the charts indicating on Reliance Industries? Because that's like an index by itself. We have a big event that's coming up later this week itself. What is your view? I've noticed numerous times it goes to 1250, 1280, and then it sees good amount of buying. At 1330, how's it looking?
Same that I have some positions over here. I think Reliance is just giving the first signs of reversals. Getting past 13.10.20 was the trigger, and the near-term target should be around 13.55. And once we start crossing that, then I think Reliance might turn even more positive, and I would look at possibly targets of around 1405 to about 1410.
Okay, all right. Just one more stock, Nalco. If you could look at it on the charts, Aluminium prices have corrected and alumina prices have been weak as it is. Nalco, a stock that was at around 440 bucks, that corrected to around 355 rupees earlier today. Seen a bit of a bounce from the lows, but how's it looking on the charts? Mitesh, if you could help us out. You know, the structure, if you would just pull up the last 1 week, you'll see what I'm talking about. Aluminium prices came off and that's why the stock has come off. But I'll tell you what, fundamentally, aluminium prices may not breach that $3,000, $3,100 per ton because of the short supply we have seen in the global markets. On the charts, how's it looking?
So Nalco has been weak. Again, disclaimer that today morning I booked some profits on the short side. We had some put spread actually on Nalco. See, the weekly charts, after a long time, and if you look at the chart from July, August 25, the stock has been in a one-way uptrend. And now I think there's first signs of that profit booking emerging on the chart. So one, I think the first time the weekly closing below that, some more correction could still play out, and I would, even look at a target of around 335, 330. So from 150 to about 440, I think retracement to about 330, 340 looks very likely over here.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, let's do a quick check then on the F&O markets. The reason I say that is because we have the weekly expiry that will play out. And as we were pointing out earlier, the Nifty Bank has gone through a phase of consolidation today, which is pretty much par for the course after the kind of run that we've seen. The Nifty is still up close to around 0.5%. What's powering us ahead is the IT index as well as Reliance Industries. And for me, Reliance Industries holds the key from here on if we need to go past the 24,400 odd mark. So Reliance Industries will have to perform. And for today's trading session, it's holding one end up. We should pull up the intraday chart on Reliance Industries. Moving to the options data. 23,950 put. Now the premium has come down to around $5. At the start of today, it was 130 bucks. So there is aggressive writing that we're seeing at that particular strike. Now down to around 7 rupees. So aggressive writing out there. These bulls, they'll be expecting 23,800 mark to actually hold out. So that's why that's the kind of writing, and I don't think that'll get breached on the downside. On the upside, it's interesting, because you've got the direction right? The markets have moved up, you've bought a call. If you bought a call, the 24,300 call, ideally the premium will move up. But the reason that we're seeing that the premium has moved down is because the time value of money is getting eroded and there is writing being seen at that particular level. So the premium has come down to around 15 bucks from around 40 rupees. That's what the options data is telling you. So you're just plugging that in. The premium on the 24,000 call was around 50 bucks. So those bears, they are expecting the 24,050 mark to actually hold out on the upside. That's the resistance mark. Support comes in at around 23,900 or thereabouts. In terms of stock futures, Suzlon has come in for a bout of short covering. So that's, the stock that should come up on the screen. The stock is higher while you have the open interest lower. We'll also pull up, Bandhan Bank, because that one, after a phase of consolidation, that one's actually coming out of that. It was going to around 180, 190 rupees. There is some signs of buying on that one, both in the cash market as well as in the F&O market. We'll keep an eye out on that one. You have Inox Wind as well that's coming for a bout of short covering. And EMS players, they are back in the game today. And we're seeing good amount of long build-up on a stock like PG Electroplast. So short point being, just for the next 60 minutes, 24,050 is going to be a bit of a resistance. If we can get past that and if we can trade about that, I'll tell you what, we could also see 24,150 today. So just keep an eye on that mark, 24,050. That's the line in the sand for the bears. They'll want to protect that level. But the good news for me is I'm not alone in the studio right now. Ekta Batra has joined me. Hey, Ekta, good to have you on the show. Markets holding up. I mean, I think sentiment has turned for the better, which is good news.
Hi, Nigel. Yes, absolutely. We are inching closer towards that 24,000 mark. Let's see whether we manage to sustain. But what would probably be more interesting is what exactly the FIIs do in today's trading session. We did have that little flash in the pan, 200 crores in terms of an FII net buy figure. So let's see whether we can build on that. But nonetheless, for the mid caps as well, holding up well. So up around 0.3% currently for the mid cap index and the advanced decline ratio. So that's a key parameter, which is in fact incrementally improved as the trading session has gone on. So around 2,300 odd stocks advancing to around 2,072 odd stocks declining on the Bombay Stock Exchange. As you can see, that crisscross and that little bit of a gap being maintained at this point.
Indeed. Let's get in Dharmesh Khan, then Head of Research at Chola Securities, who joins us on the show. Hi, Dharmesh. It seems the markets seem to be getting their mojo back, because crude oil prices are just sliding down. We have some various news reports that are coming in then, but crude is headed one way. That appears down. It looks like it's going to breach the $80 per barrel mark. given this sort of a backdrop, what do you like? Let's talk about the banking space first. Bank of India is something that you've liked. Any view on Bandhan Bank? You know, there's going to be a change of regime in West Bengal. There's already a change out there. And this hope is that growth will be far better. You know, a lot of companies with exposure out there could fare better as well. Bandhan Bank, a rank underperformer. You'll be interested, $215?
Yeah, good afternoon, Nigel. Thanks for having me on your show. We have been constructive on the entire BFSI space, which includes NBFC as well as banks for a while. And we have, in the public sector banking space, we have liked Bank of India. Earlier, we have booked profit, but again, we have reinitiated on that a buy recommendation. At the same time, I think this space is in for a good play because credit growth so far till the month of May has been very strong, 15-16% kind of a credit growth we are seeing. And expectation is that NIMs will improve because cost of deposits are likely to come down. 5-10 basis point kind of improvement is likely to be there. Net interest income growth is what we are looking into, and there I think a strong traction can be there. This time around 100-150 basis point of our net interest income growth will translate to over 10% kind of a profitability growth. So that is the entire metrics on which we are working. Treasury income again will benefit because bond rates have come down. So everything is playing in their favor. The expectation that interest rate will, I mean, RBI may hike interest rate. We don't buy that because the way, the crude prices are correcting, and given the fact that if the status quo is prevailed, then crude prices should actually trade below the levels when the war started. The reason being the consumption has come down. I mean, 2 million barrels per day global consumption of crude oil has come down. It's likely to be so. What we are liking, I mean, you should go with the winners. And there, I think Axis Bank stands a strong chance, along with IndusInd Bank, which is again the same story like Bandhan Bank is again coming back, gaining exposure. But Bandhan Bank, the only caveat, Nigel, which I have as of now is monsoons are playing a bit of a dicey play. And the area in which Bandhan Bank operates, basically Odisha and Bengal, is very suspect to that. Earlier also, where you have seen either, be it flooding or drought has led to a problem out there. It's a microfinance company which has translated into a bank. So be careful if you are going into Bandhan Bank. Risk reward issue is definitely favorable. Having regard to how the macros are playing, I would still prefer, Axis Bank or IndusInd Bank and Bank of India.
Okay, all right. Well, those are a couple of views coming in there. But the big story definitely has to be what's taking place with aluminium stocks. Hindalco, Vedanta, all of them are under pressure today. This is because prices, of course, have hit the lowest in over 2 months. Nigel, they're down around, 8 to 10% from the peak?
Well, that's right, Ekta. The easing of the geopolitical tensions actually following that US-Iran peace deal, that's leading to the markets reprice the war premium that it had bid up in terms of aluminium prices as well. And aluminium prices, well, they have corrected nearly around 10% from the recent high. Remember, prior to that, they touched the highest level we saw in 4 years. That was at the end of May when it went to around $3,850 per ton. Now, remember, the rally was driven by various concerns over the potential supply disruptions in the Middle East. We must note that even post the recent correction, after prices have corrected from around $3,850 per ton to around $3,350 per ton, prices are still higher than what estimates, the analysts are factoring in, because they are in the vicinity of around $3,000 to around $3,200 on a per ton basis for the next 2 years or so. But why does the street believe that prices actually could get supported even after this 10% correction? Let me explain. First, the GCC countries as well as Iran put it together, they account for around 7 million tons of aluminium smelting capacity. And parts of this capacity, they were impacted during the US-Iran conflict. And restarting of these facilities could take as long as 9 months. So limited point is immediate supply response could be delayed. Second point is you'll say China will supply. But China, which is the world's largest producer of aluminium, they have a production cap of 45 million tons. And they're already at around 97% in terms of utilization levels, which means there is very limited room for China to come and flood the market. Point number 3 is there are various long-term drivers, right? We talk about AI, we talk about data centers, grid expansion, renewable energy, as well as broader energy transition projects. All of them could actually be a tailwind for aluminium consumption as well globally. So the bottom line is the geopolitical risk premium is fading. The broader supply-demand imbalance, that suggests that aluminium prices could remain higher because the market could be in a bit of a deficit, which could provide some kind of support at lower levels to aluminium LME prices, which are down to around $3,380 per ton. Dharmesh, what do you think? Nalco at 440, everyone was interested. It's at around 355 today. There is seen a bit of a bounce from the lows. Hindalco as well, I think it was 1120, 1130 a few sessions ago. It's at around 980. And Vedanta, that actually had a blockbuster listing at 525. One was wondering whether you should be wait for better times or not. I think those that played that particular event, they just took money off the table. Yesterday it was down 5%, today it's down another 5%. But valuations as well, it seemed to have run ahead of himself. Would you be looking to buy any of these aluminium-related plays? Because the aluminium cycle could actually continue for close to around a year, 18 months at least.
Yeah, absolutely, Nigel. I buy all the points which has been put forward by you. I mean, all those points are truly valid points. And the speculative froth which was there in the aluminium pricing because of the Middle East crisis is now on the unwinding phase. It may correct even more. I mean, 5-7% kind of a correction cannot be ruled out when the unwinding of trades take place. So that is likely there. But aluminium, demand on the ground has seen a structural shift. If you look at a 20 years CAGR on the demand side, it was around 3.5 to 4% on the volume side, which has gone up to 5.5 to 6%. And going by the various managements like Hindustan Zinc and all, they are doubling their capacity next 3 to 4 year time frame. So I think this structural story on the aluminium is likely to play out. A commodity by its nature is very wild in its behavior as far as metal prices are concerned or the stock prices are concerned. So this is an opportunity to have a staggered buying approach. The best way to play the metal space is keep on buying the declines. Every 5% decline you add more. I don't think more than 10% kind of a decline can be warranted on the stocks. And one more year of actual structural play is there. So Hindalco, Vedanta, or Hindustan Zinc, Nalco all will retrace their highs which was made last few months. So we are betting on this trading play still on the metal space.
Okay, all right. Well, you're still betting on the metal space for now. We have Hindalco, which is under pressure. In fact, it's the top loser on the Nifty, down around 3.2%. But let's talk about a couple of stocks which are in fact bucking the trend at this point. Tata Consumer is a buzz today. This is on the back of a bullish Citi note. Manglam is here to tell us more about that. Manglam, over to you.
Well, the management met a couple of analysts yesterday, and we've got a note that came in from Citi. They are bullish on this stock. They have a target price of 1,450 rupees per share because, the takeaways were basically demand remains fairly resilient with no visible slowdown so far as against what was feared right now. Their growth outlook for at least, Sampann, the ready-to-drink Narishko business, which will do well because of delayed monsoons. Organic India and Capital Foods should do well for them. Commodity costs, as per the company, remains benign in the very near term. And they're on the right side of the commodity cost, curve. Because despite inflation that we're seeing in all other parts of the business, their key products are seeing actually prices come off, most notably in tea itself. So those are positive for them. Pricing actions, they say, remain calibrated with no broad-based price hikes that the company is taken. So as a result of which they stand to benefit, and margin expansion pretty much remains on the card. So the company expects about 50 to 80 basis points in terms of EBITDA margin improvement in FY27, with the long-term EBITDA margin target remaining unchanged at 17% as well. And add to all of this, they are also increasing their distribution as well as innovation pipeline with structural drivers for margin expansion, which include the likes of premiumization, all of them doing well for the stock. And that explains why it's doing well in today's trading session after having underperformed for a while.
Dharmesh, have you looked at Tata Consumer? Is that a stock that you like?
Yeah, I mean, on the FMCG space, particular staple side, we don't like any of the names, primarily because the valuations are high, and we do think that consumption eventually will take a hit. I mean, inflation is going to take a hit. Tata Consumer remains fairly isolated from the factors because it's more of an urban and semi-urban kind of a play. So their divisions as of now is doing well. It's likely to do well going forward. But again, look at the valuation multiples at which it's trading. 70 plus kind of a PE multiple on a trailing basis. And if you built in 15 to 17% kind of a growth rate or even 20%, it comes to 45, 50 times 1 year forward earning multiple. So that I think will be in for resetting going forward. So, the entire be it Tata Consumer or HUS, Davos of the world, we have not been recommending them as a buy trade.
Okay, all right. But the sector of the day, Dharmesh, has been tech. You have been extremely bullish on Orient Pro, and the stock actually has been a relative underperformer. But last few days, it seems that the tech stocks are getting their act together, and this one has bounced considerably as well. As you mentioned, I think it's a more products related play. You like that, or now you would choose to look at some of the frontline names?
Nigel, we are still, stock specific in our bottoms up approach as far as tech space is concerned, and the two stocks which we have liked earlier when it's not relative underperformer, it grossly underperformed the markets. I mean, Orion Pro and Tata Technologies both corrected big time. But now they are both on the recovery phase. Tata Technologies, the business is back into the line effect. I think going forward, they will do fairly well. Orion Pro recently had an investor meet. I was there in the meeting, and the pipeline and the business details which they are throwing out for the next 4 years all seems to be in place. The AI vertical is doing a fab job along with multiple scope of data center opportunities going forward in the future. So I think all this takes, be it mobility or banking transaction suite or the data center architectural stake, is doing fairly well. It's very relatively cheap. We are penciling around 380 to 400 crores of profit FY28. Based on that, it's available quite cheap, around say 12-13 times FY28 earnings multiple. 20% kind of a margin, what management reiterated, they will hold on to that. And again, the revenue run rate growth will come back to say 25 to 26% going forward. So we buy that. We have been recommending that we are buying. But as far as large cap IT stocks are concerned, I think it's more of a trading play, which is playing out based on the various permutation combination. We are still holding our horses on the large cap IT stocks, watching it from the sidelines.
Okay, so you're not interested in HCLTech today and the move that they've made?
Not really. I mean, that's a very small investment they have made, and it's good. Like being in India, and it's a proud moment. I mean, Sarvam, if it does well, it's good. But I mean, what's the top line of Sarvam? I think 45 crores is what they did last year. So plenty of things to be done. And going by the management own confirmation, the MD said that we are late, but we have started. In AI world, every week you are having a new version. So a lot of catch up to do. What I think eventually how the large cap IT space will end up with is they will be filling in the gaps. They may still have some growth, 2-3%. And most of the reports which I have seen by any brokers, they are targeting the price target as the last highs. I mean, 20-25% kind of a target price they are giving to all the companies. It's not a structural buy story which they have been recommending. It's a valuation gap strategy which they are recommending to play out, which may still play out. I don't deny that, but structurally, I think a lot of changes are still due in the AI-related IT space.
Okay, all right, fair enough. So HCLTech did that deal today. That stock is up around 3%, one of the top gainers on the Nifty. But the other stock which has been in focus is Petnet LNG, where Qatar is looking to revive LNG output, which would be a positive for India as well as stocks such as that. Sonal's here to tell us more.
Well, yes, there is a Bloomberg report which suggests that Qatar has indicated they will be restoring half of the LNG output a month after Strait of Hormuz opens. There was some infrastructure damage that happened during the strikes, and they say they will restore 80% of LNG production within 2 months itself. Now, do remember Qatar Energy, which is one of the companies there, big producers of gas, had announced force majeure during the war, and India has around 45% of its gas imports coming in from Qatar itself. The total imports in India is 50% of the consumption that we have totally, out of which 45% itself comes in from Qatar. Petnet LNG is one of the companies which imports that LNG, regasifies it, and then transports it within the country. They had indicated that they have an agreement with Qatar Energy for supply of 7.5 million tons per annum. They had also told us that the company has engaged 3 dedicated vessels under long-term agreement which issued force majeure, and that's the reason they did not get their contracted supplies. So if we talk about the stock moves as well, there was a sharp decline post the West Asia war because the stock made a high of 326.4 just before the war, and the low was on March 23rd at 235.35. There has been substantial recovery from those levels on the stock as well. Let's talk about the gas economy in general, because we did not get enough supplies from Qatar. We did diversify quite a bit. India's imports from US sharply increased post the war, 6 times up 6 times in May itself. We saw supplies from Oman, Nigeria, Angola. These were the diversification that we saw in the month of May. India is also paying spot-linked premiums to secure the supply. Yes, prices have increased from West Asia war. They are still up 80% from pre-West Asia war levels. So yes, gas prices prices are higher, but some of these long-term contracts could come in at the same price. Supply was the problem. Now looks like it could get restored, which would mean better volumes for Petronet LNG.
Got it. All right. Thanks a lot, Sonal, for educating us on that. Dharmesh, you want to come in on this? Either this name, Petronet LNG, because bulk of the supplies were coming in via the Strait of Hormuz and Qatar was a big supplier, or any of the other gas utility stocks that you like, or maybe the city gas distribution companies. We got choked on the gas front, because most of our supplies are coming from there. Your view?
Definitely a welcome news for all the gas utility players, and this will sort out much of the problem on the volume side. Q1 numbers will still be weak for most of the players in the space. But Petronet LNG, if you look at the numbers, I mean, they are the best value buy among the entire lot. One is it's a pure B2B player. Secondly, I mean, it's available at 10-11 times P multiple. And with a better return ratios, 18-19% kind of an ROE is there. As compared to others, they are at higher P multiple and low return ratios. So I think value buy definitely it is there. It's a definite trade on the stock price movement. 10-15% kind of upside can be expected going forward into Q2 and Q3. So maybe 5 to 6 months. So our trading buy on the Petronet LNG.
Okay, all right, Dharmesh. Thanks very much for joining in, and we're going to leave it on that note. Thanks very much. Well, that's the view coming in on the markets. Well, for the markets, definitely picked up a lot more in terms of pace. We have the mid-cap index, which is now close to the high point of the day, up around 0.4%, and the Bank Nifty, which is not participating as much, so just about flat with a positive bias, up around 56 odd or 50 odd points currently for the Bank Nifty. We'll take a short break, but up next, we will have Capital Minds MF's Deepak Shenoy talking to us. Stay tuned. Welcome back. Well, for the markets, it's holding up steadily. A lot of stocks in focus. So good time then to put the spotlight on the top movers in the market. Hormuz is here to tell us more about that. Hormuz, over to you.
Plenty of stock-specific activity in the broader markets today. And look at Sonata Software, the kind of move that it has had today. Top gainer on the Nifty 500, 19% higher now on the stock. The biggest single-day gain since May of 2014. And that was the time when the stock had surged almost 20%. 27th of May was that date. Volumes today are the highest in over a month. Close to 3 crore shares have been traded on Sonata Software. The 20-day average is only 12.5 lakh shares. So the kind of volumes as well. 15% of those 2.5 crore shares have been marked for delivery. And the stock today has crossed both the 50 and the 100 DMA. And the next level on the upside is the 200-day moving average, which comes at 316.5 for Sonata Software. Of course, the stock is still down over 30% from its 52-week highs, which is well over 450 rupees. Suzlon is another name that has done well today. At one point, the stock was up well over 7%, still holding on to gains of around 4.5%. It's the third straight day of gains today. In this 3-day period, the stock has gained 9%. And the volumes at the highest level in 2 months, over 20 or close to 30 crore shares have been traded. That's 4x its 20-day average, which is around 7 crore shares. And a third of those are marked for delivery today. So, and the 50 DMA, it has crossed on the upside. The next level is the 200-day moving average. And of course, today it's the third most traded stock on the Nifty 500. In fact, the 50-day moving average for Suzlon crossed the 200-day moving average it's the golden cross pattern, as they say it, on the 11th of June. And in fact, it is the third most traded Nifty 500 stock in today's session. And lastly, PG Electroplast, another consumer durable name that's done well today. In fact, the third straight day of gains for this one as well. 15% the stock has gained in the last 3 sessions. Volumes at the highest level in 2 months. Over 1 crore shares have been traded today. Again, 4x its 20-day average, and a quarter of those are marked for delivery. The stock again has crossed its 50-day moving average. The 100 DMA is at 532 on the upside. The 200-day moving average, of course, is at 549. The stock is up 10% so far in the month of June and has recovered everything that it had lost in the previous month.
Okay, all right, Hormuz. Thanks a lot for that. Well, let's welcome Deepak Shenoy, CEO at Capital Mind Mutual Fund, who joins us on the show. Hi, Deepak. Good to have you on the show. Thanks a lot for joining in. Well, I'm looking at the sectors and themes that you've been betting on, and I see there is some non-ferrous in your portfolio. What do you think? That's had a dream run, actually, and it's giving back some part of that. Do you believe that the structural story is still intact, say, for the next 18 to 24 months, particularly on non-ferrous metals like, say, aluminium, copper, as well as in a bit of a deficit? Do you believe this dip is actually a buying opportunity?
Thanks, Nigel. In fact, I think aluminium and copper, of course, we have positions there. There is a reason why the base metals here are, I think, doing a better job at getting, in terms of, they're doing well in the market, is also because, not just because of a contraction of supply or change, a minor change in demand, but the structural change is when companies in general across the world are moving from asset light to an asset heavy kind of a model. Whether it is Google investing in data centers at the large level, India is also investing a bunch in data centers and so on. The war dynamics of in geopolitics have forced companies to increase their own defense expenditures substantially because they feel perhaps that their partners may not be reliable enough to depend on in case of a war, and they don't want to give more business where there are, there are problems in terms of approach in many cases. So more and more companies are saying, listen, we got to do stuff locally. We got to increase capex where otherwise we would normally import from abroad, whether it's a dependence on America or China or any of these large countries. The idea is to increase domestic production of whatever is actually a physical good versus importing it, even if it's a little suboptimal to produce it in your country. It's happening in India as well. We are trying to make in India, even if it's for India itself, even if it's relatively cheaper, to import it from China. We'd say we want to build our own factories, our own equipment, and that is going to increase the demand for both copper and aluminium. And eventually, of course, steel as well, different dynamics there. But I think there is a rise in that as a structural trend. If you look at the next 5 years, we will see the era of capex. In India specifically, there's a lot of capex that is happening that's funded by banks. Look at industrial capex or industrial just borrowings. They've grown at 15% for the first time since 2013 or so. It got dipped all the way to 0%, went negative, and then now it's come back up on the rise of capex. So I think capex worldwide is having a return, and it's in physical goods and physical infrastructure and so on. That's where I think these base metals and perhaps the technologically more useful metals like aluminium and copper will probably do have a good run in the next few years. Temporary moves, will happen on a day-to-day basis.
Okay, all right, Deepak, that point is taken. Welcome to the show. In that same theme, would you possibly buy, the older economy stocks, say, for example, from the cement space, the L&Ts of the world?
Well, I think L&T in particular or in general, these companies may actually have more businesses than just cement or core infra. There are engineering companies that will benefit from the rise of engineering as a requirement in the growing capex world. But pure cement, I've never liked it as much, primarily because it's valued very richly for what it is, which is a commodity. But, whether it is a moat because you've got a limestone mine license, or it's a moat because the suppliers or manufacturers of cement actually cartelize in India to some extent, and then therefore prices are kind of meaningfully controlled by them. I think the valuations and the risk don't add up quite that much. Though, having said that, I think there'll be an initial short-term jump in some of them because of the push to infra. They're not as technologically useful as some of the other things like copper or aluminium, which have more consumable, demand. So that means you consume something, then your demand comes back because of more of it and so on. So there, I'd say smaller demand growth will come. That is largely government-led infra plus real estate, which tends to, kind of highlight that part of it. So I'd say it's much further down the line there and not as exciting in terms of valuations.
What about gold, Deepak? All that glitters is gold or not? At the start of this year, the equities were the whooping boys, because there's a lot of pressure on the markets and stocks are falling a lot. Gold only fell 20%. What part of the portfolio should be gold? And I see that you like some of these gold financiers as well. I think you'll have some exposure out there. So help us out.
We do. I think quantitatively speaking, they have done really well. In general, gold financing has gone up quite considerably. If you look at just the banking sector, they've gone from a 20,000-30,000 crore kind of lending book 5 years ago to 4,85,000 crores or so, I think, in the recent RBI release as of April. And it's probably increased since then, which is just the lending book of banks on gold. The private financiers have another 100-200,000 crores of lending on gold itself, non-bank, that is. There is also that's a different it's not attractiveness to gold itself, it's attractiveness to the gold financing business, which I think has a layer of cyclicality in the gold prices, but also has very low NPAs in comparison with others because you can liquidate the gold fairly easily. Having said that, there has been a structural demand for gold in the past, but some of that has gone away. We've seen central banks also kind of pare their exposure to gold. Recently, we've seen gold prices come down quite tremendously. I think that was largely because Dubai was, it's a big hub for trading gold. So parts of it, when we were out of commission, there was relatively less trading activity, and supply and demand couldn't meet meaningfully. There were some bumps up and then bumps down as well. However, you look at India's demand was about $72 billion last year. I think the government's trying to curb and control that in as much ways as is possible. But they might actually, I think, there may be a policy reaction to kind of change the way gold is used in India by recirculating it in some form, by creating a monetization scheme of some form. These might help reduce Indian demand. And if we do reduce Indian demand from an export perspective, import perspective, we will actually affect the price of gold because India is one of the largest importers of gold worldwide. So I would say there's cause for some caution here on gold prices. I don't think last year's rise will be the same as this year's, whatever happens this year. But it may be a useful long-term diversification exercise. It tends to spike at the most crisis layer of moment. So having small part of your portfolio in precious metals in general may be useful for a more multi-asset kind of a framework where you don't necessarily care about making alpha in all of the asset classes at the same time. But you know that some asset class will perform in some times and some asset will perform in other times. So useful as a diversification, useful to wear, but I don't think useful to always generate alpha.
Okay, not useful in terms of generating alpha, but definitely maybe you can look at it as a diversification strategy for your portfolio. Well, on that note, Deepak, we're going to thank you. Thanks very much for joining in and speaking with us. So that's a whole host of stocks that we covered. Well, time now to get to our D Street chatter, where Nimesh is going to get us an insight into the dealing rooms and what they're talking about. Well, he's also going to give us some tidbits about stocks as well. Nimesh, over to you.
Hi, that was a strong day for the markets. It's actually a day's high, largely led by the large cap names. So today is not a day for any specific theme, except for the fact that there's a bit of profit booking in the metal names. It's broad-based in terms of the rally in today's market. Technically, 23,950 is a level to watch. It's trading slightly above those levels. If the Nifty manages to close above those levels, you'll probably see further short covering rally. So watch out for that in the days to come. From a flow perspective, it's again a positive day of trade. For the last couple of days, the FIs have turned net buyers and they're covering in the futures market as well. That's the trend in today's market as well. And again, the consistent feedback is that within the financial, it's basically the financials which are well bid again in today's market. So that's one consistent theme. That the FI money is slightly now chasing the large cap financial stocks. Having said that, you're going to expect further supply of paper. So QIPs, blocks, that's a trend which is continuing and might as well continue for the next few days and weeks. So supply of paper, yes, will be there. But I guess a bit of change in terms of FI flows, which is turned positive, and they're chasing some of the large cap financial stocks in the last couple of days.
Let's get to the stocks then, Nimesh. What's on your radar?
So the first is a couple of the financial names, Nigel. The SBI as well as Bajaj Finance both stands out in terms of very strong delivery-based buying for the last couple of days. That's the trend today as well. And I understand one of the leading long-only fund has an active buyer in both those names. So that's from a flow perspective. Second stock is Jana Small Finance Bank. Well, the stock has been consolidating off late. Expect a large block deal in Jana Small Finance Bank very soon. A potential clean-out trade is indication from the private investors in Jana Small Finance Bank. So that's the second name. The third couple of stocks where you're seeing a bit of buying interest back. Palkrishna Tyres as well as Apollo Tyres. Both have been consolidating because of rising crude prices. Now that the crude has fallen up a bit, you're seeing a bit of accumulation back from domestic mutual funds in the tire names. And the last is Voltam Transformers, a thinly traded stock, but again been active off late, a bit of upside as well in the last couple of days. And for Voltam, there is a buzz that the company is likely to bag a very large order very soon. So that's something to track in Voltam Transformers.
Okay, all right. That used to be a darling. Stock has corrected a fair bit. We'll keep an eye out if that large order does come in. Thanks, Nimesh, for joining in and giving us those tidbits as well. Well, we'll take a short break. As always, we'll tell you what to buy or sell. On the other side, our technical expert will be joining in.
Welcome back. Well, let's just cut across to President Trump speaking to the Emir of Qatar at the G7 summit.
We have the right to if we want, but we're not investing any money. We didn't pay for it like Obama did. He paid billions of dollars. He paid $1.7 billion from an airplane, all green cash. It was crazy. I watched that. I couldn't believe it. But the one thing that's happening that's of note, frankly, the only thing that really matters to me, is Iran will never have a nuclear weapon. And it says it loud and clear. They're not going to develop it. They're not going to buy it. They're not going to do anything with it. And if they do, they suffer unbelievable consequences. Not just a little bit like, I won't even tell you the consequences, but the consequences are the ultimate consequences. And with that being said, I hope we have a very good relationship. But the biggest thing is they will not have a nuclear weapon. And that's the reason I got in, and that's the reason I agreed to sign. And we originally had, Marco was with me, and they originally wrote that we will not develop a nuclear. We have a very good relationship. But the biggest thing is they will not have a nuclear weapon. And that's the reason I got in, and that's the reason I agreed to sign. And we originally had, Marco was with me, and they originally wrote that we will not develop a nuclear weapon. I said, no, you're not going to develop it, you're not going to buy either. So we have, that took another couple of days of time. Everything was, it's ridiculous, but so we have, they will not develop, purchase, buy, or any other thing. They're not going to acquire a nuclear weapon. If they do, all hell will rain down on them. And they're not going to do that, you know. Now, you talk about regime change. I never cared about regime change. It's never a part, but I guess you have regime change because you know better than anybody. The first group, they're all dead. The second group, they're dead. A part of the third group is gone. And we're dealing with people that I think are very rational people. I mean, they were nice to deal with. They were strong people, smart people. I think actually they're smarter than the first and second group. But they're not radicalized, and they're, you know, looking to help their country. So, again, I don't believe the regime change. You know, I've watched regime changes for years. They never work. It has to just happen. I can tell you this is a country where the Emir is so respected, and the Prime Minister is so respected by the people, and that's the way a country should run. It should run out of respect, not of fear. As you know, at least 42,000 protesters were killed in Iran, They were protesting. The wrestler, they had the big event at the White House the other day, the UFC, and they were all talking about he was a great fighter, and he was hung with his two friends because he spoke something about their regime. It's tough stuff. So we're very happy that we're involved. We're very, very impressed with Qatar and the way they've handled things because they were really on the line. They were in the front line. They were being shot at just about as much as anybody, but you were a lot closer because you were right there. Literally, I could walk in a minute. Every other place I have to take a plane, but I can walk. So they were really on the line. And I just want to comment that, and I just want to really congratulate you on bravery. I don't know if you get congratulated for bravery, because bravery is something you either have or you don't, and you never know until you test it. But you were tested, and you had great bravery. Thank you very much.
Thank you, Mr. President. Thank you. Really appreciate it.
Are you going to have a separate meeting with President Zelensky? And what would I had one. What would a Ukraine deal look like? Well, we have one, but we had a good meeting. I'm meeting him later on, too. We had a very good meeting. Look, Russia should make a deal. Russia's lost.
Okay, some important statements coming in from President Trump there, where Iran deal should be successful. And in fact, it has gone to the second stage. And the key point is that Iran will never have a nuclear weapon. That is what President Trump said. That was the key point. And obviously, there will be some consequences if in case there is anything else that comes out of it. But that's basically the indication from President Trump saying that the Iran deal should be successful. But good time then to get in some technical calls now. We have Mitesh Thakkar joining in. Mitesh, what are you buying or selling today for a reverse trade tomorrow?
So I think, the markets are looking positive and therefore we'll go with some long positions. Ashok, we're in after a good move in the last 2 days has been consolidating. So that's a BTST. Keep a stop below 156. Look for targets of 161 to about 162. And on the highs is Bandhan Bank, which I would recommend taking a BTST with a stop below 213 for targets of 222.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, let's welcome Jay Bala, CMT at cashthekiosk.com, who joins in. Jay, crude has dipped. We're almost at $80 per barrel. Good bold call by you. Where are we headed on that one?
Hi, Nigel. Thanks for acknowledging that. See, I've been saying the crude is headed to below $50 to $45 over the next 3 to 6 months. This is the time when others have been calling for $150 to $200 crude. But what has happened just now is just a short-term price move. There's still a lot more pending for crude to follow through here. Today's, in fact, just a couple of minutes ago, where WTI broke below 78.97. It invalidates any alternate bullish options that's pending for the NYMEX and the Brent variety. Brent also broke below 81.16 on intraday basis. So that's good enough. There are no bullish options left. There's only way for crude to go is down. And anticipated to break the December low first at about $54. And then later on, go by the time the end of Q4 of 2026, I'm anticipating it to be about $45.
The champagne's on you if that happens. Jay, I mean, I recall when we were at around $110 per barrel, you had said that, crude will move down to around $80 per barrel. It's happened. Now you're talking about $50 per barrel. The Nifty bulls will be very excited. So talking about them, where is the Nifty headed then? We have gone through this period of consolidation with a downward bias. Fresh all-time highs by when?
Yeah, see, the recent low of 23,070 is a very perfect 61.8 Fibonacci retracement. But the short-term structure is a bit ambivalent. So that's the reason why I'm still waiting for the level of 24,090 to be crossed. If that crosses, it very clearly says that the recent low of 23,070 is a corrective low. And once this level of 24,090 is taken out, there'll be shock and awe on the enjoyable side, which is the bullish side of the markets. So watch for 24,090 as a very important level. So more importantly, what's happened for the markets is that the India 10-year bonds, they've clocked a short-term double top at 7.1. So, the yields are likely heading to 6.6 to 6.49. So that will be a trigger for the Nifty financial sector and also for banks as the bond prices would rally. And another important point, Nigel, is that the rupee has very likely made an important bottom at 96.96. Now, we had discussed this. I didn't want the rupee to close below 96.75. I did that, and I pointed out that if it printed 95.1 before 96.2, the bottom is in for the rupee. And there's a very good possibility that rupee is heading to somewhere close to 87 to 83 from a 3 to 6 months perspective.
87 on the rupee from a 3 to 6 months perspective. Is that what you said?
That's right, Ekta. And it's very, it's come, and if you recall, I was the only one strategist, economist, or fund manager to call for rupee to decline to 97. And so this is a completion of a cycle that started from 2013. So this that cycle is over, and there's entering a corrective phase. That corrective phase, if the RBI doesn't intervene, is likely to head at somewhere about 87 to 83.
Okay, all right, I'm sure.
Ekta's booking her next trip, I can see.
No, I'm sure there will be many people who would be very happy to hear the fact that, the rupee would probably appreciate from these levels. So definitely, let's see, Jay, if that holds true or not. Well, for the markets, it is holding very steady at this point. We'll take a short break, but a lot more on the other side. Stay tuned.
It's a good session. Actually, we've got a few minutes to go. Jay Bala is still with us. Jay, let's get straight to the stocks. Give us 2 ideas at least. You can give 3 if you want.
Yeah, I have the first one is on DLF. DLF is breaking out of an inverse head and shoulders pattern. So stop loss at about 554. The initial leg of the inverse head and shoulders is about 25%. So usually inverse head and shoulders pattern travel as below, so above. So another 25% addition is possible here. And I'm very bullish on the real estate space. I call this real estate space as a turnaround candidate in April. So I'm expecting all-time highs. So I also have a similar setup on Prestige. So I don't want to be too much concentrated on the real estate space. The second one is on Interglobe. That also broke about inverse head and shoulders pattern yesterday. It gapped up above the neckline. And today it's consolidating in a sideways fashion. A stop loss at about 41.56 for fresh all-time high here.
Okay, all right. Any thoughts in terms of the IT space?
TCS, it's a very important question, Ekta. Glad that you asked. TCS is showing early signs that it's likely to have put in a bottom, but we need further evidence for confirmation. Very similar to Reliance. Reliance also needs to cross 1370. If it does that, that will be an evidence that the bottom is in place. Because TCS has been a falling knife. That's the reason why I'm a bit risk averse calling the turnaround. So wait for the further uptrend to continue from where it started a couple of days ago. If that were to sustain, I'm sure the whole IT sector is likely to turn around.
Got it. We need to track the recent lows. Got that, Jay? Always good chatting with you. Catch up with you rather soon. And that call on crude is going to be beautiful, as well as the rupee. The bulls will be enthused. Well, let's wind down the markets for you then. It was a good trade. The market's going over with a gain of close to under 140 points. Remember, it was a weekly expiry that played out as well. Well, in terms of the legs of the market that did do well, the Nifty Bank was a little off color. That was actually a relative underperformer today after leading the way in the last 4 trading sessions. However, tech stood up. Reliance Industries stood up. And that's the reason why, in fact, we went home with solid gains. On the Nifty pack itself, you had HCLTech that went home with a gain. The Sarvam AI acquisition, the street likes it. Strategic investment out there. Stock goes home with a gain of around 3.5%. Tata Consumer, City likes the stock. Stock goes home with a gain of around 2.5%. On the flip side, metals came in for profit taking. You had Hindalco, JSW Steel, both of them were down. And from the broader markets, Nalco as well as Vedanta Aluminium, both of them did see some profit taking.
Well, yes, and for the broader markets, it actually was a good day. So the mid-cap index picked up pace. It was up around 0.4%. The advanced decline ratio progressively improved. And by the close of trade, there are around 2,500 stocks advancing to around 2,000 stocks declining on the Bombay Stock Exchange. So there's been a significant improvement in the advanced decline ratio. Stock-specific, HCC, Idea, Forge, these were a couple of gainers, up around 5 to 6 odd %. We had Dixon Technologies, which was up around 3 odd %, despite a brokerage note which was a bit negative on it. We also had a couple of other stocks, RR Cable, which was in focus on the back of a brokerage note. Petnet LNG was in focus on the back of news, so that stock ended higher in today's trading session. On the downside, IOL Chemicals ended lower with a cut of around 6 odd %. Grow was down around 3.6%. Pine Labs was down around 2.3% in today's trading session. And a couple of these pharma stocks also had it a bit rough. So Newlin Labs, Piramal Pharma, both these stocks were down anywhere between 2 to 3 odd %. So that's basically what took place in the markets today. The Nifty ended just shy of 24,000. We had the mid-cap index, which ended 0.4% higher. And we had the Bank Nifty, which managed to gain around 100 points in today's trading session. That's a wrap on Closing Bell. Markets Forward comes up next. Stay tuned.
Markets extend the winning streak, ending in the green for a third straight session. Nifty finishes above the 23,950 mark, while the IT index emerges as the top sectoral winner.
Stocks of aluminum makers slide after metal index sees a drop of 4% overnight, and the war premium fades. Expectations of disrupted Gulf smelting capacities coming back to the fore aids the decline.
Monsoon in June is set to disappoint, with the deficit seen widening to 40% in a week, says SkyMet. The biggest concern remains the sharp shortfall across central and eastern India ahead of the crucial sowing season.
HCLTech picks up over 10% stake in Sarvam AI for 1,427 crores. Marks the first ever investment by an Indian IT services firm into a homegrown AI company. HCLTech's CEO Vijay Kumar tells CNBC TV 18 that sovereign AI is the next big opportunity for them. Good evening. You're watching us here on Markets Forward. This is the second day of the week. It's your go-to show where we aim to get you all the key data points to get up for the next trading day while recapping today's session as well. I'm Mangala Malu, with me, Sonal. Good evening, Sonal. You know, the market did well in today's trading session. The second day, we did see a bit of a follow-on buying. The interesting part was, just like yesterday, we also saw a decline from 24,000 levels. We closed closer to the 24,000 level today than yesterday. But it was all heavy lifting done by the IT pack and Reliance. The Nifty Bank perhaps took a pause for breath.
It did recover from the lows, but then did not match the levels that we saw for the Nifty. So it continued to underperform the benchmark. Mid caps also recovered to end in the green, 0.4% higher in trade today. But the top gainers, as Mangalam pointed out, included the IT pack. We did have follow-on buying in the realty pack as well. So that was the top gainer, 2.3% higher on that one. Media, FMCG, all of them did great, but there was some profit booking, or at least some decline in the metal space. So that is something we'll discuss in greater detail. But before that, let's tell you what we do have as a lineup on the show for you today. We start with top movers and shakers of the day with Hormuz Fatakia. From weakness in aluminium stocks to stock-specific action, we'll talk about Petrant LNG, Tata Consumer. We've got all the key market-moving factors covered on the show. Last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. So let's go across to the first segment of the day. Hormuz is joining us now from the big wall with the top movers and shakers of the day. Hormuz, over to you.
You know, early in the morning, we had asked a question: if the banks underperform, who's going to put their hand up to lead the Nifty higher? Both IT and FMCG did that job today. Of course, Reliance Industries too. That was the biggest contributor. But both HCLTech, TCS and the mid-cap IT names did play their part in the outperformance of the market today. HCLTech, of course, a news flow-driven move, 3.5% higher on the stock. And both Tata Consumer and HUL also doing well for themselves today, taking the index higher in today's trading session. What was sulking, though, were these aluminum names. There's a second straight lower circuit for Vedanta Aluminum, of course, after its listing yesterday. Hindalco continues to grind lower, the fifth straight day of losses for the stock. And Nalco at one point was down 5.5%, but did manage some recovery from the lows of the day. You take a look at the newsmakers as well. Now, the prospects of a delayed monsoon and the extended summer is boosting fortunes of a company like PG Electroplast. The stock was up for the third day running. Suzlon as well did well in today's session on very strong volumes. Sapphire Foods, after the approval of its merger with Devyani and GIC, 7.5% lower. The full OFS portion, non-retail bit, was yet to see full subscription on last check. You take a look at the volume movers as well. Sonata Software 18% higher, in fact ended in a 20% circuit today, the biggest single day gains all the way back till 2014. Paradeep Phosphates, FACT, MMTC, all of them gained today on very, very strong volumes. And lastly, you take a look at stocks that ended at 52-week highs in today's session. VA Tech Vabak continues to move higher after that potential deal between the US and Iran. Jai Bharat Maruti, another 52-week high for the stock, and another 5% circuit for DE Development Engineers as well in today's session. Back to you guys.
All right, Hormaz, thanks a lot for that. In fact, you alluded to a bunch of stocks that did perform well in today's trading session, and a large part of them did belong to the metal pack as well. It was the metal stocks, Hindalco, Nalco, Vedanta, Aluminum. All of them came under pressure amid easing aluminum prices. The metal is now down over 10% from its peak that we saw in May. What is the outlook here on the prices and the stocks? Nigel joins in with the details.
Well, that's right. The easing of geopolitical tensions following the US-Iran peace deal is leading markets to reprice that war premium that it had bid up. And that's what resulted in aluminium prices moving up. Now, remember, aluminium prices have corrected by close to around 10% from the recent highs after touching the highest levels we have seen in the last 4 years or so. And those recent highs were hit towards the end of May 2026. Now, what was the rally driven by? Well, it was driven by concerns over potential supply disruptions in the Middle East. We must take note, though, that even after this 10% correction, the current prices of aluminium are above analyst estimates. They are factoring in aluminium prices at around $3,000 per ton to around $3,200 per ton over the next 2 years. But why does the street believe that prices will be supported? Let me give you a few reasons. First, the GCC countries as well as Iran, put it together, they account for around 7 million tons of aluminium smelting capacity. And parts of this capacity, they were affected and they were impacted during the US-Iran conflict. Now, restarting of some of these affected facilities could take as long as 9 months, which will limit any kind of big supply response. So that's point number one. Second, China's is the world's largest aluminium producer. It continues to operate under a production cap of around 45 million tons. And they're already running at around 97% utilization levels, which means China cannot just come in there and push out a lot of supply. Point number three, the long-term demand drivers, well, they remain intact. We talk about rising investments in AI, in data centers, renewable energy, broader energy transition, all of them. That's what will give aluminium consumption a push globally as well. So the bottom line is, though the geopolitical risk premium is fading, the broader supply-demand balance suggests that global aluminium market could remain in deficit in the next few years, which could provide some kind of support to prices after this recent correction. So the broad number Street is working with is around $3,200 per ton for this year, and then coming down to around $3,000 per ton. So we'll have to keep an eye out whether or not that range gets broken. But for the time being, it appears there are factors in place that particular range gets defended. Back to you guys.
Thank you so much, Nigel, for joining us with all those details and explaining to us about the aluminium space. To take this discussion forward, we are joined by Mayuresh Joshi of MarketSmith India and Jay Bala of Cash the Chaos. Gentlemen, good evening. Thank you so much for joining us today. Jay, let me come to you first up. What are you making of these three names that Nigel spoke about? Will that weakness continue? Fundamentally, yes, there are some issues that we are talking about. What about the charts?
The Nifty metal sector has been an outperformer. It's been one of the first few to hit fresh all-time highs. But it's come to an important resistance, and I'm also slightly negative on copper. So because the longer-term cycle might have ended for copper. So I'll be a bit careful when it comes to metal space. I'm bullish. I might turn bullish if it were to pull back a little lower to somewhere about 11,670 to 11,799. So, these names that Nigel mentioned, like Hindalco and others, they are also exposed to copper. So I will be a bit cautious here, allow for a correction to happen, and then maybe start getting bullish on it.
All right, so you'll get bullish on these once you have attractive levels. Mayuresh, I have to ask you about all the entire war premium space. While the war was on and the uncertainty was on, a large part of that is now behind us. But at the same time, we did see a lot of the upstream oil companies benefit from it as well. A lot of the commodity players benefit from it as well. Do you think now that will slowly start coming undone? Is there any fundamental pick from the stocks that did well during the war?
So I think two things. One, I think the war premium will definitely start coming off. And therefore, I think any stocks which were directly associated in terms of the impact, you talk about upstream companies to a certain extent, and anybody who's probably having a say in terms of the refining part of the business as well. I think those companies were moving in tandem with what was happening as crude prices were moving higher. However, I think we've always believed that markets with India, that this sector is prone to probably what happens to probably geopolitics, which is way beyond our control. And B, the government regulatory control still probably exists in spite of whatever we're speaking about. Therefore, these two overhangs create a huge flux in terms of taking investment decisions from a long-term perspective. Are they tactical calls or swing calls? Absolutely yes, depending on how growth moves. But to take a tactical call in terms of either upstream, midstream, or downstream companies is a little bit difficult right now.
Okay, take that point, Mayuresh. We'll come to you again, gentlemen, but let's talk about Petronet LNG because that's the stock which recovered from the day's low and surged to the day's high after there was a Bloomberg report which suggested that Qatar has indicated that they will be, resuming supplies of gas because now the peace deal is almost there. They will be restoring 80% of LNG production within 2 months. Qatar Energy was the one which announced a force majeure during the war, and Qatar is a big supplier to the country, almost 45% of gas imports coming from Qatar. And remember, India imports 50% of its gas consumption. The company had an agreement with Qatar Energy for supply of 7.5 million tons per annum of gas. In the Q4 conference call, they had indicated that the company has engaged 3 dedicated vessels under long-term agreement, which issued force majeure during the war, and since the time war has started, the stock came off sharply from the highs. We saw a high of around 326.4 on Feb 27th, and the low was around 235, but the stock did see some recovery in trade today. Where does India's gas economy stand now? India has sharply ramped up imports from the US. It's up around 6 times in the month of May itself, and we are trying to diversify our gas sources as well. Supplies from Oman, Nigeria and Angola, they've become increasingly important for the country. India is also paying spot-linked premiums for gas supplies right now. Gas prices are 80% higher than what we saw pre-war levels. So yes, we are paying a premium, but with Qatar supplies coming back on track, it could act as a relief because there was some infrastructure damage. So we were questioning the supply of gas overall. So this is a positive, and Petronet LNG is one of the companies which imports that gas, regasifies it and transports it to different sectors. So it's a relief for different sectors that use gas as well.
All right, a relief for different sectors that use gas as well. Let's talk about another group of stocks that did well in today's trading session. The FMCG pack actually did extremely well, and among the top gainers, there was Tata Consumer Products. This morning, there was a note that came in from Citi. They have a buy call and a target price of 1450 rupees on the stock. Their takeaways from the management meet suggested that demand remains resilient with no visible slowdown so far. And that's a positive because most on the street were worried that higher prices would lead to a bit of a demand slowdown. More than that, the company's growth drivers, which include the likes of Sampann, Narishko, ready-to-drink beverages, which will do better because of extended summer, and Organic India, along with Capital Foods, which are growing on a low base as the companies improve their distribution, should do well for them. And they are on the right side of the commodities cost curve because a large part of their commodities, which include the likes of tea and coffee, from last year have seen a bit of a decline. So the commodity costs for them remain benign in the near term. And at a time when most FMCG companies, which have oil exposure or oil-related exposure, have taken about mid to high single-digit sort of price hikes. Tata Consumer has taken no broad-based price hike. It's largely been calibrated. So that puts them on the right side of margin expansion as well, where the outlook is anywhere between 50 to 70 basis points over FY26, over FY26, a 50 to 80 basis points improvement in FY27, with long-term margins at around that 17% mark. So all in all, along with innovation and distribution that the company is undergoing, along with premiumization, the growth story remains intact as per the management and Citi, and that explains why the stock was higher as well. Let's go back to Mayuresh as well as Jay. Jay, I wanted your thoughts on 2 stocks, or rather 2 sectors. One is the FMCG pack, which over the last couple of trading sessions has begun to show some signs of life. Is there any chartical trade out there which is available, and is there a best placed stock? And the second part is on real estate. That sector did extremely well over the last 2 trading sessions as well. Are we seeing any breakout here?
That's right, Mangalam. I'll take on the real estate first. In April, when the markets bottomed on 3rd of April, I turned bullish on the real estate sector, and I've called for fresh all-time highs for the real estate sector. And I'm extremely bullish there. And today's close is a very important close for the Nifty Realty Index. It's just a little short of Inno's head and shoulders for the sector itself. And DLF, Prestige are the top picks over there. When it comes to FMCG, this is one of those sectors which I've been avoiding since last year. But although the very short term, the turn from the last week's low is an important low. So this sector could also rally to somewhere about 54,000 to 58,000 as a counter trend move. I'm still on a medium to long term basis. I'm a bit neutral to very mildly bearish here. So I will treat any opportunities here as a trading bet rather than an investment bet. And within the space, like just your point about Tata Consumer, that's looking very good. We've seen coffee prices decline about 26% for this year, and sugar prices also dropped about 8.5–10% for this year. So yeah, and this stock looks placed best for within the FMCG space, along with Nestle. But my point is, I would treat the entire rally within the FMCG space as trading rally rather than investment bet.
Take that point, Jay. Thank you so much for those thoughts. Mayuresh, thank you for joining us. A lot more questions, but we are out of time. With that, we'll move on now. And concerns over the monsoon season continue to mount, with Skymet warning that the rainfall deficit could widen to nearly 40% over the next week. The biggest concern is the shortfall across central and eastern India ahead of the key sowing season. Skymet also cautions that El Nino conditions appear to be strengthening, with no significant weather factor currently offsetting their impact.
Second half of June and first half of July, this is the period when possibly most of the sowing operations they take place. People, the farmers, they prepare the field, go ahead with the sowing. So this is a very crucial phase, and it is a worrying part at the moment, because the areas which need the rains most, rain-fed areas, core monsoon zone and the rain-fed zone, there it is a little critical situation. These parts of Gujarat, Maharashtra, Madhya Pradesh, the rains are not reaching there. And worrying point is nothing is looking very likely, at least in the next about 10 days or so. Even if you see 2014 and 15, in 2014, the monsoon had just stall rains were deficit in the month of June itself. Sometime it was deficit by even about 50% also, but the next year monsoon, it was surplus. So this variation, spatial variation in the monsoon distribution, yes, it is a characteristic of the monsoon, but whenever the deficit grows bigger, it becomes difficult to catch up at a later date. That is the worry. Monsoon, you see, one typical thing which I have noticed in the monsoon, howsoever bad the monsoon may be, it doesn't fail in all the 4 months. There is always some hope in that, irrespective of El Nino or Super El Nino, which we are calling this time.
Okay, that's an important weather update. But for now, we'll slip into a short break. On the other side, we'll bring you an exclusive chat with HCL's top boss after its investment in Sarvam AI, along with the key market events to watch out for.
Welcome back. You're watching us here on Markets Forward. It was the IT pack that did extremely well, led by HCLTech because of the news. The stock actually was among the top Nifty gainers, up 4% after it decided to pick up a little over 10% stake in Sarvam AI for more than 1,400 crore rupees. This marks the first ever investment by an Indian IT services firm in a homegrown AI company. Speaking with Shireen Bhan, HCLTech CEO C. Vijay Kumar described this investment as the 6th big opportunity for the tech giant. Sarvam AI's co-founder Pratyush Kumar also joined us, said they want to emerge as a no-regret alternative to global AI models.
We've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, Physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. The enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large.
This is really the time when we start playing internationally. And for us, therefore, the capital being deployed to build the next generation of models and also scaling up our compute footprint in India to serve enterprises, serve startups, serve the government. These are the 2 broad things that we'll be investing in.
Okay, all right. Before we wrap, we now bring you some key market events to watch out for. Upasana Bhatt is standing by with that list. Upasana.
Well, first up, let me start with the global economic cues, starting with US Feds. The most important Fed interest rate decision will be out tomorrow night, and even retail sales data. In terms of UK and Europe, both these countries will be reporting their CPI data for the month of May. And lastly, Japan, the trade balance data for the month of May will be out tomorrow. Now, IEA monthly oil market report, which is highly tracked, will also be out. And the most important, PM Modi and Trump to hold a bilateral meeting on the sidelines of G7 summit. So that is something that we'll be certainly keeping an eye out on. Now, in terms of domestic cues, a lot of stocks in focus in the back of corporate action. Brigade Enterprises, the bonus issue is in the ratio of 1:3. Cyient will also be in focus as its record date is for the buyback of 720 crore. And lastly, Tata Capital will also be in focus on the back of the board meeting because of the fundraise that the company is going to take into. So all in all, looks like quite a power-packed day tomorrow.
All right, Upasana, thanks a lot for that. With that, it's a wrap on this edition of Markets Forward. You don't go anywhere. Stay tuned to CNBC TV 18. Take a short break, come back. More news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. US and Iran signed the peace deal electronically, even as questions around the Hormuz toll, Lebanon and Tehran's nuclear ambitions remain unanswered. Trump arrives in France for the G7 meeting, asserts yet again that Iran will not have a nuclear weapon. Crude oil prices hit 3-month lows. Iranian tankers pass through Hormuz as the US appears to lift the naval blockade, but shipping companies remain cautious. Expect traffic restoration to take several weeks. Sensex and Nifty gain for the third straight session. Nifty moves within striking distance of 24,000 mark. Rupee gains 15 paisa against the dollar. TCS suffers a $168 million setback. US Supreme Court upholds a trade secret case against the company. TCS will set aside an additional $70 million in the first quarter of the fiscal. HCLTech picks up over 10% stake in Sarvam AI for 1,427 crores, marks the first ever investment by an Indian IT services firm into a homegrown AI company. HCLTech CEO says sovereign AI is next big opportunity. Sarvam co-founder Pratyush Kumar says they want to emerge as a no-regret alternative to global AI models. Government steps up the divestment drive. Shares of GIC decline over 6% as Centre moves to sell 5% stake, likely to raise more than 3,000 crore rupees. This will take the total divestment proceeds to nearly 25,000 crore rupees in the first 3 months of this financial year. Government bans the over-the-counter sale of cough syrups, makes prescriptions mandatory for all syrups, including those to treat cough. Several children died by consuming contaminated cough syrups across multiple states in the past few years. Government bans Telegram till the 22nd of June in a bid to curb cheating ahead of the retest of medical entrance exam NEET for undergraduates. Telegram channels have previously sought lakhs of rupees, claiming to be in possession of leaked question papers. Executives from Anthropic meet Trump administration officials over the recent ban imposed on Claude Mythos and Fable AI models. The White House has banned the model, citing security risks, forcing Anthropic to restrict access to its customers. And debutants Kepore pull off a stunner, hold tournament favourite Spain to a draw in their first ever World Cup game. Iran comes twice from behind to draw with New Zealand in Los Angeles in a politically charged match. All right, to the top story this evening, questions around Tehran's nuclear ambitions and a toll on the Strait of Hormuz remain unanswered, even as the US and Iran signed the peace agreement electronically. Here are the top developments. As he arrived in France for the G7 meeting, President Trump said that the Strait of Hormuz is already partially open. He insisted that Iran agreed to not having a nuclear weapon with strong policing powers. US Vice President J.D. Vance told Fox News that Trump may release details of the preliminary deal before it is signed in person. Vance also told CNBC that a lot of details remain to be ironed out, but he expressed confidence that America has all the cards in subsequent talks. Vance indicated that it will be rewarded with loosened economic sanctions if Iran abides by the deal. He also asserted that the Strait of Hormuz will be free of tolls. Iranian state media has said Hormuz will open to toll-free transits for a 60-day period. State media has reported that the water will then be managed by Iran and Oman after that period. Iran has indicated that it intends to charge fees for unspecified services in the strait. Trump has denied reports that the US would pay Iran $300 billion, calling it fake news. This comes after reports surrounding a potential $300 billion investment and reconstruction package. US Vice President J.D. Vance acknowledged that Iran could gain access to a reconstruction mechanism of that scale if it complies. Meanwhile, Iran's Foreign Minister Arakchi says upcoming negotiations will be broken into 2 stages. The first will cover the status of the Strait of Hormuz and reconstruction of Iran's infrastructure. He added that a later stage of negotiations will cover nuclear issues and sanctions relief to be resolved in a final agreement. He added that the deal includes a truce in Lebanon. This as Israel's Prime Minister Netanyahu said that Tel Aviv will continue its occupations of Lebanese territory. Charlotte Reed of CNBC reports that G7 leaders would be looking to get a sense of the Iran peace deal when they assemble in an alpine resort near the Swiss border.
Certainly the other leaders in the G7 would want to hear from President Trump on more details that haven't been made public yet on the MOU with Iran, trying to understand the extent of this agreement, and question whether how fast the Strait of Hormuz can actually reopen and the impact on the economies. But they certainly see as potentially the beginning of the ends, as we heard from President Macron yesterday after he welcomed President Trump, saying this is an important step for peace. And, but again, they want to hear more details on what that means for sanctions, what it means for the nuclear program of Iran, what it means for Lebanon as well.
Frankly, the only thing that really matters to me is Iran will never have a nuclear weapon. And it says it loud and clear. They're not going to develop it. They're not going to buy it. They're not going to do anything with it. And if they do, they suffer unbelievable consequences. Not just a little bit like, I won't even tell you the consequences, but the consequences are the ultimate consequences. And with that being said, I hope we have a very good relationship.
President Macron has also been adamant that a lot of focus needs to remain on other key issues, particularly Ukraine, and that is the top of the agenda today. President Zelensky himself have arrived just this morning. The roundtable is ongoing. He had a bilateral with President Macron before meeting all the other leaders, and it is an important one because, of course, for the past couple of months, the US have had their attention away from Ukraine, focusing on their war with Iran, and now Europeans feel like the momentum maybe is on the side of Ukraine. They see that this is potentially a window of opportunity to open negotiations between Ukraine and Russia.
Now, oil prices fell to their lowest level in 3 months on hopes of a lasting peace agreement in the Gulf. However, tanker companies remain cautious, even as President Trump claims the Strait of Hormuz will completely reopen on Friday and be free of Iranian tolls. According to reports, many operators may wait weeks before allowing their tankers to resume transit through the strait. Bloomberg has reported that 2 Iran-linked tankers sailed through the Strait of Hormuz with their transponders on. Meanwhile, Qatar is planning to rapidly boost LNG production once the Strait of Hormuz reopens, aiming to restore most of its export capacity within 2 months. Now, Hero Enterprise Chairman Sunil Kant Munjal says oil price surge has taken a toll on Indian industries. He hopes for better days ahead. Let's take a look.
This is what will lead to the longer term arrangement. There is no other path to it. So logically, this is the right response and reaction. And as I said earlier, I hope this will lead to quick resolution, long-term resolution, which will allow things to settle down. Because we've had oil at prices like $60 for so long that this almost near doubling of the prices has upset so many parts of our industry and economy.
Positive global cues helped Dalal Street end at the day's high. The Nifty and Sensex gained about 0.5%, with the Nifty closing above the 23,950 mark. IT stocks led the advance, making Nifty IT the top sectoral gainer of the day. Mid-caps outperformed the benchmarks, while banking stocks lagged. Nigel D'Souza has the market wrap.
Well, that's right. It was another green good session for the bulls. The Nifty Bank, though, was a little off color. Remember, that's the one that was leading the way. But the Nifty Tech space, as well as Reliance Industries, both of them took the load for the bulls today. And HCLTech, well, that was the top gainer on the Nifty. Remember, the company said it was buying 10.5% stake in Sarvam AI. The street like that rewarded with a gain of close to 3%. Giving it company on the upside were some of those FMCG stocks. Tata Consumer, that stock was higher. Citi's bullish call did come out today, and they said that they have a target price of 1,450 rupees per share. Some argue that the stock is expensive, but Citi justifies that, and that's why the stock was up and about. And today, there were 2 sectors that have got smacked off late, which made a bounce back today. So you had tech that did pretty well, and EMS space as well. All those stocks have got badly hit. From the tech space, Coforge was up close to 3.5%. TCS as well participated on the upside. And from the EMS stocks, well, a lot of those stocks were buzzing on the positive side today. They've corrected 30-40% as well from the top. So you have PG Electroplast that went home with a gain of 6%. Amber Enterprises was rallying, as was the case with Dixon Technologies. And it seems there's a bit of a turn in terms of sectors that the bulls like, as well as in terms of preference, because aluminium prices, they went up one way from around $3,000 on a per ton basis, went to around $3,800 per ton. Now that's corrected close to 10%. And that's why just in the interim, there is profit taking that's seen on Nalco, Hindalco, as well as Vedanta Aluminium that just got listed yesterday. The reason is sentiment has turned a little bit, though structurally it appears that aluminium prices could get some support at lower levels. So we'll have to keep an eye out whether or not that dip does get bought into. Short point being, the pieces are coming together for the bullish perspective, and hopefully the Indian markets participate on the upside. Because crude oil prices have cooled, the rupee has stabilized, FI selling has slowed down a little bit, and they've turned mild buyers as well. So pieces are coming together. However, the next key cue that we're looking at is the monsoon. That's going to give further direction for the markets. For the time being, the bulls will feel good. We have swiftly moved from around the 23,300 order mark all the way to around the 24,000 mark.
Right, thank you, Nigel, for that. And in the money markets, Indian rupee gained 15 paisa against the dollar. India reported a current account surplus of $4.7 billion in April 2026, reversing a deficit of $4.8 billion recorded in the same month last year. The 10-year bond prices continue to gain in trade. Mumbai's wait for the southwest monsoon is set to get longer. The Met Department is now projecting its arrival around the 25th of June, while private forecaster SkyMet has warned that the onset could be delayed even further. This could potentially make it the latest monsoon arrival in the city's recent history. The weather forecasters have said that monsoon on the western front stalled over southern Maharashtra since the 8th of June.
There are no good signs for the monsoon to advance rapidly. I think it will remain in this position, particularly the Arabian Sea branch on the western side. It is going to remain stalled for over about 1 week. I won't be surprised even if it takes about 10 more days to be there and don't move further to cover even Mumbai. Gujarat is next, but then it is getting delayed. And the delay is getting substantial now. It is worrying now. Monsoon deficit is going to grow bigger. And from 32%, I'm not surprised, even in the next 1 week, goes to about 40% now.
China's economy has weakened further in May. This after retail sales fell for the first time in nearly 4 years, dropping by over 0.5% on an annual basis. Urban investment also contracted more than what the street expected, and this was dragged by real estate and manufacturing. However, China's industrial output showed some resilience during the month, rebounding from a 3-year low. China's national unemployment rate fell to over 1%, marginally improving on a sequential basis. Talking about Japan now, where the central bank has raised its benchmark interest rate to 1%, its highest level since 1995. The Bank of Japan hiked the rate for the first time in more than 3 decades as rising energy prices and persistent inflation continue to put pressure on households and the broader economy. The bank has been gradually raising its interest rate since March 2024. The government has stepped up its divestment drive. Shares of GIC fell over 6% after the centre moved to sell 5% stake in the firm. The stake sale is expected to fetch over 3,000 crore rupees. With this transaction, the government's divestment receipts for the financial year are set to cross 25,000 crore rupees in just 3 months. Sapna Das has more. Sapna, divestment drive in full speed.
Absolutely. If you look at the pace of the offer for sales for CPSEs, starting right from May 21, you had the announcement for the central bank OFS coming in. Then May 26, the OFS announcement for Coal India. June 1, June 2, it was NHPC. 8 June, it was NLC. And 15 June, it's GIC now. So practically within 25 days, the government has announced actually 5 offer for sales. 4 of them which have been very successfully completed, around 13,389 odd crores already mopped up, and another 3,000 crores is likely to come in through the GIC OFS, which is ongoing at the moment. So that's one part of the story in terms of the OFSs. The other part of the story, of course, is also monetization. You know, close to 7,000 crores already raked in during April, May and June so far in the current financial year. So if you look at the total tally, it's around 22,000 crores roughly at the moment, and this would be around 27% of the full year's target. So the full year's target is a combined target of monetization plus disinvestment receipts of around 80,000 crores. Of course, that would also include strategic disinvestment, basically quote unquote IDBI Bank, but that's something that we have to wait and watch for. As of now, we're talking about monetization of OFS. So here again, that the current pace, around 27 to 28% of the target already being met, and June is not even over. So if the government continues at this pace, or even this pace is kind of maintained over the next 2 to 3 odd months, well, it's pretty much sure that they'll be crossing this 80,000 crore mark that we're talking about. And of course, we'll have to wait and watch and see what the fresh numbers are at the revised estimate stage, which is some time away. But at the moment, very clear, 5 OFSs in practically 25 odd days. this is something really unheard of as far as the disinvestment drive in CPSE is concerned.
All right. Thank you, Sapna, for that update. Moving on, the U.S. Supreme Court rejected TCS's plea against a $168 million damaged award in its trade secrets dispute with DXC Technology. The company will record an additional provision of $70 million towards damages, interest and legal expenses in the first quarter of FY27. This will be recognized as a one-time exceptional charge. Now, shares of HCLTech gained 4% in trade a day after it announced picking up over 10% stake in Sarvam AI for more than 1,400 crore rupees. This marks the first ever investment by an Indian IT services firm in a homegrown AI company. Speaking with Shireen Bhan, HCLTech CEO C. Vijay Kumar described this investment as the sixth big opportunity for the tech giants as it expands its presence in the sovereign artificial intelligence market. He added that the company also estimates India's enterprise AI market at $20 billion. Sarvam AI's co-founder Pratyush Kumar said they wanted to emerge as a no-regret alternative to global AI models.
We've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, Physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. The enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large.
The government is deeply interested in having alternatives in India that are globally competitive. I think so. All the support is there. Now it's for us to go and focus on the enterprise, focus on developers in India, and give them solutions in India which are no regret alternatives. Sovereignty shouldn't be a tax on people, right? It's really products that work really well, and you go and accelerate on that and build better models. This is really the time when we start playing internationally. And for us, therefore, the capital being deployed to build the next generation of models and also scaling up our compute footprint in India to serve enterprises, serve startups, serve the government. These are the 2 broad things that we'll be investing in.
And you can catch the entire conversation with HCLTech CEO and MD C. Vijay Kumar and Sarvam AI co-founder Pratyush Kumar at 5:30 and 10:30 p.m. right here on CNBC TV 18. The centre has made it mandatory to have a doctor's prescription for all syrup-based medicines, including cough syrups. Under the new rules, syrups have been removed from the over-the-counter list, meaning they can no longer be sold without a prescription. The move comes after several cases of contaminated cough syrups were linked to deaths among children in Madhya Pradesh and Rajasthan, raising serious concerns over drug safety and regulation of liquid medicines. Time for a short break. Coming up, government bans Telegram till the 22nd of June in a bid to curb cheating ahead of the retest of medical entrance exam NEET for undergraduates. Details when we return. Welcome back. The Supreme Court has issued a notice on a public interest litigation seeking to limit Aadhaar strictly to identity verification. The court has directed the centre to respond to the plea, which argues that Aadhaar should not be used as proof of citizenship or for electoral verification. The petition has sought directions to the centre, states and the Election Commission of India to ensure that Aadhaar is used as a proof of identity. The government has temporarily restricted Telegram messaging app in the country ahead of the NEET UG re-examination over viral allegations of paper leak sourced from the app. Ashmit Kumar joins us with more. Ashmit, please take us through the government's measures.
Well, an extreme step being taken here by the government imposing a complete restriction as far as Telegram is concerned. Of course, this is temporary in nature. The suspension will be in effect till June 22nd. The core concern behind the government's move has been to avoid the use of this platform, especially for proliferation of messages concerning the NEET UG examinations, especially with respect to allegedly leaked question papers. Now, that was in fact something that the heart of this entire issue. This was a concern that had been raised by the Ministry of Education as well as by the National Testing Agency. They had in fact submitted before MeitY that as far as ad hoc measures are concerned, there were steps being taken for taking down specific users, specific posts, specific channels. But importantly, those steps were not yielding the desired results. And therefore, the step has been taken. The NEET UG re-examination will take place on the 21st. The suspension is in effect till 22nd. Now, the NTA welcomed this decision by MeitY, saying that this was much needed, admitting that, in fact, the earlier provisional steps that had been taken were not yielding the desired results, that there was a need felt for a last resort measure, that this is that last resort measure, and that while it may cause inconvenience to lakhs of users, this is something that's required to ensure the sanctity and the integrity of the NEET UG examination. So to that end, the suspension we're given to understand will be in effect. 22nd is when this messaging application, Telegram, should be back online.
All right. Thank you, Ashmit, for that. All right. Let's talk about the FIFA World Cup now. Iran came from behind twice to earn a draw with New Zealand in Los Angeles in a politically charged match. But the team was forced to leave the US soon after. Iran's coach expressed frustration, saying that the team was not allowed to recover. FIFA president visited the dressing room after the match and pledged to help address some of the players' concerns. Cape Verde held European champions and tournament favourite Spain to a goalless draw in what has been the biggest shock of the 2026 World Cup so far. With a population of just over 500,000, Cape Verde is the third least populated nation ever to qualify for the Men's World Cup. The star of the match was 40-year-old goalkeeper Vozina, who produced a string of crucial saves to repel the all-star Spanish team. More World Cup action 4 years after they upset the eventual champions Argentina. Saudi Arabia came close to another shock victory in their opening match against Uruguay in Miami. It took an 80-minute equalizer from the South American side to rescue a point. It was yet another stalemate between Egypt and Belgium as they played out a tense draw. Former Liverpool legend Mohamed Salah set up Imam Ashur for a stunning opening goal to put the underdogs ahead. But Belgium responded in the second half and managed to split the points through an own goal. Right, with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the crude oil prices have declined to a 3-month lows after the US and Iran reached an agreement to end the war in West Asia. While tanker operators remain cautious, the markets have welcomed President Trump's assertion that the Strait of Hormuz will indeed fully open on 19th of June, restoring the free flow of energy supplies from the Persian Gulf. The easing of geopolitical tensions is also weighing on industrial metals. Aluminum has slipped to a 3-month lows after the agreement reduced concerns over supply disruptions caused by the Hormuz blockade and attacks on key smelting facilities in West Asia. The copper prices also have retreated from recent highs, with the reopening of Hormuz expected to improve the and movement of raw materials, including sulfuric acid, a critical input for copper production. Meanwhile, precious metals are holding relatively steady as investors assess the balance between easing geopolitical risks and ongoing support from central bank buying and investment demand. Joining us now to discuss the outlook for commodities is Ole Hansen. He's head of commodities strategy at Saxo Bank. Ole, hi, thank you so much for joining in. Let's start with the crude oil prices first. And we have seen very, very big volatile moves coming in for this one. 6% of decline previous week, 5% down yesterday, 2.5% down today. The kind of declines that we are looking at, would you say that $80, a breach of that perhaps is imminent?
Well, good afternoon, Manisha. I think in the short term, the market is really trading on the assumption that we're going to see a small tsunami of energy hitting the markets, with oil already stored on ships ready to set sail out of the Persian Gulf once we reopen. And I think that's adding the pressure in the short term. But then at the same time, you also have to just consider whether the price below 80 at this point in time is sustainable for in the medium term, simply because we probably need to see some kind of a premium relatively to the pre-war price, simply because of the time it takes for production to resume, and also the geopolitical risk premium, which I don't think will go away, because this is still a fragile piece. Anything can still happen, and I think the market needs to be a little bit cautious about that. So I believe we are very close to a floor here towards the 80 level.
Or when you look at the supply that the markets are anticipating with start, how much are we looking at? Because we've been talking about the number of 11 to 13 million barrels per day cut off because of that blockade. How much supplies are you seeing coming in? Would you say that Iran, for one, Qatar, Oman, all of these supplies will start to come into the markets? How much of a supply increase are we looking at?
Well, one thing is supply, another thing is production. The supply side will be quite forceful here at the start, simply because of the availability of crude on ships, and also in tanks that has been filled to the brim in the last 3.5 months. So in terms of actual numbers, I think it's difficult to say, because we're also seeing ship owners being a little bit cautious about just going actively in at this point in time. They need more assurance that the safe passage is there. But the supply side will be aggressive here at the beginning. And then comes the actual increase in production. That's where potentially we could face some delays. 10,000 wells, according to estimates, has been shut down and needs to be restarted. And that could take some time. So I think with that in mind, following the initial flooding of oil here, there will be a bit of a lull. And that's really when we need to start looking at what the real price of oil should be.
Or when you look at the demand side of it, and China is one major factor here, the reason that we saw the prices kind of balanced and curbed is because the Chinese demand fell quite strongly in the month of May, perhaps in June as well. How are you looking at that one factor?
Well, China once again has proven how you actually use your strategic reserves. You fill them up when prices are cheap, and you take from it when prices are high. And that's exactly what they've been doing now for the past 2 or 3 months. And that's really helped the global situation, the global market, from not seeing a massive spike in prices. So I would assume that as prices are coming back down again, they will start to increase imports, not only for domestic consumption, but also to refill some of these storage facilities. So again, you can argue that OPEC has been the main focus when it comes to price adjustments. But going forward, and what we've seen now in the past couple of years, China's role becoming increasingly important, simply because of its massive buffer that it has from a strategic reserve, using them actively to when prices are dictating that to them.
One view also is that OPEC is not going to be of much significance going forward from here with the way we've seen the prices move very, very volatile. OPEC clearly haven't had no role to play in last 2.5 or 3 months there. And then with UAE out and Venezuela doing its own thing, US taking charge, Iran doing what it is doing, would you say OPEC is anything but dead right now?
I think it's most certainly not dead, but its influence is probably curbed a bit, given the developments that you just mentioned there, Manisha. I think in the short term, we will see Saudi Arabia and UAE increase production quite dramatically, simply because there is the need for that those extra barrels. There will also, throughout this year, be a revision into 2027 of the quotas, because some countries will potentially struggle even further now to regain or come back to the quota levels that they have been assigned. So we will see some changes there. But ultimately, at the time where supply is in short supply, as it will be in the coming months, it doesn't really matter that much, because everyone can produce as much as they can. But what will the real challenge will be further down the road. If we do get into a glut situation again, how would the UAE respond to that? Will they try to help Saudi Arabia controlling the price or not? But that's not a story for now. That's probably one for in a year or two.
Oh, absolutely. So as you said, maybe we'll see prices at 80 or below for the very, very near term, and then we will see a surge back again. How are you looking at a range, let's say, for the next 3 months if the agreement actually goes through and we have 60 days to come to a peace agreement, a good one, a final one? How would you look at the crude prices then within this time?
I would look at Brent in, say, a $75 to $95 range, based on the assumption that we were trading in a $60 to $70 range before the war broke up and before we had this 1.4 billion barrels of crude that wasn't produced for 3.5 months. That requires a higher price. So maybe an overshoot to the downside, potentially taking into the 70s. But generally, I think we are at the lower end of the potential range we could see in the coming months.
The other thing that has seen a sharp decline has been the aluminum prices. 8 to 10% of global aluminum comes in from Middle East, and with the war easing, the prices have been declining for some time now, with a big reaction coming in the overnight markets. There are 3-month lows on aluminum as well. How are you looking at those prices going forward?
Well, they will adjust just like the oil market is now adjusting the potential for increased supply coming back into the market. At a time where we were actually in China already seeing some refinery or producers struggling a little bit with overcapacity. So we'll probably see aluminium being a little bit on the defensive here in the coming months. We're also watching, obviously, copper, which has done extremely well, I would say, throughout this period. It has been supported by what you mentioned, the lack of sulfuric acid, which should now come back. But at the same time, it's holding up well above key support levels. And you can also argue that the whole energy transition that was already in full pace, and especially also looking at the increased demand for power, has that been diminished or been strengthened by this blockade? I think it most certainly has been strengthened. So the focus on renewables and the focus on the electrification will continue to gather pace, and both copper and aluminium will be part of that process, and adding some underlying support. But for now, we just have to readjust to the fact that we're having that supply is coming back from the Middle East.
And the other piece really is about the gold and silver prices, where we have seen a smart rebound into this one as well. From the kind of lows that we saw during the West Asia conflict, so where we stand right now is a smart rebound. But from here on, are you looking at investment demand coming back? Do you see the US debt and the global debt and central bank buying, all of those factors support prices here?
Well, we've been saying and writing throughout this conflict that we needed to get that out of the way before we could kind of look further ahead to the next move in the oil price, simply because inflation has become such a big part of what dictated the direction of gold, given its impact on bond yields and the dollar and short-term interest rates expectations. With the inflationary input now potentially being lowered, and that means we can start to look a little bit further ahead again. And then you basically have to ask the question that the reason why gold and silver, especially gold, rallied in the last couple of years, have those reasons disappeared? I would say they most certainly have not. And with that in mind, I think we're seeing the beginning of a rebound here. Last week moved down to nearly $4,000 had a big smell of capitulation, and we probably needed that to get this get a day where the market was really in a panic sell mode. That's what we saw last week. That means positioning has been lightened up quite a bit, meaning that investors or the market is now much more responsive to any changes in the technical or the fundamental outlook. Technically, I still want to see it above the 200-day moving average before I start to get more constructive, but at least the movement we've seen in the last week here starts to give some confidence back to the buy side, I would say.
A lot of banks and brokerages all are still talking about 5,000 and 5,500. I've seen some reports of 6,000 as well. Are you looking at gold prices that bullish?
I think over time, yes. As I said, I don't think there's any the reasons for the big reasons for buying gold as an alternative investment has not disappeared, and probably has strengthened a bit, because the global debt situation is, if anything, is still something that needs to be improved, and which is not showing any signs of right now. Also, I believe that the incoming Fed chair will not hike rates, and if they need to, they may actually try to steer bond yields lower. And if they can't do that by talking them down, they might actually step in and try to underpin lower yields. And I think that all points to renewed demand for gold. So I'm constructive here. So 5,500, a return to the high we saw back in January, that is most certainly still on the cards. Perhaps not until very late this year or early next year, but I think we are heading back in that direction.
And silver, do you see $100 back?
Sorry?
Do you see silver $100 back?
That really depends on how the strength in the gold rally. I just saw a report that imports of silver into India has seen a near collapse, and that's obviously part of the story, that the high prices also, obviously you have some tax regulations as well that may impact those import levels, but we probably came to a point where the high price in silver had a negative impact on demand, and we're seeing some of that starting to come through. So I think silver will become again much more of a metal that tracks the gold price, and with that in mind, if we can see gold back up to these highs that we saw earlier this year, then yes, we are potentially moving back towards the 100 level. But I don't see it as an outperformer because of the reason why it had this very significant outperformance earlier this year. I think some of the reason for that has now disappeared.
Point taken.
Or at least been reduced.
All right. All answered as always. Thank you so much for joining in and giving us a sense on all of those commodities and the international cues as well. So bullish on gold, not so much on silver. Well, as far as energy and base metals go, the Iran impact or the peace agreement impact is what we are looking at into the markets, and soon they would start to follow their own fundamentals. But with that, on this note, we will go for a short break. Don't go anywhere. We will be joined by Samit Guha, MD and CEO, MMTC PAM, to discuss what to expect when it comes to gold demand in India and the refining and the prices, all of that after this break. Welcome back. You're watching Commodity Champions. And gold prices remain largely steady after an interim US-Iran deal to end the war in West Asia eased bets of a US Fed rate hike. Over the past week, the global gold prices have surged about 2%. Silver is up about 8%. To discuss whether the high prices are impacting demand, margins, volatility, what lies ahead into the Indian markets, we are joined by Sumit Guha, who's MD and CEO, MMTC PAMP. Mr. Guha, thank you so much for joining in. Let me take a step back and ask you about the policies, regulations, duty structure, and the PM austerity push. How has all of that impacted gold sourcing and the overall business for you?
Good afternoon, Manisha, and thank you for having me on the show. It's always a pleasure, and especially at such exciting times, and more exciting for gold and silver. I think there are two aspects of gold and silver prices and demand. One is what is happening in the domestic scenario and what is happening internationally. Of course, internationally, as we had all expected, with news of the US-Iran conflict kind of peace deal getting signed, I think gold prices and silver prices are rallying up. And like we all know, the impact of gold and silver price, of this conflict has been very counterintuitive to what it normally does because of the impact of crude and because of the impact of inflation. So we are seeing gold and silver prices move northwards as we move to a certainty on the agreement. And I think once there is more certainty, I think prices will move up. Domestically, of course, it's a different scenario because as our viewers and you know that, there has been a 15% duty imposition on gold and silver in India. So effectively today, the price of gold and silver for a consumer in India is actually about 18% higher than international price, 15% for duty and about 3% for the GST. And as gold and silver prices go up, affordability for the end consumer is definitely an issue. In addition to that, of course, we fully appreciate the reasons why the government has done it. There is an austerity demand from the Prime Minister himself. So there is muted demand, of course, to that extent. And this is the first time I think the industry is seeing a demand side restriction and a supply side restriction because, as you are aware, there are many policy decisions because of which the import of gold and silver into India is now completely restricted. So there are different elements at play because of which the price and the demand is behaving very differently in India and the prices are behaving very differently in India while it is behaving in the rest of the world.
Sure.
So I think we will continue to see muted demand, at least for the next 2 to 3 months. And we are eagerly waiting, as an industry to see what happens as we get close to the festive season, which is Diwali, Dhanteras.
Mr. Guha, how are you also looking at the big divide between the digital vis-a-vis the physical demand from the consumers, and how are you dealing with that?
So I think I want to split the demand between firstly between jewelry and investment. I think what has happened in the last year particularly is that there has been great financialization of gold and silver as asset classes. So they are not just an asset for gifting, jewelry and store of value. There has been a certain amount of financialization last year because we've seen most people looking at gold and silver actively as an alternate asset class for investment. And because of that, we've seen huge investment demand last year, although jewelry demand was muted. And I think that will continue to be the scenario this year. In investment demand, I think digital demand is picking up faster because of its ability to reach, convenience, the platform, and the youth largely looking at investment to the digital platform. So we definitely see a faster uptake in digital investment demand for gold and silver versus physical.
With the kind of volatility that we have seen into the markets, how have volumes, refining margins, capacity utilizations worked for you?
So of course, at MMTC PAMP, we have significant, capacity for refining both gold and silver. So we continue to operate at, very low capacity utilization. And of course, last couple of months, because of the import restrictions, our capacity utilization is really very, very low. We are pushing in line with the government's, request at looking at more recycling, refining, and recycling volumes have picked up. but it has not been able to compensate by a wide margin for the lack of, doré imports. So our capacity utilization continues to be reasonably low, especially in the last couple of months, given the import restrictions that are there.
When you talk about recycling, and this is something that most of the jewelers tell us as well, that from previously 15 to 20 to 25% of gold or jewelry purchases as exchange, that number seems to have gone up to nearly 40 to 50% for some of these. Do you think that as a norm, and how are you working around that?
So for us also, we don't do jewelry, but we do coins and bars. And we are also in the last month and this month, we've also seen almost 40 to 50% of our minted coins and bar sales happening from recycled gold. So jewelers get, scrap or recycled gold back, and then we convert those to minted coins and bars. And that proportion really has increased from a 10 to 15% to about almost close to a 50% number for us. So yes, whatever demand is currently there, a lot of that is getting fulfilled through the recycled gold. We are also, trying to push recycled gold by opening more recycling stores. As you know, we operate almost 20 recycling stores across the country, and we are ramping up that number as quickly as possible. We've also started looking at recycling of silver, in a formal way through our stores and directly at our plant. So yes, recycling is now playing a larger role, again, because we don't have, doré supply. But I think recycling will continue to play a larger role in the years to come because of the way the ecosystem is behaving and the government's push towards recycling.
Mr. Guha, final question then. Going forward now for 2026, I mean, I know there's a lot of still uncertainty into the markets there, but how would you look at this year in sense of buying, investment, exchange, any policy changes that you would desire at this point?
Well, I'll start with the policy change bit first. I think we are all hoping and praying that, this conflict ends and there is permanency to the peace deal. I think if that happens, we are also hoping that, the balance of payment issue will ease out. And, India inherently is the gold consuming country. And I think a lot of the gold buying should come back if the supply side restrictions at least get removed. And that's what we are hoping the government will ease the policy. A higher duty structure, as you know, is not good for the industry because it leads to a lot of possibility of grey market imports. So we are also hoping that the increase in duty is more temporary. And as the balance of payment issue gets eased out, the government, we are hoping, will also relook at the duty structure. So on the policy side, we are also, requesting the government, from a refining perspective, if they could allow us toll refining, which really utilizes the refining capacity in the country, but does not lead to any foreign exchange outflow. So a lot of stuff on the policy issue. We are also happy, and we are to work with the government on looking at a revamped GMS scheme, which can help in getting more of that 30,000 tons or 35,000 tons of gold, which is in households, out into the mainstream economy. As far as demand is concerned, I think last year was a great year for most stakeholders in the industry. I think this year is going to be tougher.
Okay.
Because jewelry-led demand, I think, will continue to be lower. Investment-led demand could go up, but at such high prices in India to the international price, I think that demand is also going to soften versus last year at least.
Point taken.
And of course, with the Prime Minister's pitch not to buy gold for a year, I think there will definitely be some softening of consumption.
Oh, that clearly seems like a case. But Mr. Guha, as always, thank you so much for coming by and speaking to us quite in detail about everything that impacts gold and silver demand and business in the Indian markets there. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Hello and welcome to News Center. I am Ashmit Kumar. Now, India's flagship innovation program, Bharat Innovates 2026, has made its global debut in France, with Prime Minister Modi and French President Emmanuel Macron attending day one of the three-day showcase and interacting with deep tech innovators and exhibitors on display. Now, on display was the strength of India's deep tech ecosystem, featuring 120 innovators, more than 15 higher education institutions and over 500 global stakeholders, including top CEOs, industry leaders and leading venture capital firms. The showcase spotlighted innovations across 13 key sectors, from advanced computing, semiconductor, space technology and biotechnology to energy. Healthcare manufacturing was also in focus as a part of the cohort of deep tech startups that were being hosted as a part of Bharat Innovates 2026. There was a strong focus on deepening of India-Europe deep tech partnerships. On day two, more than 80 deep tech startups presented their innovations to a panel of over 50 global investors from more than 10 countries. More than 40 startups also secured confirmed follow-up commitments from investors. So, what exactly does this showcase mean for Indian companies seeking greater access to European markets, and what does it signal for India as it positions itself as a global innovation hub and invites the world to help build its $30 trillion economy? Well, let's take a look.
कुछ रिलेशंस ऐसे होते हैं जो शेयर्ड इंटरेस्ट के साथ साथ शेयर्ड विजन से भी ड्राइव होते हैं। भारत और फ्रांस का रिश्ता कुछ ऐसा ही है। हम दोनों देश हमेशा मिलकर चले हैं। इसी साल फरवरी में ही इंडिया फ्रांस ईयर ऑफ इनोवेशन की शुरुआत हुई है और आज हमें बहुत खुशी है कि भारत इनोवेट्स की शुरुआत भी हम फ्रांस के साथ कर रहे हैं।
Question was not if India is innovating, but who is going to innovate with India. And it is an immense honor that you're giving us to showcase your best startups, the best innovators outside of India. And is the leader in terms of creations of data centers and in the capacity to develop models that are today fundamentals in terms of large language models. France is the only country in Europe to have an LLM situation, to be able to compete with China and the US with Mistral AI, and it leads us to develop in every regard our capacities.
Well, we're now joined by a host of experts on the matter. We have with us Dipanjan Basu. He's a co-founder and partner at Fireside Ventures. Joining us shortly also will be Nitin Gupta, the co-founder of Attero, and Ankit Mehra, the CEO of Idea Forge. Coming first to you, Mr. Basu, tell us, European capital, despite diplomacy aside, European capital is usually considered to be slightly more risk-averse than the capital chasing Silicon Valley. Tell us, is there perhaps a change, a shift that you're beginning to see about greater interest amongst European capital looking to deploy as far as Indian companies are concerned, Indian solutions, Indian deep tech startups, importantly?
Yeah. So first of all, thanks for having me here, Ashmit. Real pleasure. I think this is a very important milestone, the Bharat Innovates 2026. I think, as you rightly said, we do see still European capital chasing venture capital in India is low. I think a lot of venture funds, including us, we have a lot of capital from Middle East, from US, from endowments. Europe do have very high quality, long-term capital, family offices, endowments, and pension funds. And that is not really accessible to Indian funds and startups today. We have not seen a significant change if you see the last couple of years. But hopefully with this collaboration between India and France, and including with what we're doing with the UK and other countries, hopefully in the next few years we could see more participation of European capital into Indian venture. But as of today, it's still not at the top of what Indian venture looks like.
Right, Mr. Basu. We also now have with us Ankit Mehra, the CEO of Idea Forge. Mr. Mehra, coming to you again, you operate, of course, you're one of the leading deep tech startups in the country which deals with drones and autonomous technology. Tell us, Europe is a market, is an interesting market, very high regulatory walls. Tell us, as a part of these conversations that you've been having having with your European partners, do you find a tangible roadmap before you for commercialization, for monetizing such technologies?
I think, Ashmit, thanks a lot for having us on the show. And first of all, I believe that there are structural things that will have to be done to ensure that there is openness to absorb not just commercial, but mainly defense technology, particularly in far as drones is concerned. There is a lot of defense play here, and therefore, for that, we may need a lot more partnerships in the local geography, down to all the way up to being able to establish local manufacturing systems here that can then be easily absorbed into the overall pipeline. Because of the NATO and other buying priorities, usually end products from India may not be very easily accessible to the European defense customers. However, the quality at which we are making our systems and the environment in which our systems are also getting tested now warrants that our technology is available to be leveraged for security anywhere in the world.
But let me ask you, Mr. Mehra, since we have you again, courtesy what we've seen over the last, say, year or two, we've seen the conflict in Ukraine, subsequently we've seen the West Asia crisis. Again, a great bias as far as kinetic and non-kinetic operations was in favor of drone technology. That has been seen as perhaps the next big wave of modern day conflict. Tell us, is there at least a greater interest, a greater sense of inquiry from your European partners when they look at deep technology being developed out of India?
Absolutely. I think when you look at the places where they can get secure and trustworthy technology from, right now there is a lot of very heavy reliance on technology coming from certain geographies of the world where relatively trust is low, and India becomes a very, very important option for the whole global ecosystem to look at a source of technology and capability insofar as drones and counter drone systems is concerned, where trust is a very important factor. And therefore, our technology has seen a lot more inquiries from these parts of the world, as well as we are seeing interest in taking our technology and capability to the markets here.
Sure. We also have with us Mr. Nitin Gupta, who's joining us. He's joining us all the way from Europe itself. He was attending their Bharat Innovates 2026. Mr. Gupta, thank you for joining us. We've seen some big numbers, big announcements coming from you recently. You've talked about a 7,000 crore rupee capex plan when it comes to critical minerals refining and processing capacity back home here in the country. What I want to ask you is, given what we've seen, the geopolitics around critical minerals, tell us what the conversations were like as far as France is concerned. Is there a growing acceptance, or is there going to be a hurdle in terms of acclimatizing the Indian companies, integrating the Indian companies, the tech providers into the global supply chain?
Thank you for having us. First of all, see, the topic about critical minerals is more about technology and more about China's dominance, right? So between both of these, India does play a critical role, because especially the technology developed by Atero in India is globally the best in extracting and recycling various critical minerals from either mining sort of inputs or by various recycling inputs, right? So the technology that works in India works equally well in Europe, works equally well in other parts of the world as well. So there is significant interest in almost every country, including France, to look at how can they end China's dominance and make themselves more self-reliant on critical minerals. And for that, technology from India is the key way to go.
Well, that's an interesting perspective about growing interest in critical minerals. But also tell us, Mr. Gupta, this is one technology that again, not only addresses the geopolitical concerns around the supply of critical minerals, but also sits very well, very neatly into the sustainability conversation. For the benefit of our viewers, of course, your company looks at recycling electronic waste to recover critical minerals from them and then using it and deploying it for industrial purposes. Tell us how much of that conversation actually helps you crack the code when it comes to European investors as well as European markets?
So sustainability is a key buzzword for European investors and European markets today, right? Having said that, sustainability is a good thing to have, not the only thing to have. So until the technology works, it is more efficient, more productive. Sustainability will not get you sort of the end goal or the desired goal. But if the product works and it is sort of efficient and cost effective, then sustainability is cherry on top. That's the way most people around the world are looking at it. And European investors and European partners view sustainability as added advantage today.
Sure. Mr. Basu, coming back to you, we're living at an era of course, the AI age, as they call it. We're seeing humongous amounts of capital being deployed for building of data centers, for investing towards semiconductors and chip development. To cut a long story short, the question I want to ask is there enough capital available for chasing exotic companies, exotic solutions coming out of a Bengaluru or a Hyderabad?
Yeah, it's an interesting question. Ashmit, so the way I would put it is that, if you look at foundational models, is India there for $1 trillion Anthropic type foundation model? I would say, we are not there. And neither that kind of capital, a lot of the capital, for example, in China is being state funded in a lot of this technology. But I would say where there is a humongous action in India, and a lot of it has been spoken about in the Bharat Innovate Summit as well, is the application of AI and adoption of AI by across areas like space technology, data center, of course, as you talked about, but even health tech and bioscience. So we have invested in a lot of health tech companies, right? Which are focusing on areas like sleep, fertility. There's a lot of work happening in oncology, bioscience. I think a lot of AI application in these innovation, which is actually not only for solving problems in the health space in India, but even what India can do for the world, right? And I see a lot of capital, including the likes of SIGPI, SRI, government investing. But I would say foundational models at that quantum, not yet. But a lot of capital in deep tech, space tech, and health tech in the areas where India can own these areas.
Well, it's interesting you mentioned those LLMs. Just 24 hours back, we saw a big investment being pumped into HCLTech, into Sarvam. We, in fact, spoke to both the leaders this morning. So clearly, there is a growing interest. Whether or not that yields results, of course, is something that we'll wait for it to pan out. But Mr. Basu, while we have you, I also want to get a thought in as far as the messaging from the Prime Minister. The message that he gave is that don't judge a company by the market valuation, but by the impact they're having on humanity. Is that an approach that Western capital, that European capital is ready for, to having a slightly longer curve in pursuing tech for good? Is that something that European capital is ready for?
No, absolutely. And normally European capital is known for that long-term impact, right? It's a little less capitalist, if I will, right, in nature. And if you look at the area of impact, again, in the Indian context, has a health angle. India has a large rural and large agriculture economy, right? So the amount of technology, including drone technology, which can be used for agriculture yields, overall per capita improvement of yield, reduction of fertilizer, organic farming, and the areas I talked about on health itself is a little high gestation period, right? And European capital into some of these areas can have a huge impact. So I totally agree that a long-term impact angle, just apart from just the return angle, is something which Europe is known for, and that could be an access which can be opened post this.
Right, Mr. Basu. Do stay on with us. I'll request all our panelists to continue with us. We're heading into a very short break. But don't go anywhere. The discussion will continue on the other side. Welcome back to News Center. I have with me Nitin Gupta, the co-founder of Attero, Ankit Mehta, the CEO of Idea Forge, as well as Dipanjan Basu, co-founder of Fireside Ventures. Gentlemen, thank you once again for being with us. Mr. Gupta, let me come back to you. We've seen a very strong push coming in, an America-first approach coming in from Washington, especially when it comes to sensitive technologies. What I want to get a thought on is that, strategically speaking, how significant would such a partnership be between Europe and India? Is this the next big Western market that companies like yourselves perhaps would need to crack for realizing scale here in the West? I believe, Mr. Gupta, you're on mute.
Absolutely, Ashmit. Sorry for that. So given what's happening globally, I think the India-European partnership is of extreme high strategic significance in our opinion. Indian companies going to European markets and accessing them and obviously exporting technology and setting up bases there, I think is the need of the hour. Obviously, US is a very large market as well, Ashmit, and nobody can ignore the US. And in areas like critical minerals and AI and data centers, US does play an extremely key role. So it's not a market that we can ignore, but Europe is an extremely equally strategic market for us as well, Ashwin.
Let me put that same question across to you, Mr. Mehta. Mr. Mehta, again, the strategic significance of the European market. And you mentioned as to how there is a need for partnerships to grow the Indian capabilities and capacities. How significant strategically would Europe be?
Yeah, I think Europe is going to be very important because one, we have seen that there is a massive boost in defense spending in Europe. And defense spending boosting anywhere in the world today implies that there is going to be a massive boost in spends on drones as well as on counter-drone systems. So from that point of view, I think there is absolutely a necessity to look at the market more deeply and to forge the partnerships that can enable the go-to-market access in a way that is conducive to the overall ecosystem here. And we have to leverage the fact that we have a free trade agreement with the European Union and find the best way of leveraging the technology on both sides to create solutions that are unique to the market, that serve the challenges of the market, and helps and leverages India's strengths of being able to produce it in very large numbers and to create core deep technology that can work in any environmental condition in the world.
Sure. Mr. Mehta, let me also ask you another question. Through the course of this show, we've discussed issues of strategic significance. We've discussed geopolitics. We've discussed the concerns that investors may have, that capital may have. In the midst of all of this, to actually support the deep tech ecosystem here within India, how significant a role will government procurement play, especially for a player like you?
See, government procurement always plays a very important role, particularly in defense. There is no other customer but the government. So that way, procurement plays a very important role, particularly in drones. The biggest market opportunity is government sales, because even if you look at security uses on the civil side, then government forces and police forces become a very important vector. When you look at large infrastructure that has to be monitored, large spaces, cities, towns, villages that have to be monitored for security, safety, and governance, I think there is a very large opportunity insofar as government and its use of the drone technology is concerned. And then there is the private side, which is going to be a very large market when we get to logistics and some of the other commercial use cases that can deploy the technology at a very large scale. And some of that scale can eclipse this government spending will be backing in terms of technology. But the number of systems and the types of systems needed insofar as drones is concerned, both for observation, for doing geospatial activity, for inspections, and for cargo delivery, along with munition delivery, is going to be a very, very large variety of systems. So the market opportunity is large. The space is coming into its own where there is absolutely no future of at least any technology related to war and military without the drone technology. So it will be very heavy on that side, which is also going to be true even in international markets. When you look at Europe, when you look at markets, right now I'm in Paris and Nice. I mean, even here, there is a very big push for the drone technology because when it comes to ensuring safety, security, and governance, I think it's the most game-changing technology that has come into play in the last decade or so.
Sure. Mr. Basu, coming to you, a lot of deep tech companies were there as a part of Bharat Innovates in Nice in France. The Prime Minister speaking in the inaugural session, there are many more innovators. This is just a small glimpse of what India holds. Tell us, where do you see the most potential, most opportunity when it comes to the deep tech ecosystem here in the country? Is it in AI? Is it in space tech? Is it in biotech? Is it in defense? If you had an additional 10,000 crore rupees to invest, where would you be putting it?
I would say that all these areas are very important. But if I had to put my 2 bits on where the real big opportunity could lie, I would say space technology is something which India can really own, including drone technology. Because Ankit can talk more and better about it. But also health tech and bioscience. I think these are spaces where we can really own the space as an innovator. If you see the number of patents, the number of possible innovations which happens in bioscience, India has always lagged behind. Right? A lot is happening in academia in the US. I genuinely believe that the opportunity which lies within India for the Indians in healthcare, but also from India to the world, there is a large opportunity. And manufacturing is something where, while a lot has been talked about, I think there's still a lot of room to happen. So I would say space technology, bioscience, health tech, and manufacturing would, I think, are 4 areas where we can absolutely own the whole space, where we can be known for innovation for the world, and of course for domestic consumption as well. Of course, AI remains a common factor across, but could we lead with AI? I think, I would say these areas where you can lead.
So not a one-horse race. It's a multi-horse race that Mr. Basu is betting on. But Mr. Gupta, let me come back to you for a quick final comment. Should the focus of the deep tech ecosystem here in the country be towards developing India into an innovation hub or a deep tech manufacturing hub? Which of the two sides would you bet money on?
So, Asmit, I don't think both of them are exclusive. We need to do both. Unless we develop the technology, becoming a manufacturing global powerhouse is not really a long-term strategic play, in my opinion, right? So we need to become a technology provider, and simultaneously we need to develop manufacturing capability to be a leader globally in this space as well. Atero is doing that from a technology standpoint and by a scale standpoint as well. So I think both of them are mutually inclusive or not exclusive domains, if you will, Ashwin.
Right. I'd like to thank all of our panelists, Mr. Gupta, Mr. Mehta, Mr. Basu, for joining us on what this Euro-India axis may look like. Of course, Bharat Innovates 2026 concludes today, being hosted in Nice, in France. Thank you once again to all of our panelists. But with that, it's a wrap on this edition of News Center. More news and updates will continue right here.
welcome to this special edition of Voices from the Valley. I'm Shireen Bhan. A development that has quite literally created a stir overnight is HCLTech's decision to pick up a 10.68% stake in India's frontier model company, Sarvam AI. That's a deal that has been done for $150 million. To talk to us about what this means for HCLTech and for Sarvam and where this partnership could be headed, joining us are the two men behind Sarvam and HCLTech. CVK and Pratyush, many thanks for joining us here on CNBC TV 18 and congratulations. CVK, let me come to you first. Since I put out a tweet about this development overnight, my Twitter timeline has been buzzing. Comments suggesting that this is a great move. Finally, Indian IT services companies have woken up to the AI possibility as well as to the AI opportunity and challenge. Others saying that, why didn't this happen fast enough? But good, the fact that it's finally been done. CVK, let's start by talking about the timing of this. We spoke, at the National Leadership Summit at NASSCOM, and you told me very specifically that you believe that India needs its own large language model. That was a national imperative. Why did it take you as long as this to bet on Sarvam?
Yeah, thank you, Shireen. I'm glad you recalled that old conversation, which was January 2025. At that time, I had not known about Sarvam, and probably Sarvam was also early days. And I think we met during the India AA Summit in February. Around the same time, we were talking to you as well. Of course, we found Pratyush, Vivek, and team incredibly exciting platform that they've built, and the adoption and the quality, all of that was just very exciting. And then we started the conversation, and we've got this done very quickly, and we are absolutely thrilled that it'll open up a completely new chapter of opportunities for us as a company, and we will definitely help Sarvam to scale up as well.
I want to understand from you the opportunities that this opens up, as you pointed out, the new chapter that you speak of, CVK, in just a second. But let me get Pratyush into the conversation as well. Pratyush, congratulations. $300 million fundraise, $150 million coming in from HCLTech. What are you going to be deploying all of this capital for? Take me through what the runway now looks like.
Hi, Shireen. No, thanks for having us this morning in India. I know you and I have been chatting about this for a few times now. The thesis of sovereign AI, which is what we've started with, is becoming increasingly real, right? The atmosphere is clear that you can't, the most important component of technology you can't rent. You have to have control over, and that's what the company was founded on. To your point about what we're going to do with all this money, as you know, AI is something that takes capital to build and scale. And both in terms of training the next class of models, in some sense, this is for us day zero of being globally competitive with CVK coming in, with other investors coming in. This is really the time when we start playing internationally. And for us, therefore, the capital being deployed to build the next generation of models and also scaling up our compute footprint in India to serve enterprises, serve startups, serve the government. These are the two broad things that we'll be investing in. Really excited that we are onto this next orbit, so to speak, of Sarvam.
I'll come to the next orbit and what you intend to do as far as compute and the next generation of models is concerned in a second. But let me get CVK back into the conversation. CVK, let's now talk about the next chapter, in your words, the opportunities that this deal, picking up 10.5% stake in Sarvam, opens up for a company like HCLTech.
Yeah. So, Shireen, we've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI Factory, physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. Right, sovereign AI has, in my view, there are 4 different opportunities in sovereign AI. First is, of course, foremost is India sovereign AI opportunity, which is, first of all, Indian enterprises in banking, insurance, government, tech, and even other commercial enterprises. All of them are looking for adopting AI in a significant way, and everybody wants to have and control on how they're deploying the technology, because these are all very large, strategically important institutions. So the enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large. The way the enterprise AI architecture is evolving, I mean, of course, it is evolving very fast, but the most optimal solution would be some kind of a hybrid model. You don't need the frontier model capabilities for doing a lot of basic tasks, which are high intensity, high volume tasks within enterprises. So it will be a private SLM, which is client specific or industry specific, that the clients would deploy, which will build agentic and all other capabilities to run a lot of their day-to-day operating model, and leverage the frontier models for things which they are really highly suited for. So I think that hybrid model gives you data security, it gives you very good price performance, and in many countries it also gives multilingual capabilities. So I think all these three makes it a very powerful solution that we can take to global enterprises. And the fourth opportunity is the same sovereign AI can be taken to many other countries, which Sarvam team, Pratyush and team are already working on. And that is an area where we have a lot of presence across the globe, and we would be able to take this to those countries as well.
Right. CVK, if you can just quantify the addressable market that you speak of, both the enterprise market in India that you intend to target, as well as the international markets that you intend to go after. And, you're absolutely right. We are now in this phase where token maxing is no longer the trend. In fact, efficiency and optimization is what everybody is looking at. But there are other players who are already doing small language models. SLMs are not new to the market. So what will be the differentiator for Sarvam and HCLTech as you try and address this market? And if you can quantify for me the total TAM, India enterprise plus global, that you're looking at.
I think India enterprise AI market is at least $20 billion in size, but the global market will be at least like 100x that. That's what I would say. It's really big, because every enterprise is spending on AI. Now they need a solution which is very optimal from a price performance perspective. People are struggling with, as you said, token maxing and many other challenges. So the global market opens up, I mean, a very, very large TAM. I don't want to just quantify it, but it's very significant. And maybe Pratyush can add a lot more on
Pratyush,
and also his perspective in the global market.
Do add to that, Pratyush, and also explain to us how ready you are with being able to address this enterprise market. I mean, you've already got the large incumbents in there. You've of course got the Anthropics and the OpenAIs also addressing the Indian enterprise market, and of course the global enterprise market. But what will be the key differentiator as far as you are concerned, and how ready are you to address this?
That's a very good question. It's good to give your viewers some clarity on that. See, what we have achieved at Sarvam is to be able to train from scratch a large language model with 100 billion plus parameters, right? So we had no dependency on data, on engineering, on R&D, or infrastructure, and we're able to do that end to end. Now, the reason to put ourselves in the constraint to do that end to end is exactly for this moment now, which is we can tell enterprises through the deep partnerships that HCLTech has that we can take your context. Your context is data. Your context is your tools and enterprise machinery that you have created, and then fine-tune models to do very well on the workflows and tasks you are interested in. In fact, Satya Nadella wrote an interesting article about the frontier ecosystem is required for equilibrium. This is exactly the same story. You can't have 2-3 companies in the world sort of providing the most important component in a post-AI world. Every company will have to say, here is my data, here are my workflows, here are the things I really want to care about. How do I go build a custom model for this? And this requires R&D. So just like India succeeded in IT services, the opportunity starting today is how do we win in AI services, which will be R&D led, which will have a product surface of a very different kind, but will also need the deep consultative and trust-based relationship that is required to win in these places, right? And I think that's a massive opportunity. I think CVK mentioned the numbers, but I would say it's multiple trillions of dollars, and it's an entirely new platform and paradigm with which we need to work with. And the advantage of getting in early and compounding is very, very high, right? Because once you are doing this for a few of these enterprises, one can take and spin that wheel much, much faster. So what you saw happen at the frontier, which was aggregating the world's intelligence in one place, is now going to get replicated across organizations with their custom trusted setup. And that is what we are working towards.
Pratyush, let's talk a little bit about the timing as well. And I know you have nothing to do with it, but the fact of the matter is that we are on the cusp of a very significant development where, as you pointed out, renting intelligence now has a question mark on it because of the developments that have taken place in the US with the Trump administration. How much of that is likely to provide the tailwind, so to speak, for companies like yours?
Look, these are structural things, right? I mean, of course, the events are interesting, and in this particular one, it has many different implications. I wrote about it on Twitter, but I think these are structural aspects, right? If you go back to, let's say, a couple of decades back, people started using databases, and the first databases were esoteric. They were hard for people to sort of like figure out, but over time, things got democratized. But then things also got specialized, again, democratized, and so on. And AI, though it looked like it's something that it's a winner-take-all market, I don't really think it is so. And we've always believed that, right? And the tools for building AI, consuming AI, adapting AI will get democratized, but with a product surface that is very research-led. And that is what I think the opportunity is, right? And I think it's a dual opportunity. One is there has to be passion within the country to do it. Like in a country like India, it's going to be a big market. The per capita consumption of AI is still very, very low. We'll expand that, but also take it to every company globally on doing the same thing.
All right, CVK, I want to understand from you because you've heard this question being asked several times in the past as well. Indian IT has been slow to the AI party. You haven't done the R&D spends that were needed. Indian IT companies have focused much more on buybacks and dividends. Is this an existential moment? And your response to that existential moment is this bet on Sarvam?
No, I think I've also answered it many times. I mean, the existential threat of Indian IT has been written many times. We've collectively reinvented, and we only continue to be a major force to reckon with for global enterprises. Of course, we could have invested more in R&D. We could have built models like this had we put enough energy and intensity into it. But it's never late, and I think this is a great way to partner. And it's also not that easy to innovate at this scale in a large company. So you can amplify what you can do with partnerships like Sarvam and other startups. So I think we are finding the right way to continue to remain very relevant. And we are super confident on our AI-led new services like AI Factory, Physical AI, and many other dimensions that we are working on. And this really adds a very powerful dimension to what we intend to do.
Does it change the trajectory as far as your AI revenues are concerned? You've been amongst the first in the industry to call out standalone AI revenue. Does this change the trajectory on that front?
Yes, this adds one more growth lever into that. It's not just AI revenue. We call it as advanced AI revenue because everybody is classifying AI being used for delivering services as AI, but that's really par for the course. We are calling out advanced AI for some specific offerings. And this offers a very strong one more growth vector to the overall strategy that we have.
Okay, Pratyush, let's talk a little bit about what you intend to use this money for, which is for more compute and, of course, to also train the next generation of models, as you pointed out. Lay out for us the roadmap on both those fronts now. What can we expect? What are the timelines? What are the next milestones?
And absolutely, I just want to take a minute to also add to what you were asking earlier. So one of the outcomes of the Impact Summit was this partnership. Right? So it's good to know that in a short period of time, the partnership between HCLTech and Sarvam fructified. And I just want to call out the leadership shown by CVK. I generally feel that he's operating with the founder mentality of a large company, right? And I was genuinely impressed that. But perhaps it's not widely known. Whether it is creating data for physical AI, whether it is thinking about managing data centers at scale, HCLTech is doing quite a bit of this. And we were impressed by the fact that there's so much exposure. And for us as a company doing the frontier research, it was important to work with the partnership mode on the key technologies. So I just wanted to call that out. I think this is, we talk about India not investing in R&D and so on, and it's never too late. And I think this is the moment. This is the moment to leapfrog, and I see great conviction from both sides to do this. To your question about what does the roadmap look like? Look, what we have done is proved that we can train a model like this probably outside North America and China. Mistral and Sarvam are the two companies which have pre-trained from scratch a model of this size. For us now, the next step is firstly, scale out the products we have. Our voice platform is doing very well. We just doubled in the last 3 months since the Impact Summit. We have a document intelligence platform which is accelerating very, very quickly. But the most important thing is now we are building out our agentic stack, right? This is the stack which will allow people to use managed agents like you do in other platforms. And this is coming out already next month on Compute in India, right? So whether you're building those PowerPoint slides, whether you're doing deep research, whether you are sort of like analyzing investment opportunities, all of them can be done on an Indian platform with Compute in India, right? With data security. It'll be available both for enterprises and it'll be available for individual users as well. The second thing that we are focused on is on the model side. We will be building larger models, primarily focused on coding and agentic tasks. We have a certain point of view on how there are new things to be done in AI for software software engineering. And we believe it is still very, very early days in what is going to be a multi-trillion-dollar market. And we are going to innovate on that and compete globally on that layer, right? And eventually, it's also about talent. So we are going to invest quite a bit on getting top-class talent back. There is a mood in the place that you are, that little bit of soul searching happening amongst the great Indians who are there and building for these companies. We are opening an office in San Francisco, and B, going to attract a lot more people to come back to India. So we need to create an attractor in India which can say, hey, let's go build a frontier from India. And I think this is the time. The structural trends are there. It's not something that is going to reverse. We just need to have a market presence to be able to scale up what we build.
Okay, so setting up shop in San Francisco in the Valley. And, you're absolutely right. I think all the conversations that I've had so far here are very clearly suggesting that, look, we're in the opening overs of a long test match. And so it's not done. Anybody who's telling you that this is decided in favor of certain winners, it's not done by a long shot. But CVK, let's talk a little bit about the nuts and bolts now for the 10.6% stake that you pick up in Sarvam. What exactly do you bring to the table? And how is this partnership now going to work? What is the execution roadmap?
Yeah. First of all, Pratyush, thank you for the kind words. And I want to honestly admit that large companies like us have tremendous amount of learning from startups. And that is truly the need of the hour. And we all need to find ways in which we can work with the agility, with the innovation, with the founder's mindset. All of that is very important. And now, where does this partnership go? Today is the day one of the partnership. We bring our strong engineering depth. We have a lot of software IPs, especially on the data side. We are likely to launch a couple of more products very soon. Even on the AI adoption on the enterprise side, we have AI Force, which is really the enterprise control plane. All of that is picking speed. So we will bring the enterprise, the depth that we have in understanding the enterprise requirements and the trust that we enjoy with a lot of enterprises. And then that will help us to kind of take these solutions, which is really a hybrid approach. Use small language models, use very powerful models, $105 billion model of Sarvam in enterprises to do a lot of train on the data that the enterprise has so that you can have a very, very high accuracy and very effective, very good price performance achievement on these kind of outcomes. And also leverage frontier models for their true capabilities like deep research and for the extensive world knowledge. I think I'm super confident on that solution, and we will start kind of seeing some traction on that, and we will together win big. That's my overall perspective on this.
Together win big, but what about board representation, CVK?
Yes, we do have one board representation as per our agreement, and I think we look forward to participating in that as constructively as we can.
Has this whet your appetite, CVK, or can we expect more?
Sorry?
Has this whet your appetite? Can we expect more of such kind of deals?
No, I think, see, of course, this is a very, very unique partnership, and Sarvam is a very unique company in its own space. But of course, we think there is a lot of opportunities in vertical use cases, and there could be startups who could be innovating much faster than what other companies like us are doing. So if there are opportunities where we can partner with a startup which can really amplify what we can do for our clients, we would be very open to look at that as well.
Okay, open to more M&A should the opportunities present themselves. But Pratyush, let me come back to you. As you set yourself up to take this fast lap, as you yourself just described where you find yourself today, what do you see as the big constraints for you? And what do you see as now with the capital coming in, with HCL and others, Bessemer and others coming on board, what do you see as the big tailwinds for you, the constraints as well as the next leg of opportunities?
Absolutely. I think one of the constraints is access to compute. We today operate all the Blackwell GPUs that have landed in India, and we are going to be scaling that up. But being able to get access to compute in India of high quality is going to be a constraint because of this is a sector that is still forming up. So we are investing ourselves on the software layer of data center. It's essential that we are able to train our models, run our models with the desired efficiency and reliability. So we are investing at that layer. That's going to be one of the constraints. The second one is also talent. I think this is an area that is driven by top-class talent. And now that we are into the next phase of what we are doing, we will look to bring in people from these frontier labs who can sort of take things to the next level. But these are things that we are solving for. I think what the partnership does is puts us in a capital trajectory where we can go big. Notice that AI is all about loops, right? You have capital, meaning more compute, meaning better models, meaning better deployed solutions, more revenue, more capital. That's essentially the loop that we have to now take up. And I think this is comes at the right time. I think there is intent across the board to do this. The government is deeply interested in having alternatives in India that are globally competitive. I think so. All the support is there. Now it's for us to go and focus on the enterprise, focus on developers in India, and give them solutions in India which are no regret alternatives. Sovereignty shouldn't be a tax on people, right? It's really products that work really well, and you go and accelerate on that and build better models.
Well, very well said. No regret alternatives, and sovereignty shouldn't be a tax. Pratyush and CVK, thanks so much for joining us here on CNBC TV 18. But before I let both of you go, a quick final question. Pratyush, what can we expect in terms of compute capacity addition? What have you been able to sign up? How soon can we expect more compute to come online?
Yeah, I mean, I think we've already signed up some compute, but I don't know if you have publicly disclosed. We'll wait for that to happen. But we are eagerly looking at more compute coming online. As I said, we have certain constraints in terms of what quality of compute should be there, how it's managed. We are often looking at clusters that we can take end to end. So that is going to be a very evolving surface. And as we have more to share, I'll do so.
Pratyush, we wish you the very best of luck, and we do hope that all that we just spoke of translates into more revenue and, of course, more clients and customers coming your way as well. Thanks very much for your time, and we wish you both the very best of luck.
Thank you.
Thank you, Sherry.
But with that, it is time for us to wrap up this edition of Voices from the Valley with the two newsmakers of the day. From all of us here for now, goodbye, and many thanks for watching.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. US and Iran signed the peace deal electronically, even as questions around the Hormuz toll, Lebanon and Tehran's nuclear ambitions remain unanswered. Trump arrives in France for the G7 meeting, asserts yet again that Iran will not have a nuclear weapon. Crude oil prices hit 3-month lows. Iranian tankers pass through Hormuz as the US appears to lift the naval blockade, but shipping companies remain cautious. Expect traffic restoration to take several weeks. Sensex and Nifty gain for the third straight session. Nifty moves within striking distance of 24,000 mark. Rupee gains 15 paisa against the dollar. TCS suffers a $168 million setback. US Supreme Court upholds a trade secret case against the company. TCS will set aside an additional $70 million in the first quarter of the fiscal. HCLTech picks up over 10% stake in Sarvam AI for 1,427 crores, marks the first ever investment by an Indian IT services firm into a homegrown AI company. HCLTech CEO says sovereign AI is next big opportunity. Sarvam co-founder Pratyush Kumar says they want to emerge as a no-regret alternative to global AI models. Government steps up the divestment drive. Shares of GIC decline over 6% as Centre moves to sell 5% stake, likely to raise more than 3,000 crore rupees. This will take the total divestment proceeds to nearly 25,000 crore rupees in the first 3 months of this financial year. Government bans the over-the-counter sale of cough syrups, makes prescriptions mandatory for all syrups, including those to treat cough. Several children died by consuming contaminated cough syrups across multiple states in the past few years. Government bans Telegram till the 22nd of June in a bid to curb cheating ahead of the retest of medical entrance exam NEET for undergraduates. Telegram channels have previously sought lakhs of rupees, claiming to be in possession of leaked question papers. Executives from Anthropic meet Trump administration officials over the recent ban imposed on Claude Mythos and Fable AI models. The White House has banned the model, citing security risks, forcing Anthropic to restrict access to its customers. And debutants Kepore pull off a stunner, hold tournament favourite Spain to a draw in their first ever World Cup game. Iran comes twice from behind to draw with New Zealand in Los Angeles in a politically charged match. All right, to the top story this evening, questions around Tehran's nuclear ambitions and a toll on the Strait of Hormuz remain unanswered, even as the US and Iran signed the peace agreement electronically. Here are the top developments. As he arrived in France for the G7 meeting, President Trump said that the Strait of Hormuz is already partially open. He insisted that Iran agreed to not having a nuclear weapon with strong policing powers. US Vice President J.D. Vance told Fox News that Trump may release details of the preliminary deal before it is signed in person. Vance also told CNBC that a lot of details remain to be ironed out, but he expressed confidence that America has all the cards in subsequent talks. Vance indicated that it will be rewarded with loosened economic sanctions if Iran abides by the deal. He also asserted that the Strait of Hormuz will be free of tolls. Iranian state media has said Hormuz will open to toll-free transits for a 60-day period. State media has reported that the water will then be managed by Iran and Oman after that period. Iran has indicated that it intends to charge fees for unspecified services in the strait. Trump has denied reports that the US would pay Iran $300 billion, calling it fake news. This comes after reports surrounding a potential $300 billion investment and reconstruction package. US Vice President J.D. Vance acknowledged that Iran could gain access to a reconstruction mechanism of that scale if it complies. Meanwhile, Iran's Foreign Minister Arakchi says upcoming negotiations will be broken into 2 stages. The first will cover the status of the Strait of Hormuz and reconstruction of Iran's infrastructure. He added that a later stage of negotiations will cover nuclear issues and sanctions relief to be resolved in a final agreement. He added that the deal includes a truce in Lebanon. This as Israel's Prime Minister Netanyahu said that Tel Aviv will continue its occupations of Lebanese territory. Charlotte Reed of CNBC reports that G7 leaders would be looking to get a sense of the Iran peace deal when they assemble in an alpine resort near the Swiss border.
Certainly the other leaders in the G7 would want to hear from President Trump on more details. I haven't been made public yet on the MOU with Iran, trying to understand the extent of this agreement, and question how fast the Strait of Hormuz can actually reopen and the impact on the economies. But they certainly see as potentially the beginning of the ends, as we heard from President Macron yesterday after he welcomed President Trump, saying this is an important step for peace. And, but again, they want to hear more details on what that means for sanctions, what it means for the nuclear program of Iran, what it means for Lebanon as well.
Frankly, the only thing that really matters to me is Iran will never have a nuclear weapon. And it says it loud and clear. They're not going to develop it. They're not going to buy it. They're not going to do anything with it. And if they do, they suffer unbelievable consequences. Not just a little bit like, I won't even tell you the consequences, but the consequences are the ultimate consequences. And with that being said, I hope we have a very good relationship.
President Macron has also been adamant that a lot of focus needs to remain on other key issues, particularly Ukraine, and that is the top of the agenda today. President Zelensky himself have arrived just this morning. The roundtable is ongoing. I had a bilateral with President Macron before meeting all the other leaders, and it is an important one because, of course, for the past couple of months, the US have had their attention away from Ukraine, focusing on their war with Iran, and now Europeans feel like the momentum maybe is on the side of Ukraine. They see that this is potentially a window of opportunity to open negotiations between Ukraine and Russia.
Now, oil prices fell to their lowest level in 3 months on hopes of a lasting peace agreement in the Gulf. However, tanker companies remain cautious, even as President Trump claims the Strait of Hormuz will completely reopen on Friday and be free of Iranian tolls. According to reports, many operators may wait weeks before allowing their tankers to resume transit through the strait. Bloomberg has reported that 2 Iran-linked tankers sailed through the Strait of Hormuz with their transponders on. Meanwhile, Qatar is planning to rapidly boost LNG production once the Strait of Hormuz reopens, aiming to restore most of its export capacity within 2 months. Now, Hero Enterprise Chairman Sunil Kant Munjal says oil price surge has taken a toll on Indian industries. He hopes for better days ahead. Let's take a look.
This is what will lead to the longer-term arrangement. There is no other path to it. So logically, this is the right response and reaction. And as I said earlier, I hope this will lead to quick resolution, long-term resolution, which will allow things to settle down. Because we've had oil at prices like $60 for so long that this almost near doubling of the prices has upset so many parts of our industry and economy.
Positive global cues helped Dalal Street end at the day's high. The Nifty and Sensex gained about 0.5%, with the Nifty closing above the 23,950 mark. IT stocks led the advance, making Nifty IT the top sectoral gainer of the day. Mid-caps outperformed the benchmarks, while banking stocks lagged. Nigel D'Souza has the market wrap.
Well, that's right. It was another green good session for the bulls. The Nifty Bank, though, was a little off color. Remember, that's the one that was leading the way. But the Nifty Tech space, as well as Reliance Industries, both of them took the load for the bulls today. And HCLTech, well, that was the top gainer on the Nifty. Remember, the company said it was buying 10.5% stake in Sarvam AI. The street like that, rewarded with a gain of close to 3%. Giving it company on the upside were some of those FMCG stocks. Tata Consumer, that stock was higher. Citi's bullish call did come out today, and they said that they have a target price of 1,450 rupees per share. Some argue that the stock is expensive, but Citi justifies that, and that's why the stock was up and about. And today, there were 2 sectors that have got smacked off late, which made a bounce back today. So you had tech that did pretty well, and EMS space as well. All those stocks have got badly hit. From the tech space, Coforge was up close to 3.5%. TCS as well participated on the upside. And from the EMS stocks, well, a lot of those stocks were buzzing on the positive side today. They've corrected 30-40% as well from the top. So you have PG Electroplast that went home with a gain of 6%. Amber Enterprises was rallying, as was the case with Dixon Technologies. And it seems there's a bit of a turn in terms of sectors that the bulls like, as well as in terms of preference, because aluminium prices, they went up one way from around $3,000 on a per ton basis, went to around $3,800 per ton. Now that's corrected close to 10%. And that's why just in the interim, there is profit taking that's seen on Nalco, Hindalco, as well as Vedanta Aluminium that just got listed yesterday. The reason is sentiment has turned a little bit, though structurally it appears that aluminium prices could get some support at lower levels. So we'll have to keep an eye on whether or not that dip does get bought into. Short point being, the pieces are coming together for the bullish perspective, and hopefully the Indian markets participate on the upside. Because crude oil prices have cooled, the rupee has stabilized, FI is selling a slowdown a little bit, and they've turned mild buyers as well. So pieces are coming together. However, the next key cue that we're looking at is the monsoon. That's going to give further direction for the markets. For the time being, the bulls will feel good. We have swiftly moved from around the 23,300 order mark all the way to around the 24,000 mark.
Right, thank you, Nigel, for that. And in the money markets, Indian rupee gained 15 paisa against the dollar. India reported a current account surplus of $4.7 billion in April 2026, reversing a deficit of $4.8 billion recorded in the same month last year. The 10-year bond prices continue to gain in trade. Mumbai's wait for the southwest monsoon is set to get longer. The Met Department is now projecting its arrival around the 25th of June, while private forecaster SkyMet has warned that the onset could be delayed even further. This could potentially make it the latest monsoon arrival in the city's recent history. The weather forecasters have said that monsoon on the western front stalled over southern Maharashtra since the 8th of June.
There are no good signs for the monsoon to advance rapidly. I think it will remain in this position, particularly the Arabian Sea branch on the western side. It is going to remain stalled for over about 1 week. I won't be surprised even if it takes about 10 more days to be there and don't move further to cover even Mumbai. Gujarat is next, but then it is getting delayed. And the delay is getting substantial now. It is worrying now. Monsoon deficit is going to grow bigger. And from 32%, I'm not surprised, even in the next 1 week, goes to about 40% now.
China's economy has weakened further in May, this after retail sales fell for the first time in nearly 4 years, dropping by over 0.5% on an annual basis. Urban investment also contracted more than what the street expected, and this was dragged by real estate and manufacturing. However, China's industrial output showed some resilience during the month, rebounding from a 3-year low. China's national unemployment rate fell to over 1%, marginally improving on a sequential basis. Talking about Japan now, where the central bank has raised its benchmark interest rate to 1%, its highest level since 1995. The Bank of Japan hiked the rate for the first time in more than 3 decades as rising energy prices and persistent inflation continue to put pressure on households and the broader economy. The bank has been gradually raising its interest rate since March 2024. The government has stepped up its divestment drive. Shares of GIC fell over 6% after the centre moved to sell 5% stake in the firm. The stake sale is expected to fetch over 3,000 crore rupees. With this transaction, the government's divestment receipts for the financial year are set to cross 25,000 crore rupees in just 3 months. Sapna Das has more. Sapna, divestment drive in full speed.
Absolutely. If you look at the pace of the offer for sales for CPSEs, starting right from May 21, you had the announcement for the central bank OFS coming in. Then May 26, the OFS announcement for Coal India. June 1, June 2, it was NHPC. 8 June, it was NLC. And 15 June, it's GIC now. So practically within 25 days, the government has announced actually 5 offer for sales. 4 of them which have been very successfully completed, around 13,389 odd crores already mopped up, and another 3,000 crores is likely to come in through the GIC OFS, which is ongoing at the moment. So that's one part of the story in terms of the OFSs. The other part of the story, of course, is also monetization. You know, close to 7,000 crores already raked in during April, May and June so far in the current financial year. So if you look at the total tally, it's around 22,000 crores roughly at the moment, and this would be around 27% of the full year's target. So the full year's target is a combined target of monetization plus disinvestment receipts of around 80,000 crores. Of course, that would also include strategic disinvestment, basically quote unquote IDBI Bank, but that's something that we have to wait and watch for. As of now, we're talking about monetization of OFS. So here again, that the current pace, around 27 to 28% of the target already being met, and June is not even over. So if the government continues at this pace, or even this pace is kind of maintained over the next 2 to 3 odd months, well, it's pretty much sure that they'll be crossing this 80,000 crore mark that we're talking about. And of course, we'll have to wait and watch and see what the fresh numbers are at the revised estimate stage, which is some time away. But at the moment, very clear, 5 OFSs in practically 25 odd days. this is something really unheard of as far as the disinvestment drive in CPSE is concerned.
All right. Thank you, Sapna, for that update. Moving on, the U.S. Supreme Court rejected TCS's plea against a $168 million damaged award in its trade secrets dispute with DXC Technology. The company will record an additional provision of $70 million towards damages, interest and legal expenses in the first quarter of FY27. This will be recognized as a one-time exceptional charge. Now, shares of HCLTech gained 4% in trade a day after it announced picking up over 10% stake in Sarvam AI for more than 1,400 crore rupees. This marks the first ever investment by an Indian IT services firm in a homegrown AI company. Speaking with Shireen Bhan, HCLTech CEO C. Vijay Kumar described this investment as the sixth big opportunity for the tech giants as it expands its presence in the sovereign artificial intelligence market. He added that the company also estimates India's enterprise AI market at $20 billion. Sarvam AI's co-founder Pratyush Kumar said they wanted to emerge as a no-regret alternative to global AI models.
We've been continuously looking at new opportunities and creating completely new businesses. As you would have heard me talking, we have AI factory, physical AI, and differentiated IP. There are 5 different propositions on which we are leading with, including building custom chips for inferencing and things like that. So this opens up the 6th big opportunity for us, which is sovereign AI. The enterprise market in India is a big opportunity, and we are playing enterprise market purely with AI-led services. The second, of course, Indian government, all the citizen services, there is tremendous opportunity to reimagine, which Sarvam, Pratyush and team have already started on a great journey. Now, in addition to that, on the global market, that's even more exciting, and the TAM is very, very large.
The government is deeply interested in having alternatives in India that are globally competitive. I think so. All the support is there. Now it's for us to go and focus on the enterprise, focus on developers in India, and give them solutions in India which are no regret alternatives. Sovereignty shouldn't be a tax on people, right? It's really products that work really well, and you go and accelerate on that and build better models. This is really the time when we start playing internationally. And for us, therefore, the capital being deployed to build the next generation of models and also scaling up our compute footprint in India to serve enterprises, serve startups, serve the government. These are the 2 broad things that we'll be investing in.
And you can catch the entire conversation with HCLTech CEO and MD C. Vijay Kumar and Sarvam AI co-founder Pratyush Kumar at 5:30 and 10:30 p.m. right here on CNBC TV 18. The centre has made it mandatory to have a doctor's prescription for all syrup-based medicines, including cough syrups. Under the new rule, syrups have been removed from the over-the-counter list, meaning they can no longer be sold without a prescription. The move comes after several cases of contaminated cough syrups were linked to deaths among children in Madhya Pradesh and Rajasthan, raising serious concerns over drug safety and regulation of liquid medicines. Time for a short break. Coming up, government bans Telegram till the 22nd of June in a bid to curb cheating ahead of the retest of medical entrance exam NEET for undergraduates. Details when we return. Welcome back. The Supreme Court has issued a notice on a public interest litigation seeking to limit Aadhaar strictly to identity verification. The court has directed the centre to respond to the plea, which argues that Aadhaar should not be used as proof of citizenship or for electoral verification. The petition has sought directions to the centre, states and the Election Commission of India to ensure that Aadhaar is used as a proof of identity. The government has temporarily restricted Telegram messaging app in the country ahead of the NEET UG re-examination over viral allegations of paper leak sourced from the app. Ashmit Kumar joins us with more. Ashmit, please take us through the government's measures.
Well, an extreme step being taken here by the government imposing a complete restriction as far as Telegram is concerned. Of course, this is temporary in nature. The suspension will be in effect till June 22nd. The core concern behind the government's move has been to avoid the use of this platform, especially for proliferation of messages concerning the NEET UG examinations, especially with respect to allegedly leaked question papers. Now, that was in fact something that the heart of this entire issue. This was a concern that had been raised by the Ministry of Education as well as by the National Testing Agency. They had in fact submitted before MeitY that as far as ad hoc measures are concerned, there were steps being taken for taking down specific users, specific posts, specific channels. But importantly, those steps were not yielding the desired results. And therefore, the step has been taken. The NEET UG re-examination will take place on the 21st. The suspension is in effect till 22nd. Now, the NTA welcomed this decision by MeitY, saying that this was much needed, admitting that, in fact, the earlier provisional steps that had been taken were not yielding the desired results, that there was a need felt for a last resort measure, that this is that last resort measure, and that while it may cause inconvenience to lakhs of users, this is something that's required to ensure the sanctity and the integrity of the NEET UG examination. So to that end, the suspension we're given to understand will be in effect. 22nd is when this messaging application, Telegram, should be back online.
All right. Thank you, Ashmit, for that. All right. Let's talk about the FIFA World Cup now. Iran came from behind twice to earn a draw with New Zealand in Los Angeles in a politically charged match. But the team was forced to leave the US soon after. Iran's coach expressed frustration, saying that the team was not allowed to recover. FIFA president visited the dressing room after the match and pledged to help address some of the players' concerns. Cape Verde held European champions and tournament favourite Spain to a goalless draw in what has been the biggest shock of the 2026 World Cup so far. With a population of just over 500,000, Cape Verde is the third least populated nation ever to qualify for the Men's World Cup. The star of the match was 40-year-old goalkeeper Vozina, who produced a string of crucial saves to repel the all-star Spanish team. More World Cup action 4 years after they upset the eventual champions Argentina. Saudi Arabia came close to another shock victory in their opening match against Uruguay in Miami. It took an 80-minute equalizer from the South American side to rescue a point. It was yet another stalemate between Egypt and Belgium as they played out a tense draw. Former Liverpool legend Mohamed Salah set up Imam Ashur for a stunning opening goal to put the underdogs ahead. But Belgium responded in the second half and managed to split the points through an own goal. Right, with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Welcome to Voices from the Valley. This is our 14th edition of trekking out here to understand what is driving the engines of innovation. It's also the 24th year for Young Turks, the world's longest running show on startups and entrepreneurship. And so it's great to have with me somebody on the program who has spent an equal amount of time in the company that he's been with. Today, he heads UST as the Chief Operating Officer. Gilroy Matthew, thanks so much for joining us here on Voices from the Valley. Appreciate you making the trek to be here with us on the program. But, you know, let's start with that. It's parallel journeys almost for Young Turks, for me and for you, Gilroy. Yes. You've been at UST now for over 2 decades, in fact, going into your 27th year. Yes. It's an unusual story in today's times, right?
Absolutely. In fact, I mean, UST happened by coincidence for me, because I come from Trivandrum, the southern tip of India. And when UST got started, both in Arizona and California, where we are headquartered, as well as in Trivandrum on the same day, I mean, everybody thought, okay, as a new startup getting started, and my parents wants to get an intro into that company and see whether I can work from there. But then, fortunately, for UST, our first customer was a Fortune 30 retailer, and I came from a retail background. So the stars aligned, and then I was fortunate to start with that first project and make it happen. And then never looked back. I mean, one after the other, I lived in Seattle for most part for that customer, and then got into many other areas. And then I decided to go back to India. Then I got an entrepreneurial journey within UST to start the engineering portfolio with semiconductor.
Yes.
And then from there to automotive to manufacturing, and now Chief Operating Officer for UST. So really exciting.
It has been quite a journey and an exciting one, as you pointed out. But you know what's also interesting, and I don't know how many people picked up on that, is that this company was started in 1999.
That's right.
On the same day in Trivandrum and in California. I mean, who would have thought that we would have had a startup starting up in Trivandrum in 1999 in the tech business?
Absolutely. Nobody would have thought about it. At the same time, I don't know how many of you know, the first software technology park of India started in Trivandrum. And that is one of the greenest technology park that you can see. And obviously, we had all the amenities to really get started, because we have more than 170 plus engineering colleges. And obviously, Kerala is known for its literacy rate as well. So that enabled us to really bring in a lot of people who have left Kerala, because we didn't have much opportunities after graduation. So we could bring that back, and that was the whole point of view, right? And G.M. Menon, being a visionary leader, he was from Kerala, and he lived in the Beverly Hills, and he was chairman of Comcraft Group of Company, which is one of the founder companies of UST, or investors of UST. So he wanted to bring Kerala into the IT and engineering map, and that is how we were born. And look at where we are today. We are one of the largest employer in Kerala, as well as we expanded to more than 37 different countries with more than 32,000 employees.
Well, that is the origin story of UST, but let's talk about where we find ourselves today. I mean, you know, you trek through the valley at this point in time, and everybody is talking about AI and what AI is going to do, what agentic AI is going to do, autonomous systems, ecosystems, harnesses, scaffoldings. What do you make of the many changes that you're encountering today?
Absolutely. So I would say 2026, right? I mean, it's a year of convergence, because today you hear all the buzzwords of edge, AI, cloud,
ambient
AI,
intelligence,
ambient intelligence, physical AI, all of these, right? And all of those has a reason. Because today, if you really take few sectors, like maybe I'll talk about like semicon, manufacturing, and automotive as an example, right? If you take each of them, if you take semiconductors as an example, the verification cycles are getting automated in a much simpler way because of AI. Now, earlier we were talking about CPUs, and then the data center era came with the GPUs.
Correct.
Now CPUs coming back because of agentic AI. That's a huge shift. And that is why, I mean, you will see almost all the semiconductor companies are doing extremely well.
On the stock markets,
Absolutely.
I mean, literally every single one of them.
That's right.
Skyrocketing.
So that's a huge boom for the industry, and everybody was going to benefit out of this.
That's also a cautionary tale there in what you said, because, you know, people are quick to write obituaries. I mean, people were writing the obituaries for CPUs, and as you pointed out, CPUs are back and how?
In action. Absolutely, and it's all because of agentic AI. Now you take the automotive sector. Automotive sector has to have close correlation with the manufacturing too. So if you take the manufacturing part, right, the factories are becoming darker in the sense now you don't need human beings inside the factories, right? The factories are run by the agents, the sensors, and pretty much the AI engineering that enables it, right? So it is darker for humans, but it is lit for the sensors.
Right.
And that is how many of the manufacturing sectors are completely shifting, where it is, you don't need humans. Humans are needed only for oversight. So that is one part of the manufacturing sector that is changing. Now, if you take the vehicles part of it, right, they're also there's manufacturing from a factory flow standpoint to the connected, completely driven from an AI standpoint. Because the physical AI is going to enable a lot of this automation that the factory setup is required. And then with the connected systems coming in, most of the workers are going to talk to each other, and it is also going to simplify many of the things that has been done earlier with automation. So now, if you take an automotive car, the futuristic or the latest cars, many of those cars may have like thousands of or millions of codes from a software standpoint. That's going to double now, because now the car or a truck is going to be more software running on a wheel rather than the mechanical parts to it, right? So that's the kind of shift that you see between semicon to manufacturing to automotive. And that is where AI is bringing a significant change with edge AI, the cloud, as well as agentic and physical AI.
You know, let's talk a little bit about semiconductors. And as you pointed out, that's really the foundational layer on which all things AI are being built at this point in time. And I want to ask you this in the context of India. The government has rolled out Semicon 1. We're now waiting for cabinet approvals for Semicon 2. You've, of course, got a partnership with Keynes Technology in India. How do you see the India semiconductor play?
Absolutely. So that's where, I mean, UST has also been fortunate to be working with the semiconductor companies. We work with top 9 of the semiconductor companies across the globe. Now, we started this journey 17 years back. We knew that, I mean, if we have to really create an ecosystem for semicon, we need to really get into all facets of semicon, whether it's a verification validation to VLSI design, to hardware software integration and automation, right? So we pretty much did all this through an R&D lab in Bangalore, and it is a scaled R&D lab. Then we expanded into Penang and many other countries. So now we knew that if we have to really get into the bandwagon of what India government is investing on, we also need to get into the OSAT scheme of things. That's a good starting point. Eventually the fabs will come in, but OSAT is a great starting point because you can actually get some of the design and the packaging done for the silicon chips that are coming in from an AI standpoint. Right? So that is where we decided to look for a good partner who can actually come in and work along with us. Now, Keynes is known for electronic manufacturing, and they're very good at it, whereas UST is known for the semicon engineering part of it. So that's where the synergy happened, where both the management decided to work together to see how we can actually bring in an OSAT in India. And that is how we have set up the plant in Sanand in Gujarat. And it was also inaugurated by our Prime Minister Modi. And now what we are doing is we have created phase 1 and the phase 2 approach, where phase 1 is predominantly we are looking at SOT and SOD, whereas phase 2 we are looking at LED and VGA. And more customers are needing this.
Just so that everybody can understand what we're talking about, SOT, and you know, if you can simplify that for us.
No, so I'll simplify it in a better way. Like for example, today, if a silicon has to be produced from India, obviously you need to have a fab. But it will take some time. And obviously it's in the working. So it's coming in. But after the fab stage, that is where the packaging happens, the testing and the packaging happens. And that is what we are actually doing along with the OSAT. So OSAT, the full form of OSAT itself is outsourced semiconductor assembly and test. So there, the electronic manufacturing will be a component that Keynes will do, whereas UST will bring in the testing part and the packaging part from a design enablement standpoint. So that is what we are doing. So that is what, I mean, these are like technical terms.
yes.
I'll avoid some of those. But obviously, this is exactly what we are trying to do. But we are not stopping there. We'll also get to some of the next level, because even packaging and testing also has different levels based on the chipset that you are actually going to use.
Yes.
So we will only advance from where we are, but we have to have a starting point. So we've started with 11 production lines, and it's as a 46-acre property we have as a plant, and then we will definitely increase that to further from doubling it from 11 to 22 and more for the higher end nodes that we are actually working with various customers.
Okay.
And for that to happen, we are also working with, as we are working with many of the semicon companies, both Kings and UST are talking to many others from US and Europe also to come in and contribute to India.
Okay, that's interesting. So phase 2 is, when do you think that you're going to be able to kick off phase 2? And you said that Keynes and UST are in talks with companies around the world at this point in time. What are we talking about? What could be the level of investments? Are we looking at equity partnerships? What are we talking about?
Yeah, so we are also looking at like-minded partners to come into the ecosystem in India, because see, semiconductor has to be looked at as an ecosystem.
Yes.
It can't be looked at as like earlier we used to say, we used to do verification, validation, VLSI design and hardware, software integration. But now we are not talking about that. We need ecosystem. If you really look at some of our neighbors, how they actually scale, it's all about creating that ecosystem. Like even for one component, you will have thousands of companies.
Yeah.
And that is where really the cost will come down and significantly you can play as a much larger player. So that's the ecosystem that India needs. So we need more component manufacturing to come in. We also need to have a lot more tie-ups with the universities to enable some of these. All of those has to come in as an ecosystem, and that is what we are looking at. And that is why we are also looking at how we can get other companies to come in and then contribute. So phase 2 should be within the 2028 range.
Okay.
Where 2026 and 27 is where we are establishing ourselves. The plant is inaugurated now. The first customer is already onboarded. And now we are actually getting more customers to work on the phase 1 and then eventually get to phase 2 by 2028.
What could all of this mean in terms of revenue in the next few years as you start to build this out, as you get more customers on board? And I don't know how many of you can hear this, but there is a train passing us by. And the big question at this point in time, Gilroy, is, has India missed the train?
No, I would say, obviously, India had its own benefits. In fact, we were known for IT and digital transformation and scale. Obviously, we reaped the benefits of that for multiple decades. But now is the era where we are definitely wanting to get to the AI and the semiconductor industry. And so that way, I think we missed the bus on manufacturing for sure. But now the manufacturing is coming back, the semicon is coming back, and AI, that's where we need to be intelligently executing things. Scale is great, but we need to do intelligently. I think that's what my point earlier, right? Some of our neighboring countries are actually having more than 1 million industrial robots to run manufacturing units. And that's the size and scale, whereas every other country add together will not even get to 1 million. So that is where we could do the same, with more manufacturing companies coming in and with more robotics and humanoids being developed in India. Obviously, we'll get there. We'll also enable a lot more manufacturing to come in with some of this automation. And that is how we need to get there. But there has to be a start. Good that the India government has invested and we are actually getting into that mode, and eventually we'll get there.
As you talk to your customers, as you talk to your clients, as you talk to people that you are currently partnering with as well, what's the view on India in terms of setting up shop in India, in terms of putting down investments in India, similar to what we've seen happen in countries like Korea and so on and so forth? We've seen what's happened with companies like SK Hynix and so on and so forth. The expectation or the hope certainly is, can we see that being replicated here in India as well?
Absolutely. I think that is what, I think if you really look at it, we are also, UST has partnered with Swedish embassy and the ecosystem in Sweden, where we are working closely with them to really bring in a lot of the AI-related solutions that they've built, where UST can bring in scale, they can bring in the technology.
Okay.
So that tie-up is actually going on. Like that, there are many other countries that are trying to really do the same strategy within India. So that way, I think it will happen. So the companies from Taiwan and other companies are also interested to talk with us and see whether we can really bring in some of those physical AI transformation within India. Because some of the manufacturing plants that are coming in, we want to really bring in with the latest.
Right.
So that way, I think it will definitely happen. So now another thing that we are also doing is we actually took a majority stake in a company called Ital Design.
Yes.
So it was owned by Audi, and now we are going to take the majority stake. So this is a huge transformation, and it's a game changer. So what it means is, see, they had been doing only design. Italy is known for design.
Yes.
and they were doing design for the Audis and the Volkswagen family. And we are able to really bring in our engineering expertise to align with their design capabilities to really make sure that the next world, the software-defined vehicles that are coming in, and any of those new end stuff that need to be run on a software can be done together with the combination of the design expertise of Italy and the engineering expertise from India.
Right.
So like that, I mean, we ourselves are, USC ourselves is actually bringing in the Italian design to the core for even Indian OEM.
You've been doing a fair amount of M&A as well. You just gave us one example. Is 2026 likely to be a year of more acquisitions and from an India point of view as well?
So we always look for what is the complementary skills that we can add to really bring in faster output, right? So that way we'll continue to do that. So especially in the semicon industry, we invested in OSAT. With automotive industry, we have invested in Ital Design. With manufacturing, we are actually bringing in our own platforms.
Okay.
We are actually bringing smart factory platforms, which is a three-layered architecture that enables you to really bring in the cloud-related activities with the ERP, MES, and the agentic AI talking to each other. With the middle layer, which is nothing but the IT/OT layer, with the cyber security, so that the IT/OT security can be secured for manufacturing units, right? So that kind of very new cutting edge things that we are doing for European customers, we are bringing it to India. for the Indian customers.
What is the adoption like in India? Because there is a question mark on enterprise adoption. What is the signals that the market is sending you?
Oh, very, very positive. I mean, I would say that, I mean, everybody wants to get to the new latest bandwagon. That's a very positive sign, right? Whatever I am talking about, whether it is in the semiconductor industry where we want to get to OSAT, already you would have heard like multiple announcements where the inaugurations have happened in Sanand and Gujarat. You will hear more in the coming years. So that way, I think it's definitely in the positive side. Secondly, with the manufacturing, every manufacturing customers that we work in India, they all want to get to the new modern digitization using AI. So that's a very positive side. I mean, that's why I said, I mean, physical AI. The only thing is today we may not have the humanoids built in India, but it is getting built.
Yeah.
So eventually that will enable the faster turnaround for some of these manufacturing units to get adapted to that. But until then, they are also bringing it from outside. So that is the second part. Second, automotive. In fact, we actually did one of the larger transformation for one of the largest truck manufacturing company in India, where they used to have connected systems for only 30,000 trucks. We scaled it up to more than 250,000 trucks that are running in India on our connected platform. So we have an Internet of Things IoT platform called IDEC, which enabled them to really connect all their vehicles across India. And that too, we have actually collated more than 80 different parameters from the telematic data that we can take it from the machines using the AI-based tools that we have created. That enables them to even use that data for monetization for the dealers. So that's the kind of level at which India is moving, which we would have never heard of in the past. So now we are even actually looking at how we can even set up larger R&D centers for some of these automotive companies in India. Which again was not
the global automotive companies.
So those are the kind of transformation that is definitely giving me a good sign that obviously India is in the right path.
Well, that's good to hear. But, you know, I also want to understand from you, what will be the trends that will shape the semiconductor industry in the next few years? Or is the next few years too long a period to even talk about, given the pace of change?
No, absolutely. I mean, next 3 years, I would say. Let's put it 3 years rather than... Because semiconductor always goes through a cyclical phase, right? But this is going to be a longer cyclical phase of positiveness for semicon, let's put it that way. Especially because of the CPU coming in and also with agentic AI. Because everybody is getting adapted to agentic AI. And for everybody to do that orchestration layer, you need the CPUs, right? So that being said, obviously we believe that semiconductor is definitely the place to bet in. And I'm sure every company will actually focus on that. The USD is definitely doing for the last 17 years, will continue to do more and we'll be investing more. And on top of that, I also want to say that, I mean, we are also investing heavily in setting up a very large VLSI design house in India. It's a design house that we are setting it up for serving to all the semiconductor companies. And we are also having a very large team set up for the custom ASIC, which is going to enable them to really have a lot of chiplet-based customization that we can do on the ASIC level. So all those are new things that we are going to bring it in India.
So what is that going to mean in terms of how much you intend to invest now incrementally in India for some of these new things that you spoke of?
All of these have to be really built over the period of it. So it has to be a progressive plan because a lot of talent need to be there. If you really look at it, right, in India, the shortfall for design resource is very, very high. We don't have much of design people available in India. So that is one of the critical aspects that we need to build. So with that ecosystem need to be built with academia. So that is what USD has already started last 2 years. And we are continuing to invest in that. So over the period of time, that design resources will enable us to really do a lot of this VLSI design for the AI chipsets. Now, let me put one more angle to it. I'm sure we are talking about semicon in a big way. Two things are actually changing the dimensions other than the CPU, the AI data centers. It is actually, I know everybody talked about moving to cloud and the era of the data centers getting dead and everything, but now with
data centers are back.
Absolutely, it's back up. Secondly, the hyperscalers are actually investing on coming up with their own AI chipsets. So we are helping on both. So we have a very good capability where we are enabling the customers to set up AI data centers in different countries in US, India, as well as in Taiwan. Similarly, we are also enabling the hyperscalers to develop their own chipsets. So we are enabling them on the design as well as the verification validation for them to actually have those chipsets available for the market. So both other two areas are also definitely a huge opportunity from a semiconductor standpoint, which we feel we are blessed.
Let's address the data center issue, because I think that's getting a lot of focus and attention. In India, the government has also rolled out a 20+ year tax holiday to try and incentivize more investments in data centers. What are you hearing in terms of incremental investments, the kinds of people who would want to be in India in the data center business?
Oh, everyone. So that is where the sovereign strategy will also play a significant role. I mean, eventually every country will have their own angles on how they want to play, because at the end of the day, they want to protect their data.
So on-prem now becomes significant.
Absolutely. So it has definitely become significant, because they want to hold the data within their country, right? So that is where they will have a sovereign strategy, and AI data centers is the need of the hour. So they have to have it. From a training standpoint for the chips, the AI chipsets that are coming in. So India will definitely, I mean, already announced it. So obviously it is going to have a proliferation of that. I mean, only thing is we need to figure out how the energy is going to come in.
Yes,
and that is
the environmental cost
of it. So that's the only thing that we need to worry about. But otherwise it is going to be in a city, and not only in India, every other country will also have the same aspects to be taken care of, because we are also working with many countries where many of the real estate companies are actually getting those demands, and they need an engineering partner, and that's where UST is coming in and helping them to set up their data centers.
All of these numbers that we hear on capex, etc., which run into hundreds of billions and touching $1 trillion almost in the next few years across the board from an industry standpoint, those don't surprise you at all?
Absolutely not. It is only going to go up. I mean, even the edge compute itself, we are talking about in the next 3 years, we are talking about $500 billion. So that's a level at which we are actually hearing how the industry is actually talking about.
So what will all of this translate into as far as UST's revenues are concerned? I mean, you're almost at $2 billion. That's the run rate that you're working with today. But given all the opportunities that you just spoke to us about, what are you working with as a target?
So obviously, right, I mean, with AI coming in, everybody's talking about what will happen to software. But the good part about UST is we invested in engineering 17 years back. And our starting point was semicon. And then we got into all the other sectors, the adjacencies, right? So today, if you really look at it, engineering is cutting across all the clusters that UST works. Whether it is semicon, automotive, manufacturing, telecom, retail, all of them needs the engineering expertise to come in. And engineering will stay, even though the software will have challenges to an extent with AI coming in. But engineering will play a significant role in enabling each of these verticals to the next level of transformation.
So as a UST lifer who spent 27 years here within the company, how different is UST likely to look 5 years on?
So 5 years on, so we are definitely looking at more and more customers looking at leveraging us from a platform standpoint. So we are creating a lot of platforms, whether it is on the semiconductor industry, the automotive industry, or the manufacturing industry, or even healthcare and BFSI and retail, right? So we will have that platform layer, as I said earlier, where it's the solution-based approach that we are taking rather than just doing a project for the sake of doing, right? So that is the approach that we see. By 2030, we will definitely have solution-based platforms that will accelerate the problem statement of a customer to a solution-based selling. So that's what we look at. Again, all with AI.
All with AI, which is going to, of course, be a big part of the future growth strategy as well as the future of the company. Gilroy, it's been an absolute pleasure. Thanks so much for joining us on Voices from the Valley. We wish you the very best of luck and look forward to seeing you in India and hearing more from you about your plans for India as well.
It's absolutely a pleasure to even meet you and talk to you and even discuss all this. And definitely looking forward.
Thank you so much. Well, with that, it is time for us to wrap up this edition of Voices from the Valley. If you enjoyed our conversations, then keep sending us your feedback and your comments. We'll be back with a lot more headliners from Silicon Valley for next time. Goodbye, and thanks for watching.
Welcome to an all-important Indianomics. The Reserve Bank has announced the foreign deposit and foreign borrowing schemes that it promised in the Friday policy. And there are two positive surprises. First, not just PSUs like PFC or NTPC, but all banks can raise foreign currency borrowings, and RBI will bear 1.5% swap cost. So the cost of the borrowing falls for all banks. Secondly, as promised, RBI will bear the hedging cost for foreign currency deposits taken by banks from non-residents. But the relief here is banks can offer loans to these depositors, and hence the inflows can be sizable. Finally, the additional thing, aside from the RBI, the fourth quarter balance of payments data shows that both current account and capital account were in surplus in the fourth quarter, despite all that huge FPI selling that we saw. Now, how will all these news benefit the economy and the banks? I have with me Neeraj Gambhir of Axis Bank, Mitul Kotecha of Barclays Bank, and Kaushik Das, the economist from Deutsche Bank. Gentlemen, good morning, and thank you very much indeed for your time. Neeraj, to you first, because this is the surprise. We were not told on Friday that banks will be allowed to raise foreign currency borrowings, and RBI will bear the cost, at least 1.5% of the swap. Will this mean that a lot of banks will line up, since as a sector, you all are lower on deposits than on loans in terms of rate of growth?
This is certainly a welcome addition to the list of options that Reserve Bank has given, right? So it was not earlier expected, and it was also not a part of the previous FCNRB the options that were there. The key considerations for the banks is that this is, of course, an option that is available. The hedging cost is lower, but the borrowings on the onshore balance sheet, which is being permitted, come with a withholding tax. And withholding tax actually adds to the cost of funding that you raise from the market. So you have to look at the economics from an overall perspective. What you can raise in the offshore markets, what is the withholding tax on it, and what is the hedging cost? All that put together, how does that compare with the rupee cost of funds today? But certainly this is an option, and it's possible that some banks may go for it.
Have you done the math? I mean, back of the envelope, does it look? I mean, 15% of the interest may not be such a big sum. I don't know. Does it look like, even if it is like a percentage point or 50 basis cheaper? How does it work now?
So I mean, just a very rough back of the envelope maths. If your offshore funding cost is 5% in dollar terms and you pay 20% withholding tax on it, that makes it 6%, right? And the hedging cost is then 1.5%. The hedging cost differential will depend upon what the prevailing forward rates are at that point in time.
Okay.
So let's say overall it could be somewhere close to 7.5%, and that is very close to what the domestic funding cost is. So yes, I mean, depending upon the way the market is at a given point in time, you could find this option to be somewhat cheaper than where the rupee funding cost is.
Okay. Would you say, therefore, that if on Friday you expected some 30-40 billion to come by FCNR deposits, now you may say it is 50 to 60 billion because you're adding the ECBs? Am I right in saying that at least a 10 billion more?
Well, I wouldn't put it that way. I think the maths on how much money actually comes in is still dependent upon a few things. One is that in the previous round of the scheme, banks were allowed to provide leverage to their own customers, right? So that clarity is still awaited. I mean, we are still checking on the fine print here as to whether that is permitted or not.
Okay.
If that is permitted, then the total amount of flows through FCNRB route could be still higher.
Okay.
And banks may prefer to use that route rather than using direct borrowing on the balance sheet and bringing it onshore. So
Neeraj,
both these options are available.
Neeraj, I checked.
Depending upon what is permitted, the banks may go for one or the other. But broadly, assuming all of these facilities are available, I think the market estimate of total money flow into the country over the next 3 months is of the order of $40 to $60 billion, right? That's across all these options.
Okay, Neeraj, 1 minute. I was trying to interrupt you because I checked with the Reserve Bank. You guys can offer that SBLC. You can offer the standby letter of credit. They're very clear about it. What banks cannot do is you go and borrow at maybe, SOFR plus 3%, SOFR plus 2% and lend it at SOFR per 3%. That they will not allow. I mean, they won't allow you to make that arbitrage money, but you can definitely leverage, is what I was told. You can give loans.
So on that point, Lata, it's a bit technical, but let me clarify. When you can issue an SBLC, you are dependent upon a third-party bank to provide the leverage to NRI customer, right? Then that goes back to how much of that liquidity is available in the offshore market. Mostly this leverage is provided by the private banks for wealth customers. And that pool of liquidity is a bit limited as compared to what the banks can borrow themselves and then in turn provide the leverage to their customers. So that's the key issue. Last time around, both were permitted, and that's what got us about $27 billion.
Okay, Mithul, now you heard.
And in fact, roughly 50% of that money that came through the self-leverage route rather than external leverage route.
Oh, okay. That's also good to hear. Well, Mithul, you heard this entire conversation and you understand the technicalities better. What is your sense? Do you think the FCNR deposits will take off better than last time? And the ECB route, do you see substantial capital flows?
I think the answer to that, I mean, there will be substantial capital inflows. It's clearly attractive. I think the clarification today has helped. And, you know, I think the fact that the banks can hedge this is going to also make it much more attractive to be able to do so. The only concern, I guess, is that when I compare to 2013, we saw probably, around $34 billion of FCNR deposits coming in a very short period of time. I think there are clearly issues. I mean, at that time, rates in India were much higher, rates outside in the US were much lower, and that rate differential is not as attractive as it was. And so I think the global environment is somewhat different. But nonetheless, I think, look, this will give an attractive opportunity for offshore investors to come into India through the FCNR route. And I suspect we will see pretty significant inflows coming in. You know, we'd estimated previously around sort of at least from the FCNR route in the next few months, potentially $5 billion or so a month, if not more. You know, that's not even including ECBs. And then we're not even talking about the inflow potential from FAR route, which I think most of that would probably come into next year. But already there are signs that bond investors have been jumping since Friday into India's bond market. So again, this is already resulting in some inflows. My only concern, I guess, is that the backdrop globally is still of a firm dollar, elevated oil prices. And so the rupee, after an initial rally that we saw at the end of last week, you know, has kind of settled. It hasn't really extended that gain.
Okay, you know, there is a theory doing the round in the markets, I don't know whether it is technically correct, that the Reserve Bank may not allow too much appreciation right now till all this swapping is over. They know how much they're in for, and then you know, it'll be a no holds barred appreciation because you know, they're expecting a lot of money. Is that making sense to you, Mithul?
Well, I think the rupee is cheap. If you take a look at the real effective exchange rate, the nominal effective exchange rate, it is significantly cheap, those valuations. But at the same time, I still think the RBI would not want to have an appreciating currency. So I have some sympathy with that view. I don't know necessarily whether, you know, once they, you know, clearly the other issue is that the forward book could actually increase on the back of these swap facilities, and that may add further burden when we see these swaps or forwards mature. At the same time, you know, there is still a lot of buying from importers because of the oil demand. So again, there is a natural demand for dollars that can, again, absorb some of these dollar inflows that are coming in. So we may see a bit more of a balance in the market. I think what it means is probably, you know, that massive fast pace of depreciation that we saw in the rupee over past months is now going to disappear. We're probably in for a much more of a gradual pace of depreciation and a much more of an orderly move, and perhaps with volatility being somewhat lower.
Okay. I want to come back to you for that FAR deposits for the equity guys who are watching us. It is, you know, the bond, the withholding tax and the capital gains tax was removed for bonds and for foreign investments in bonds, and what is called the fully accessible route. That is the meaning of FAR. Under that, many subcategories were also removed by RBI. And Mithul is saying that we may get, that there is a lot of interest from bond FPIs to come through that route. We'll come back to him for those numbers. But Kaushik put all this together. You know, we had this current account surplus in the fourth quarter that surprised, you know, current account and capital account surplus, which was a bit of a surprise for most economists. What is your calculation of balance of payments deficit in the current year, FY27? Does it get fully bridged by what you expect from these flows?
So, Lata, good morning. You know, the January-March number is a backward-looking number, so it's not much of use for us, you know, into this financial year. But as you said, it has been a surprise because, you know, net invisibles have surprised to the upside, and that has led to current account turning surplus. Normally, January, March is the best quarter that you can get on BOP. And that's why, normally it used to be always a surplus. This time people were expecting a mild deficit or small surplus, but this has been a bigger surplus. So that's the surprise. Going into, this year, which is more important at this stage, my calculation without, any kind of measures that were announced by the government of India and RBI, including the, hike in gold imports, current account deficit was working out something like close to 85 billion, which was 2% of GDP because of higher oil price and gold prices. Now, one thing which the government has done is, hike the import duties of gold. Now, last year, gold imports was 72 billion, so almost 6 billion per month on an average. So even if you assume, suppose, say 10 billion comes down out of those 72 billion gold imports that happened last year, so 85 billion current account can come down to 75 billion. So that's the current account deficit best that you can get. Even with the pump price hike, in petrol and diesel, you'll not have oil imports coming down that much unless oil comes down. Now, what do you do on the capital account side? Capital account side, even without any of these measures that RBI has announced, you would have still got 25 billion. If you see, last year's number, you would have got 25 billion without any of these measures. So you had a whole of 50 billion, 75 minus this, 25 billion that you would have got anyway. So 50 billion BOP deficit, which you would have had. Now, these measures, the three things that have been announced, one is ECB, one is overseas foreign currency borrowings for banks, and the FCNRB, can easily give you 50 billion and bridge that gap. And one way to, kind of come to this number, just to give you a reference point, and then you can say whether it is, too much or upside, downside risk. In 2013, when you got this FCNRB and this overseas, bank, borrowing, that was about 2.8% of NDTL, whatever the NDTL number. If you apply the same 2.8% NDTL, this time you should get to 75, 77 billion, just kind of, reference point. And then you can think individually, if it was 26 billion FCNRB last year, this year, can you go to 40 billion, 20 billion maybe for the ECBs, and 10 billion from the banks, you could come closer to 65, 70 billion.
Yeah, that's one of the more optimistic numbers I've heard.
But
to be fair, Kaushik,
50 billion, even if you get 50 billion,
you are square. That I take your point entirely. Now, I have to take a break, but before that, I want the key question that our viewers are watching out for. Up to September, or if you are willing to take the bet, take the question up to December, what is the rupee range you are looking at? What is the best the rupee can rise to? Kaushik, give me only one number because I want a rapid fire.
So we have 93. I mean, rupee can easily fall 2 rupees from where we are.
Okay. Mithul?
Well, our current forecast stands at 96.8. So we've not revised that forecast, but clearly, obviously, these measures are substantial. So, I think we were at risk of being much weaker than that. At least now that's more likely to be met than before.
Okay. And Neeraj?
Well, I don't see it appreciating beyond 94, even if we get a lot of positive news, because I think Reserve Bank will be on the buying side to cover up their reserve fall.
Okay. My guess is that a shy at 93 or 92 is possible, and then it comes back. That's what happened last time. We went all the way from 68, 69 to 65, 64. This is the 2013 period. Anyway, have to take a break, but lots more questions on bond inclusion. Also, when all this money comes in, what does it mean for growth? Those questions as well to our bankers in a minute after the break. Welcome back to this very special Indianomics, where we are discussing the bunch of measures announced by the Reserve Bank, almost all of them to prop up the currency from falling from the rapid fall that it has seen over the last 2 years. The RBI is going to pick up the entire hedging cost for FCNR, foreign currency non-resident deposits, up until September 30th. It is also going to allow banks and PSUs to raise external commercial borrowings. 1.5% of the swap cost will be borne by RBI. And then, of course, the debt market also is getting some sops given by the government. The withholding tax and the capital gains tax are off. I've been speaking with Neeraj Gambhir of Axis, Mithul Kotecha of Barclays, and Kaushik Das of Deutsche Bank. Gentlemen, thank you very much for your patience. Neeraj, the money is coming in. Okay, both FCNR deposits as well as some bit of overseas foreign currency borrowing. What does this do to funding cost, margins of banks?
So I think in the short run, we will see the pressure on the domestic money market, for example, CDs and bulk deposits, go off a little bit. As you very well know, that these rates have been quite elevated. Usually in this part of the year, first quarter of the year, we see these rates cool off from where they were in March. This time around, actually, the rates are higher than where they were in March. So I do see that, as this money flows in over the next 3 months, it will cool off both the CD rates and the bulk deposit rates.
Okay.
I don't see this impacting the retail savings rate because I think that's something that all banks are chasing, and that's an important component of banks' liabilities. So yeah, at the margin, this will help banks lower their funding costs, but it's only at the margin. The overall book cost will not get impacted too much.
Yeah, at the margin. So NIMs can improve by a few basis points, right?
Well, I won't put a number on it, but as I said, at the margin,
directionally,
it helps, in terms of lowering the funding cost.
Okay. You're not betting that most private banks will go for this. I mean, I'm expecting PSU banks to go, but private banks, some of them had adverse LDR. That's why I'm asking.
I do expect all banks to be involved in this. I think it's an important opportunity for banks to raise funding in a different way. These will still be the deposits, right? Because FCNRB is still accounted as a deposit. It is still subject to low runoff factors as far as LCR is concerned. It's quite optimal from a balance sheet perspective. So I think all banks will be interested and involved.
And more generally, do you think, therefore, credit offtake improves since quantum of funds available seems to be increasing?
That's right. But also there is a counter effect. To the extent that PSUs are borrowing abroad, their borrowing from the domestic banks will come down. So there is going to be a substitution effect there. So net-net, I think this could end up sort of bringing down a little bit on the credit growth side and improving on the deposit growth side. Effectively put together, I see both these measures actually helping in terms of bridging the gap between credit growth and deposit growth.
Okay, yeah, and that is a longer-term problem that the Reserve Bank was staring at, and they've very smartly solved it, at least for now. Kaushik, don't you think that this availability of funding changes the growth macro story to some extent, the multiplier? Do you think we should see this as positive for growth itself?
Yeah, Lata, so we did not reduce our growth forecast that much. I mean, we are at 6.7 and, RBI just has reduced it to 6.6. I know there are a lot of people who are below 6.5 and, there are legitimate concerns on agriculture, how it will play out. But I think, Indian growth, if you've seen through last year and several quarters, has always surprised to the upside, despite all the worries of tariff. We started off saying 6.5 last year, beginning of the last year, and we ended up getting 7.7. So as far as numbers go, I think we will still be close to 6.7, 6.8, or slightly close to 7%, not as high as 7.7 of last year. And that will be below potential to some extent, at least in the first half of the year. But I'm not that terribly concerned about growth. I think over a period of time, people will be concerned more on inflation. So we have rate hikes in October, December of this year itself, 50 basis points. But I think they will like to do this rate hike after the window, this transitional window ends in September. August, what can happen though is change of stance to withdrawal of accommodation. Yeah. And, you could see between now and September, liquidity being tightened slightly by doing VRRR as well as, letting the forwards that are outstanding mature against the flows that are supposed to come in. So over a period of time, you might see the weighted average call rate gradually shifting slightly below the repo rate, and then RBI will change the stance in August and then hike in October.
Fair enough. Yeah, something like that seems to be the trajectory that economists are talking about. Mithul, the more important question is the fully accessible route bonds. You're saying that FPIs are already showing interest. Do you think there is a good chance we get into the any of the indexes, the Bloomberg index in particular? And therefore, what is the quantum that we can safely say over a 12-month period in this route?
It's a good question. And I think the answer to your question is there's definitely, yes, there's more interest. I think the fact that we've seen the overall FAR limits being increased, the duration increase as well of FAR bonds for foreign investors. Plus, of course, and the big kicker here is the exemption on G-Secs of tax is very, very significant. That removes one of the key structural barriers for bond index inclusion that has been in place. It doesn't guarantee it, though, and it doesn't necessarily mean that we'll see WGBI or global ag inclusion, but I think it moves India substantially closer towards that inclusion. And if, I mean, clearly the settlement issues, euro equilibrability that may still need to be resolved, that I think investors will be looking for. But again, like I say, this is quite positive. So in terms of the quantum, it's hard to say. I mean, I think ultimately in the past, we've highlighted that the big major index inclusions, such as WGBI, Global Ag, could be in the region, if we add it all up, potentially anywhere between $20 to $30 billion of inflows, if not more. But again, I think one thing we have been wary of is that even with the JP Morgan index inclusion, flows have been a little bit disappointing on that front. Even last year, India only saw about $6.5 billion of FAR inflows. As we know, until now, the inflows have been only about $2 billion year to date. This obviously could lead to an increase. But we also have to be a bit cautious as not to be too optimistic about inflows until we see something concrete on potential inclusion.
Okay. Neeraj, thank you very much for your patience and waiting. Just a quick jab at how the money market may pan out. As Kaushik is saying, we will have a liquidity issue. How do you think that will pan out? Do you think short-term rates rise, fall? An idea of yields over the next few months?
I actually don't see a liquidity issue in the near term. Okay. In fact, as banks bring in these dollars, they give these dollars to RBI, they'll get rupee liquidity in return. So I see that rupee liquidity actually rising quite significantly from here until end of September, right? We could be as high as 7-8 trillion INR. Because remember, the dividend that RBI has given to the government will also be spent through this period. I'm not sure how quickly Reserve Bank can actually swing the liquidity equation into a situation where the overnight rates start, moving towards the repo rate. So I do feel that next 2 to 3 months is going to be quite benign as far as liquidity is concerned, and I do see an impact of that on money market rates such as CD rates and bulk deposit rates.
Yeah, that's what even I thought. I thought, will they even think MSS? Because that was my initial idea that there will be liquidity. But yeah, let's see. They can even cancel their forwards, as Kaushik is saying. Mithul, just a very quick question. One of the impediments to equity flows was this feeling that every time we bring the money, the next day we are poorer because the rupee has fallen. The fact that the rupee will get stabilized, can it bring equity flows?
It will certainly help. And I think, again, the PROI as well is significant in that respect. But, one of the big hurdles, and, I think we've talked about this on this program, has been the fact that the AI share in India's equity market is still relatively low compared to some of the big heavyweights, such as Korea and Taiwan, et cetera, in the region. That's still a bit of a roadblock.
Okay. Well, we are out of time, but thank you very much, gentlemen, for parsing all the, a 360-degree perspective of the steps announced by the Reserve Bank and the more important tax cancellations also coming for FPI investments in debt. It does look like we have solved the immediate problem, or rather the 2-year-old problem of the rupee being under pressure. One hopes positive spin-offs will come. Thanks a lot for watching this edition of Indianomics. Welcome to an all-important Indianomics. The Reserve Bank has announced the foreign deposit and foreign borrowing schemes that it promised in the Friday policy. And there are two positive surprises. First, not just PSUs like PFC or NTPC, but all banks can raise foreign currency borrowings, and RBI will bear 1.5% swap cost. So the cost of the borrowing falls for all banks. Secondly, as promised, RBI will bear the hedging cost for foreign currency deposits taken by banks from non-residents. But the relief here is banks can offer loans to these depositors, and hence the inflows can be sizable. Finally, the additional thing, aside from the RBI, the fourth quarter balance of payments data shows that both current account and capital account were in surplus in the fourth quarter, despite all that huge FPI selling that we saw. Now, how will all these news benefit the economy and the banks? I have with me Neeraj Gambhir of Axis Bank, Mitul Kotecha of Barclays Bank, and Kaushik Das, the economist from Deutsche Bank. Gentlemen, good morning and thank you very much indeed for your time. Neeraj, to you first, because this is the surprise. We were not told on Friday that banks will be allowed to raise foreign currency borrowings, and RBI will bear the cost, at least 1.5% of the swap. Will this mean that a lot of banks will line up, since as a sector, you all are lower on deposits than on loans in terms of rate of growth?
This is certainly a welcome addition to the list of options that Reserve Bank has given, right? So it was not earlier expected, and it was also not a part of the previous FCNRB the options that were there. The key considerations for the banks is that this is, of course, an option that is available. The hedging cost is lower, but the borrowings on the onshore balance sheet, which is being permitted, come with a withholding tax. And withholding tax actually adds to the cost of funding that you raise from the market. So you have to look at the economics from an overall perspective. What you can raise in the offshore markets, what is the withholding tax on it, and what is the hedging cost? All that put together, how does that compare with the rupee cost of funds today? But certainly this is an option, and it's possible that some banks may go for it.
Have you done the math? I mean, back of the envelope, does it look? I mean, 15% of the interest may not be such a big sum. I don't know. Does it look like, even if it is like a percentage point or 50 basis cheaper? How does it work now?
So I mean, just a very rough back of the envelope maths. If your offshore funding cost is 5% in dollar terms and you pay 20% withholding tax on it, that makes it 6%, right? And the hedging cost is then 1.5%. The hedging cost differential will depend upon what the prevailing forward rates are at that point in time.
Okay.
So let's say overall it could be somewhere close to 7.5%, and that is very close to what the domestic funding cost is. So yes, I mean, depending upon the way the market is at a given point in time, you could find this option to be somewhat cheaper than where the rupee funding cost is.
Okay. Would you say, therefore, that if on Friday you expected some 30-40 billion to come by FCNR deposits, now you may say it is 50 to 60 billion because you're adding the ECBs? Am I right in saying that at least a 10 billion more?
Well, I wouldn't put it that way. I think the maths on how much money actually comes in is still dependent upon a few things. One is that in the previous round of the scheme, banks were allowed to provide leverage to their own customers, right? So that clarity is still awaited. I mean, we are still checking on the fine print here as to whether that is permitted or not.
Okay.
If that is permitted, then the total amount of flows through FCNRB route could be still higher.
Okay.
And banks may prefer to use that route rather than using direct borrowing on the balance sheet and bringing it onshore. So
Neeraj,
both these options are available.
Neeraj, I checked.
Depending upon what is permitted, the banks may go for one or the other. But broadly, assuming all of these facilities are available, I think the market estimate of total money flow into the country over the next 3 months is of the order of $40 to $60 billion, right? That's across all these options.
Okay. Neeraj, 1 minute. I was trying to interrupt you because I checked with the Reserve Bank. You guys can offer that SBLC. You can offer the standby letter of credit. They're very clear about it. What banks cannot do is you go and borrow at maybe, SOFR plus 3%, SOFR plus 2% and lend it at SOFR per 3%. That they will not allow. I mean, they won't allow you to make that arbitrage money, but you can definitely leverage, is what I was told. You can give loans.
So on that point, Lata, it's a bit technical, but let me clarify. When you can issue an SBLC, you are dependent upon a third-party bank to provide the leverage to NRI customer, right? Then that goes back to how much of that liquidity is available in the offshore market. Mostly this leverage is provided by the private banks for wealth customers. And that pool of liquidity is a bit limited as compared to what the banks can borrow themselves and then in turn provide the leverage to their customers. So that's the key issue.
Okay.
Last time around, both were permitted, and that's what got us about $27 billion.
Okay. Mithul, now you heard.
And in fact, roughly 50% of that money that came through the self-leverage route rather than external leverage route.
Oh, okay. That's also good to hear. Well, Mithul, you heard this entire conversation and you understand the technicalities better. What is your sense? Do you think the FCNR deposits will take off better than last time? and the ECB route, do you see substantial capital flows?
I think the answer to that, I mean, there will be substantial capital inflows. It's clearly attractive. I think the clarification today has helped. And, you know, I think the fact that the banks can hedge this is going to also make it much more attractive to be able to do so. The only concern, I guess, is that when I compare to 2013, we saw probably, around $34 billion of FCNR deposits coming in a very short period of time. I think there are clearly issues. I mean, at that time, rates in India were much higher, rates outside in the US were much lower, and that rate differential is not as attractive as it was. And so I think the global environment is somewhat different. But nonetheless, I think, look, this will give an attractive opportunity.
Never bet against the technology, never bet against Silicon Valley. So it is the Silicon Valley entrepreneurship and technologists is going to drive the world. And I've seen enough of the world. There is no other place than the Silicon Valley is going to drive the technology. Now, how the phase of the AI is happening in my mind. Now, I think it's proven, there's no doubt. Now the AI is going to be adaptability. How he is going to be adapt. The biggest thing is, having India scale. I think it's the greatest opportunity for India to scale. And the way we offer the IT services to AI services, how we can offer not just for India, for the global. And looking at, my company, SIFI, what we are doing, and we are building the world-class data centers, bar to none. And you can see, you can visit us, our data centers, what we are doing in Mumbai. And we are the first one certified by NVIDIA for liquid cooling, one of the top in the world. And we have more than 250 megawatts in the operations, and we're building gigawatts plants. And people have concerns about the power in India. India has a surplus power.
Thank you so much for being here this evening and for giving us the opportunity and for being such gracious hosts. Ladies and gentlemen, a big round of applause to our panel here for this evening. So Tom, as we look at the many trends that John was speaking to us about as well, and you've been quoting Dickens in your tweets, this is the best of times and this is the worst of times. Let's lay that out for our audience here and for those who are watching. What gives you hope? What's the best to play with? And what is your big concern? What's the worst that we have to play with?
Well, sure. And as I think about AI and from a perspective that might be somewhat unique. I'm a developer of AI tools and products and a user as well of those developed products, but also from third parties. And in my role at SIFI on the board, I am engaged in the provision of data centers, which are so important in this. And it's the author Charles Dickens that you're referring to, right? And he opens his book, A Tale of Two Cities, with it was the best of times and it was the worst of times. It was a season of light and a season of darkness. Now, this severe contradiction does in many ways typify what AI is all about. So to answer your question directly, the light, or the best part, is to come, and it is coming now. We see that at times, but it hasn't fully matured, and we heard that earlier. But the worst is the idea that we don't know what reality is sometimes. We have cyber criminals, the world that I live in, and cyber nation states attacking. So we have that use of AI, and we also have the job issues, of course, the fear. So that's the worst dimension. But the positive dimension is, of course, the medical advances that are taking place with the analysis done with the AI. And also in fighting crime, the best way to stop a bad person using AI is a good person. using AI. So therefore, we can use that tool as in a way to protect the infrastructure that's being attacked as we speak. Thousands of attacks, every hour that are taking place as well. So you may choose not to use AI, but you cannot choose not to have AI used on you. So I believe it will be pervasive and it will end up being very positive, just like all the technologies. But also, you'll notice these major technologies, they appear abruptly, but you have to determine the long-term impact in the long term. So it's yet to be seen, but I remain very positive and am advancing it in the work that I do as well.
Before we get to the long term, let's talk about the short and the medium term, the dislocations that we're likely to see, but also the positive impact that we're likely to see. What do you believe the mix looks like today?
I do believe in the short term it will be a contrast, a severe contradiction, as I've said. There will be, we're seeing it now with the negative impact with cybercrime. We're seeing it now with the confusion, the jobs. We don't have to go over that. We all see that. Yeah. So that's happening today. That will continue. John said that himself as well. But I'm watching, and I was involved in a very amazing AI application with lung disorders, and where swarm learning of machines can be used to diagnose quicker. The faster a diagnosis, obviously, the better treatment can be applied. So I see that happening right now. I also see in software development tremendous advances taking place right now. But later I'll mention how that is also not necessarily impacting the end project as well. And that's a micro value that has to be looked at a bigger picture, I think, to get the positive impact in the near term.
Okay, I'll get back to that in just a second. Aditya, let me come to you now. With everything that's happening, with the kind of spends that are being done by companies, including companies like yours with Meta, as somebody who's looking at the research side of things, what is most exciting today? There's the edge, there's cloud, there's ambient intelligence. What's driving decisions on the research front? What do you prioritize today on the back of the momentum that already exists?
Shireen, that's a big question. Frontier research right now is all about getting to artificial general intelligence and artificial superintelligence. So the big question right now is, how do we get there and how fast do we get there? That's where the research is focused on right now. And some of the big bets, if people are familiar, I think recursive self-improvement is a huge, huge area where people are focusing on quite heavily. And we also see that scaling laws aren't saturated yet. I think you have scaling laws and RL that are coming up right now. So there's a heavy investment and a singular principle that's driving all these things is scale at this point. So you want to build larger data centers, you want to build larger models, collect big data sets. What this is missing out right now is on how do you distribute these things? So the intelligence per watt or the intelligence per token is going to be the determining factor on who gets to use AI and who is really using and harnessing AI. At this scale, I mean, I think people know, right, the big four hyperscalers have already committed $1 trillion.
Yeah.
And if you're looking at other geographies to compete on an even scale, I don't think it's going to be likely. So the big part around making AI equitable and distributed to everyone is making sure that it's more efficient. And how do you reduce this cost and how do you improve the efficiency is one big research area that's not being talked about as much, but that's a big bet that we are looking into.
Do you think it's going to start being talked about a lot more? I mean, till a couple of months ago, everyone was talking about token maxing, and that was the big story, that was the big deal, right? And now everyone's talking about efficiency and what you actually do because budgets are being blown up and blown out. Is this now starting to get front and center as far as the conversations around how you allocate capital, how much capital do you allocate, and is efficiency now driving decisions?
Definitely. Mostly. I think people might have seen, I don't know how many of you have maxed out your Cloud Code budget, how many times you have maxed out.
Yeah, we should do a show of hands on that.
I think maybe a show of hands on how many times you have maxed out.
How many have maxed out your Claude? Yeah, well, quite a few. Quite a few.
So as I was going back, enterprises or even individual consumers, if you want to realize the true impact of AI, I think the focus is to be getting more intelligence per token or intelligence per watt or intelligence per dollar. It's not being talked about in mainstream as much, but the frontier research is moving towards that. How do you condense the large models into smaller ones? How do you make them run on your phones? How do you make them run on your devices? So that's the most exciting area, I feel, which is going to be a differentiator going ahead. And I think, Shireen, you were asking a question on the India story as well. I think that's where the focus should be on. You don't compete on scale, but you compete on efficiency, on making sure how do 1 billion people get access to AI on your individual smartphones or individual wearables. So that's the big story which excites me.
So, you said it's a question of time. So how far are we from being able to make these kind of breakthroughs in light of the changes that have already happened on the model front?
That's the $1 trillion question. If I had the answer, I'd be also listing my company on at the scale at which the changes are happening are very rapid. I would assume in the next 8 to 12 month time span, we'll be definitely seeing this. You already see this in the way OpenAI or Anthropic are operating. When a query goes in, you have an orchestration across different models based on the complexity, and the request gets served. So that's one layer of orchestration that is happening, which is making sure that you're not token maxing out. But apart from that, there are a slew of research areas that are actively happening. So given the pace and investment that's happening, I would see in the next 6 to 12 months, we'll see big changes.
6 to 12 months. Yeah. Okay. I'll come back to you, Aditya, in just a second. But Binay, let's talk a little bit about Wald and what you're hoping to do there. And it's interesting because a company that started in 2023, you pivoted on the back of the feedback that you got from your customers, right? And very often, you go in with certain assumptions, but the consumer behavior tells you that you might not be walking in the direction that you need to. So explain that to us and what you're attempting to solve for.
Sure. Thanks. Thanks for having me. So what Wald does is we're essentially, if you think about where software has been, and you've all seen the SaaS companies getting disrupted. So you have sort of a tech stack that has been around for 20 years. And now with AI, you're essentially reinventing everything as a native AI tech stack. And so we sit in the data loss protection space. So as people use more data, communicate more with these AI models, the propensity of leaking confidential sensitive data also increases. So essentially what we've built is AI models that can look at any unstructured text, understand semantic intent, understand context, and figure out with human intelligence, essentially, what is sensitive data, what isn't, and then enforce policy, right? So we're essentially creating a lot of these guardrails and cyber sort of things so that you're protecting your core data. It's interesting you talk about when we started and how we have pivoted. So back in, we didn't start raising until 2024. And the VCs we talked to fundamentally did not believe that AI was going to be an enterprise thing, right? And they were like, oh, you're going to go build this stuff. This is an enterprise stuff. It's really more consumer. So to some extent, we kind of started with, okay, I'll start a SaaS company and essentially give you access to these models, but I'll put this data loss protection built in so it's very private. And I think if you fast forward to now 2026, enterprise is there. And so we have essentially pivoted. So now we have an enterprise product, we have a prosumer product, and we really have been improving. And we've learned a lot along the way. And I think the biggest thing, as I look at sort of the changes that it all goes back to intelligence, right? And I think, Aditya, you talked about intelligence, where when we got disrupted with the internet, it was connecting people to the, to information. And now we're essentially connecting people to intelligence. And so if you think about the cost equation changing, right? So the internet made it cheaper to communicate, cloud made it cheaper to compute, and now AI has made it intelligence cheap. And so any industry that was built on selling intelligence or talent is essentially getting reinvented. And that is going to be the big thing about the future is if intelligence becomes cheap, how should you think about jobs and those types of things? I'm a huge optimist. I don't think jobs are going anywhere.
Okay.
I just think they're going to get reinvented, right? And none of this stuff is looming. I see a lot of kids graduating. Everyone's getting a job. It may pay, some pay better than others, but the job market, you see the numbers here. I mean, unemployment is at an all-time low, and yet productivity is growing. We have, in our company, I've kind of worked at Google for many years, and when we'd go to engineers and I think about those features, and they'll say, okay, it's going to take a month. and our entire engineering team is in India, and I talk to our team and say, we want to put this feature, and I'm expecting they'll come back and say, it's 2 or 3 weeks, and they'll like, I'll have something to you by tomorrow, right? And that's the speed at which things are going. So if you think about, I have a roadmap. Yes, my engineers are doing 5x the work they could with essentially automated coding, but my roadmap is now 10x what it used to be, right? So I am still looking to hire engineers because the amount of stuff that I want to do is a lot. So yeah, there's...
So to John's point, you're saying essentially what he was, that this is going to drive growth, it's going to drive productivity, and it's going to drive earnings as well.
Offshore investors to come into India through the FCNR route. And I suspect we will see pretty significant inflows coming in. We'd estimated previously around sort of at least from the FCNR route in the next few months, potentially $5 billion or so a month, if not more. That's not even including ECBs. And then we're not even talking about the inflow potential from far route, which I think most of that would probably come into next year. But already there are signs that bond investors have been jumping since Friday into India's bond market. So again, this is already resulting in some inflows. My only concern, I guess, is that the backdrop globally is still of a firm dollar, elevated oil prices. And so the rupee, after an initial rally that we saw at the end of last week, has kind of settled. It hasn't really extended that gain.
Okay, there is a theory doing the round in the markets, I don't know whether it is technically correct, that the Reserve Bank may not allow too much appreciation right now till all this swapping is over. They know how much they're in for, and then it'll be a no holds barred appreciation because they're expecting a lot of money. Is that making sense to you, Mitul?
Well, I think the rupee is cheap. If you take a look at the real effective exchange rate, the nominal effective exchange rate, it is significantly cheap, those valuations. But at the same time, I still think the RBI would not want to have an appreciating currency. So I have some sympathy with that view. I don't know necessarily whether, once they, clearly the other issue is that the forward book could actually increase on the back of this swap facilities, and that may add further burden when we see these swaps or forwards mature. At the same time, there is still a lot of buying from importers because of the oil demand. So again, there is a natural demand for dollars that can, again, absorb some of the...
Let's address what Composio is trying to do at this point in time. And you're essentially creating a skills platform for